We're back.
Good morning, my friend. How are you?
Friday.
How about it?
April 25th.
Did you think we'd make it? This month blew by, didn't it?
I knew we'd make it.
Did you?
We make it every time,
for me,
which is nice.
It's 60-40. I don't know. Maybe I don't think maybe I won't.
You think that every month there's a 40% chance
that
you won't make
I won't.
it. I
won't make it. Yeah, pretty much.
If that is actually the case, then you are a statistical anomaly. Because to stack 60%, 60%, 60% win rates, but win every time, that's a difficult thing.
There you go. See?
So
I can engineer my own good story. I'm an outlier.
It's like I don't want to belittle anything, but like it's like a make-a-wish.
What do you mean? You spend the entire day belittling it.
It's like a make-a-wish situation, but we don't. There's nothing wrong with it. I don't know what's.
Are you going to start singing the Cars for Kids song behind me or something?
I don't know what that is. Cars for Kids.
Cars for Kids. You haven't heard that on the radio.
I've heard
That's
that.
right. You don't actually listen to the radio. It's too public for you.
It's funny. I think about this all the time. I listen to podcasts and audiobooks every day. And podcasts...
It's so like
what?
10 years ago. I listened to podcasts.
Well, so I do want to say that podcasts are the rate, like... In a lot of ways, the last 10 years, it's been like, oh man, podcasts are so innovative. Everybody's got a podcast. Like friggin' you pull up the podcast thing, it's like Alec Baldwin has a podcast. What he's talking about, I have no clue. But it's like, oh, all this ingenuity, creativity going into podcasts. And I listen to it and it's like, this is just like, it's just radio. Like, it's just like, oh, I kind of like this guy. Like, he's talking about stuff I kind of care about, but not really. And then there's an ad every like 30 minutes.
Right, but you've got to hand it to the efficiency of the market. That basically, radio's had a monopoly on air.
Sure.
And they would, they get talent, they pay them, but they share the lion's share of revenue. Technology has removed all those barriers. So if you're actually funny and talented,
yeah.
There is no one between you and the customer, which is really fantastic.
Well, and the customer can choose between hundreds, if not thousands, of personalities.
And will someone tell them to stop making hour-long podcasts? Who's got an hour to listen to stuff?
It's funny. I favor when I see my 2 or 3 favorite podcasters have like a 2.5 hour podcast with somebody. I'm like, oh man, I can't wait, because that means if it's an hour. With some of these people,
obviously, then we need to re-engineer your work spec, because who has 2.5 hours in the day to listen to? Well, I guess if you're listening while working.
A difference between my generation and your generation is not in a good or bad way. My generation is listening to stuff as they do everything. Like there aren't many moments. Like you'll go out in your yard and you'll do work, and you're probably not listening to anything. My if I'm cleaning the kitchen for 20 minutes, I can't not listen to anything. Like something's got to be.
That is because my wife likes to play music when she's like working around the house and stuff.
Yeah.
And Acoustic Alchemy, those are some of the big ones. Yeah. I find the music
distracting,
uncomfortable. Yeah, it's weird. No, and God bless her, she watches. She is probably one of 2 of our viewers. Thanks, I love you, dear. But, it's weird. It really is. I will go down to my workshop, work on something for 2.5 hours, and I would find the music distracting. So I don't know. It's again, the generational piece. But you were out last night. Look at you. Again, you lead in a good way, a very monastic lifestyle. You're very centered on health, and you work out, and you treat your body well. Now, granted, having been your friend and coworker for 9 years, I've seen you go through the entire. It's been a long we could pull out the yearly books of Frank's, and there's some great stories we'll share at some point.
Sure.
But you were out last night.
Not used to being out. Man, I was out at this point.
Yeah, see, you've come over to the dark side. That 8:30's late.
Tuesday, I was out because there were some people in town, but I did got to the happy hour right when it all started, and as soon as everybody was getting drink 2 or 3, and now there's feeling good and everything else, I just slipped right out. And nobody noticed me because they were all, and not that anybody cares that Frank's around. Maybe they did notice and they celebrated. But last night...
I saw you leaving. It hurt my feelings.
You weren't. Last night was the NFL draft party at our friend Peter Klink's.
Good man.
It was it was funny, dude.
He is the guru of risk at tasting.
He is like almost like my Italian grandma, rest in peace, in that she will spend the whole day heckling you, or even like her thing was she would hit us with a wooden spoon if we were like, acting up. And of course, we're like 6 years old. We're always acting up. And then like when it came time for like dinner time or something like that, or like we needed something or whatever, the switch flipped and she was like, went into maternal, paternal, whatever you want to say, mode. And it's like, here's a ton of food. Here's like, do you need this? Do you need that? And Clink is constantly harassing me. Oh, you're not going to wear those shoes to my house. Oh, you're going to go home and change, right? You're not going to look like that. This whole thing all day, all week. And we get there and the guy has drinks all over the place. I don't drink alcohol. He's got like 10 different ginger beers, knows that I like ginger beer. He's got, Clink, I think you ran out. No, I got another 6-pack of ginger beer in the other fridge. He's got the whole thing. He's got like 20 piles of dough because he got this.
Because everyone's making their own pizza. Right?
Everybody makes their own pizza. He's got more. But before even the pizza making, he and Jason, we got this Italian sausage. We went to Little Italy, got this Italian sausage in these rolls so you guys can eat that. We've got these cheeses and dips. And it's just like nonstop eating and drinking and just like being nice to everybody and playing host. So it was really nice. It was hard to leave. I'll say that, because then there's also.
Well, Glenn wanted to head over there at 2:30 in the afternoon. He was starting to Jones. I mean, he's still coming off his. I think he was just starting to sober up from Tuesday. And that's always that gray area. He's not
feeling good like 24, 48 hours, and is like, actually, you know what? I can get right back into this.
Wow. And I bet he did.
I tried to scare him yesterday with he has to do the show today, and he didn't like that. And then when I was leaving yesterday, someone was like, "Oh, Glenn, like, are you doing the show tomorrow?" And he was like, "Nope." Woo! And like, he goes back to the bar for
really
for I don't know.
All right,
class of wine
that will go
20.
into your evaluation, Glenn.
We actually haven't done that yet.
Yes.
So good timing.
Good
but
timing.
Yeah, it was
good.
It was
you had a
fun.
good time.
The Bears were supposed to draft. Did you watch any of it?
Glenn told me they're supposed to draft some tight end that was going to solve all of our problems.
First of all, of course, they drafted a tight end that was supposed to solve all the problems like 3 or 4 years ago. Cole Kmet. Remember, it was like, he's from like Chicagoland area, and he went to Notre Dame, and it's like he's still on the team, but they need to draft another first-round tight end. But it was funny because they're like, they're gonna draft this Tyler Warren guy, like he's the best. He's from I don't know what, maybe he went to like Texas or maybe Penn State. Yeah, I think Penn State.
Look at that.
And look at you. And they and the picks coming in, and all the Clink and Bob and Terry and everybody's like excited, like, oh man, like Tyler Warren, like he hasn't been picked yet. I hope
they pick like a field goal kicker or something.
They pick a tight end, but they picked the Michigan tight end, who was supposed to be like the second best tight end. But they must have really liked him, Colson Loveland, who I watched a lot.
University of Michigan.
University of Michigan.
Oh man, so.
And so they all are immediately like,
scary.
"Oh no! Like what happened?" And I'm like, "Yeah, they took my guy, and Clink and the boys are mad." So it was like a double.
It was a dream. It was a dream. They were angry, and again, Frank's a University of Michigan alum, majoring in math and small animal husbandry, which you can only do at Michigan. That dual major, it's exceptional.
That's right. That's what they're known for.
Yes.
But yeah, it was a fun night.
Good.
Danielle was there. Her husband Sean.
Good guy.
The funniest, the funniest guy I've met in years.
Fantastic.
But yeah, good time. Let's
get into the markets, guys. Let's put some of that math to work, my friend.
Let's do it. Dollar rally continuing. I got in so late this morning that I haven't seen anything. I think equities they were moving higher last night. Equities.
They were moving. They had it. Yeah, we're on a 4-day up streak. So we'll see if we go out the week. Positive, but we're starting the day positive in equities. But this is really, whenever we have spurts of vol like this, we go into what I call like a hangover period. This is a little bit of it. We're still getting wider. We're getting wider ranges, but there's you could see a little of the zeal. Now, this morning they released some interview from the president saying that he has talked to the Chinese, and the Chinese keep saying nobody's talked to us, nor are we talking to them. So that put a little bit of pressure on U.S. equities, but it seems like they're coming back in. What's really gotten quiet are treasuries. Treasuries are very wrapped around unchanged. We're seeing, again, it's very much range committed. Gold got all the way up to 33.75 or 85 last night. We're down to 33.20. Again, 3,300 is still huge in gold, but off of, they're $180 off the high. So we're seeing the ranges get tested back and forth. No new breakouts in anything. Not in crude, not in metals, we got to the upper end in euro yesterday a little bit. Cable too. But that's kind of softened up a little bit as we go into this week. So it'll be interesting to see if this is a tired Friday, because you got to imagine there's a little bit of, thanks, Frankie. There's a little bit of exhaustion right now and fatigue. So do we see us, it'll be interesting. We probed the bottom end of the range again. We talked about that practical range. 113.10 to 115 is your range, or 114.50 is your range. Continue to hold again. We tested it lower this morning and last night, and we're back into the middle of the range here.
It's super interesting, and I'll bring up the dollar yen just because I feel like everything's in a similar spot except for the commodity currencies, right, which we'll take a look at in a second. But to your point, looking here at the hourly chart in dollar yen, you see the getting up to 143. This is when I think you and I jumped on, or no, I jumped on with Paul on Wednesday, right, and we talked about how they got up to 143 overnight going into Wednesday, and on some like illiquid time of night news. They bring it back to 142, so a couple hundred points higher, and then 100 points lower, and then they try 143 and a half here on Wednesday late afternoon, come back, and then last night going into this morning trying that 143 half again. So it feels, it's one of those that it feels like the dollar's been rallying all week. Like it feels like, man, we're pretty far from where we started the week to the upside in U.S. dollar.
Yeah.
But they have sold into it pretty much every time. Absolutely. Are we higher? But we're not that much higher.
I agree. Well, so a couple of takeaways. The ranges are getting defined, and we're going to accept that. Again, it's not we're not going back to 150 yen. Could we? Sure. I don't know. It's hard enough. It's hard enough trying to guess minute to minute, let alone day to day. But we're going to accept a new range. We're going to bring in our levels of what we think, because we're seeing the markets are starting to adjust to that a little bit. They're getting a little less sensitive to any tariff tweets. Yeah, we get moves, but we don't get 100-point rips anymore. Yeah. We get 25, 30, and then it kind of comes back. So the unknown unknowns, which are things like that, seem to have less impact into the equation right now. Disconnect to U.S. equities? Yeah, you would think 4 days of U.S. equities being up, you'd see a dollar bullish move. Really, all we saw is a ceasing of the continuous selling of dollars. We saw a pause, and when that selling stops, we trough off the bottom a little bit. I can't say that we've seen tape action that says we've turned the corner, sure, and that's going to be a structural low. Yeah. So I think there's still opportunity. There's great opportunity here, but if you're pinned from 150 long, you got to think about what you're managing. Sure. Because getting back to that, I'm accepting the new trading range is pretty well defined here, 141 to 145. Yeah. And that's what I'm going to accept. And we can walk through everything and see that a little bit. Yeah, so, absolutely. Because a little rotation out of the commodity currencies, softness. I looked at them yesterday and I was like, boy, that Kiwis went out today in Chicago afternoon time, 59.90, close to 60 cents. And I was like, they're going to put some more into this. And I'm like, and I ended up not doing anything, but here's a case where this has been continually. I mean, think about 60-cent Kiwi. We were spending a lot of time 55.5, 56. These have been true movers. So we're seeing a little bit of give back here, a little bit of congestion back against that 60-cent level. Aussie, same story, a little bit greater degree. So
a little bit weaker on the rally here, this Aussie piece than Kiwi, and yeah, just 64 cents is not 60 cents in Kiwi, if that makes sense. You would have hoped that we were 65 66. Yeah.
If it looks structurally the same, you're right. Kiwi has outperformed. It also was hit the hardest on the downside.
Sure.
So that kind of makes sense. So what have we seen? An unwinding of the rubber band. Things are starting. What had underperformed, we had a period of outperformance, i.e. Aussie and Kiwi. Now we're seeing them give back a little ground while Euro and pounds are muddling around the lower part of their 90th percentile range for the last 6 months.
But it will be interesting going into next week. I mean, what happens today will definitely be interesting because there are already some markets that are trending in some, especially heading into the close of Europe here today, where things are left will be interesting for next week, for sure.
That's a great point. And when you think about timelines, the next 3.5 hours up to that 10:30, 11 o'clock London close are going to give us some tradable opportunities.
Sure.
I think after that, it gets a little sloppy. And it'll be a little bit harder to...
Pulling up the 15-minute chart, I mean, just looking at this Kiwi piece, you've seen in the last 24 hours that trip up to 60 cents and then a 50-point pullback, which is high to low in the last 24 hours here. I mean, that's almost a 1% move because this is, a 59, 60 cent underlying market here.
Trade setups here are perfect, though. This is what I like is if you're not damaged by the emotional baggage of getting really stuck in something for a long time.
The actual price level. If you're not like, oh man, 60 cents, that means something to me.
Yeah. It's like, all right, the setup is here, 59.50. We've had a 50-point pullback from the highs. Let's see if the market generates some renewed interest here. And if I'm wrong, I know where I'm wrong. If it prints 59.30, I'm out. I love those kind of setups here. It gives you, this one plays through really easy in my mind. You're not looking for home runs, but I still think if we see a little bit more stability in equities and stuff, we'll see more correction in Aussie and Kiwi. I like the idea. I'm not a momentum guy. I'm not looking to buy the 60. I'm not waiting until it breaks 60 cents to buy. Some guys do that, and they're great at it. I like the idea of seeing if something can build energy on a pullback, hold the levels, and if it doesn't, I'm out.
Well, and to your point, going back to the daily chart on a market like this, I know we started this kind of segment looking at euro and dollar yen, but even this piece here, the last week has kind of settled into this, 59 and change up to 60 and change as the range. Now, you look at the last handful of times that a Kiwi market has rallied from its lows, and they've kind of sold into it and settled into a little bit of a range, and then tried the lower end of the range again. Now, we might be kind of outside of that mode for at least the next few weeks, just because they put so much distance between those lows. I mean, you look here from December until April, they were in this 150 point range at the lows.
Right.
And so every time they would try it lower, it felt like, man, they're mining for new low lows.
Right.
Whereas here, it's pretty much a similar trade to maybe the way you've been trading Kiwi the last few months, which is to say about 100-point range on a weekly basis or so, maybe on a daily basis, to your point, like a 50-point range. We're just at a new price level. And so
if
you're
you
not...
roll back another 6 months.
Sure.
And this is what context is all about. Oh, wait, and again, it's flippant of me to say take out 2025 up to this point. Long term, 60 cents is the lower end of a year-long range.
Sure.
So what I'm saying is that you need to be a little bit practical around, when you look at that 15-minute chart, it's like, oh my God, I'm buying a 400 point.
I can't buy, my whole point is you can't buy this market because it's 300, 400 points away. Yeah.
Again, if the setup of if we're active day traders, swing traders, we're looking for ins and outs during the day or a day or two. We have to accept the ranges that are given to us. And I mean, if we traded down at 57 cents, I'd be really concerned quickly. That would be the catch the falling knife piece. And I wouldn't necessarily, I would have a much harder time coming up with what I wanted to do versus accepting structure now and playing within that.
Yeah.
And what I like is if we go over to Euro or something like that, it's a little bit wider piece here in terms of us looking for that setup. We're almost 200 points off the highs.
Yeah.
So you would argue, well, Pete, if you're 200 points off the high here, it's same thing as Kiwi. You're buying this. I'm not feeling as comfortable with this in terms of the structure if I'm buying 113.50s, where am I getting out?
Sure.
Probably 100 points lower. Friday, I'm not looking for that kind of trade.
And this is one that has those, and this is why it's so, Forex is so interesting, because there are sectors of Forex with different dynamics. And you talk about where we started this conversation, yen, and where we are now with this euro. Don't dismiss the amount of time that we've spent up here at 114 at this point, because we're almost, I mean, we'll see if they tack on another week of trading in the kind of 113, 114, maybe they're above 114 a little bit. Oh man, they're looking at below 113 for a little bit here. In this euro dollar, this will be close to a month of trading in this kind of confined range. Whereas, Pete, it sounds like you're a little bit more, I'll say, confident in the potential elasticity of Kiwi and Aussie, because at this part of the range, they've only been hanging out for a couple of days, and they've been trying these commodity currencies higher. And you rewind to not even a year ago, there's a lot more historical case to be made that they could move higher. That, again, there's more elasticity on both sides of this trade, whereas euro dollar or this dollar yen piece, you zoom out and it's like, I don't know how much elasticity there is on both sides of this trade. I could see very well the more, I don't know if you want to call them stable or developed. I always have a hard time categorizing yen, sterling, and euro, but they are different than those commodity currencies. Those have kind of, those three have kind of are sputtering in my mind a little bit, trying to, with any ideas of trying to find a new range. Whereas those commodity currencies, the switches seem to flip.
Be on a little bit more of a mission.
And it seems like I wouldn't be surprised if we're talking about, the 58 handle in Kiwi next week, or 62 or higher.
Absolutely. There's more energy there. I think this is still interesting. It's just sloppy. What I mean by sloppy is it's harder. It will drift back and forth here. I don't think we're going to see new lows right away. It's going to have to spend some time down here to build that. But I don't like buying a 350 pip rally right now going into Friday. Again, as we roll out next week, we'll take a look at it with a new set of eyes. But this is what I love, is that we can go through. Again, we call them our major pairs: cable, yen, euro, Aussie, Canada, Swissy, Kiwi. There's very different setups in each one of these,
very different,
which is great. And it depends on what you want to accomplish, what you want to do. For me, Friday, I'm going to be a little bit defensive on Friday. I'm going to be a little bit more selective. I'm not looking for home runs. I'm looking to add a little bit of incremental.
And you already got some. What the nice thing is, you already got some markets that are toying with that one standard deviation when you're looking at this Kiwi or even this dollar yen. If if it continues another 20, 30 points, we're around the standard deviation in both of those. But some interesting setups, Pete. But we'll call it a week.
Friend.
Yeah.
All right.
Coming up next, Tom, Tony, and Vanetta. Stay tuned, everybody. Thanks for watching.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both. Raise the roof.
Hello.
You did it. You did it. You did it. How is everybody? Did we have a late night? I took 2 aspirins already. I don't know about you guys.
Are you sure they were just aspirin?
It was a late night. I was watching the draft, and It's so weird. I really don't care, but yet I can't turn it off.
I know. I'm the same way. Didn't we have a bet about that Cam guy? That Cam
Ward?
No, Skeetabo, whatever.
Yeah. I have a bet with you with Nikki.
Didn't you?
I have 80 and under.
Yeah, I think he went 120 or 115.
No. It's just the first round.
Yeah, he's going to go like 80, 115, 120 or something like that. He's going to go in the fourth round, something like that for sure.
Okay, well, let's wait and see, because then Nikki wins $20 from me.
You sure you didn't bet? You sure you didn't bet Scott and I?
Nope. You two? Are you kidding? You guys, you wouldn't even know who the guy is. No, you're talking about.
There weren't any real big surprises from the draft, right? Like, it was pretty standard, like at least through the top 10 is what I thought. I did not stay up late.
Well, Jacksonville traded up
for Travis Hunter.
Yeah, but other than that, I just want to go on record as saying I love the Bears pick. I'm giving.
Yeah, we get Colston Loveland, 6'5", 248-pound tight end out of University of Michigan. Go Wolverines! They say he is a root technician, and he's got the size and speed to really help our offensive line. I hope that's true, but it's the Ben Johnson era. He's going to do what he does. I got to believe.
You got to give the benefit of the doubt, right?
Oh. Listen. Nobody can complain. We all got the guy we wanted. You can't complain.
But people were mad that we didn't get that Jeanty guy.
Yeah. Well, the other tight end.
No. He was a running back. He was going 4 picks.
No, but the other tight end too. There was
Tyler Warren.
Yeah, there you go.
I wasn't mad. I liked this kid better.
What do you think? Running backs are back in the draft. Running backs are back in favor now. Thanks, Saquon.
Yeah, the Bears will take a running back with their second or third pick today. Yeah, we want
Nikki's confirming it wasn't the first round. You're right.
Yeah, no, it was the 80th. It was the 80th pick, and we have. But I think he could. We'll see. I said he goes inside of 80. He said he goes over it, but it's going to be a toss up.
Got it. All right. Just trying to scam the kid $20. What can I tell you? Things are tough for him.
Did you see all the videos of the Green Bay entrepreneurs who had all the signs and flags? They're like, "Hey, draft parking, $150," and they're putting them in all their yards and their front lawns. The crowd looked great. It looks like a lot of fun up there in Green Bay.
The crowd did look big, and I heard they were turning a lot of people away.
Yeah, I heard they had to turn a lot of people away. That's what I heard too.
But it didn't look like the best of all, like those events. I don't know. It looked.
The Bears are going to the Super Bowl. Green Bay's worried.
Yeah. They're real worried. Their over/under in Vegas is still 8.5.
Yeah, I know.
But anyone that is up there, people on social media are like, "Hey, if you were up there for the draft, you got to go to Culver's."
Is that what they're saying? You got to go to Culver's. Usually they
like if you're gonna go to a Wisconsin staple, like it should be Culver's. Why? I don't see anything wrong with that.
Usually they say you got to go to Cops.
No, they're for the curds and for the butter burger. They're.
Oh yeah.
They're right. Yeah, they're right. It's Culver's.
Yeah, but I mean, I always stop at Cops on the way home.
Oh yeah, you got to stop at Cops.
Yeah. So
I've never had it.
It's if you like custard, it's worth it.
I know. Yeah. What do I look like? Of course I like custard. Look at me, for crying out loud.
If you like high cholesterol.
There's nobody in the world that doesn't like real buttermilk custard, and theirs is the best.
Wait, so Bat, are the odds out in Las Vegas yet or not yet? Like for the season, for the upcoming NFL season. Oh,
sure.
But did they change with the draft? Right?
No, they don't move much with the draft. That's all factored in.
I don't know. I'm not a degenerate gambler like you.
Yeah, well, the worst teams draft first. Like, I mean, because the Giants drafted a defensive end, you think they're going to move up? No, they're still as bad as they were before.
Right.
Oh. I don't know.
they're still just as worthless as they were before. Sorry, Nero.
I mean, you think
We have no room to be jawing at other teams. Please sit down.
It's not even preseason. This is when you do jaw. This is when you get all puppy tested.
This is when Bear fans are in there. This is when we're puppy.
Well, it's our chirping prime. Yeah, no.
Yeah.
Sit down.
Yeah.
Sit down.
Yeah, this is when we talk the talk right now.
Yeah, of course. This is when you got to do it.
We're not Buffalo. We're not Philly. We can't be just popping off.
Too funny.
Anyway, so what else did you get up to last night, Tom? You had some podcasts to do and some other shenanigans.
I had a bunch of webinars. I was actually really busy last night until about a little after 8, and then I got to relax. So I was going straight through till a little after 8, but it's okay. I like it, and it was fun. And a little after 8, I got to watch the draft. I made it just in time. I got finished up my work just when about the 9th pick and the Bears were 10th, and then so the timing was right. And then I got to watch a little hockey.
Well, hockey was good.
Perfect.
There's going to be some hell to pay. A couple of big hits last night. Sadenoff. Panthers are. Go ahead.
I didn't see it. I didn't know which game.
Oh, there were a few. The good one with the Maple Leafs. Good one with the Panthers. I think the Panthers are going to pull a. They're going to pull a. Same thing like the U.S. hockey team did. They're going to go out there with the Rat and Kachuk and Bennett as their starting 3, and you're going to throw down 3 gloves. You'll see.
Well, what's funny is
on that Saturday. Watch Saturday's game.
What's so funny is that it feels like every year the Panthers and the Lightning go at it in the first round, and usually whoever wins that first round wins the Stanley Cup.
Yeah.
Whoa!
And those two teams, they have to absolutely hate each other, and they go at it every single year. It's just amazing, and those games are great. And you wouldn't think it 2 Florida teams, but every single year they're paired up against each other.
Here we are.
Yeah. Gonna be fun.
Yeah, Toronto fans have to be happy because they don't have to play Boston this year. They lose to Boston every year, and they don't have to play Boston this year.
Don't you want the cup to go to Canada? No.
You know what's funny is I don't know. Let me think about which team, because we have no skin in the game. Yeah.
Well, I'm a Panther fan now just by
The Panthers are the Panthers are a really good team, and they're very likable. I do like the Panthers.
And you gotta be pulling for the Capitals a little bit here too. I mean, if you got no skin in the game, I mean, Ovechkin title, win it all. I mean, scoring title, win it all. I mean, you got to be happy there. I mean,
yeah. The only Canadian team I think that's going to advance is going to be is Toronto, and they got to get past the next round.
Yeah. And we'll see. Anyway, good sports, good hockey.
Yeah, it's an exciting time of year. So that's
yeah. This is one of the greatest times of the year. Stanley Cup, NBA playoffs, everything else. It's great.
Yeah, and having the draft, that's exciting.
And having the Cubs who are playing unbelievable right in your neighborhood, it's awesome.
Yeah.
It's good to be Sadenoff.
Good to be king. It's good to be king.
Are you going to play golf this weekend? Do you have the bug?
I don't know. It's supposed to be 45 degrees tomorrow, so the answer is no, not tomorrow.
It's not going to be 45 degrees tomorrow.
What is it going to be?
Not 45 degrees.
He's not too far off. I mean, yeah, tomorrow's low is 40, high is 53. I mean,
yeah, 50. That's not 45.
Kind of chilly though. Sunday maybe.
You're such a baby.
I know.
Monday's your best day, Sadenoff. Don't be playing hooky. I already outed you.
No, Sunday maybe if it's warmer. I don't know. We'll see. I don't really care that much. It doesn't. We'll see. I don't have any. I gotta find friends.
Because you stink.
No, because I don't have any friends. I gotta find friends. I gotta find. I gotta find a bunch of losers to play with.
You got to put up the loser signal, see who answers your call.
Yeah. I have a list of loser friends, and I just go through them one by one and see who's available. But then we got to get a foursome. It's a lot of work.
That's horrible, Sadenoff. That really is.
Yeah.
What a way to go through life.
I know, it's sad. I might have to call Mickey and Mikey and see if they need somebody.
Oh, they would
no.
love to.
Oh no, you're really scraping the bottom of the barrel.
Yeah,
Anyway.
yeah, I know.
Hey, let me know, does this seem like a scam to you? I don't know if this
Yes.
is an economic indicator. I don't know if I'm breaking a story here. So your girl went to Costco last night, so because I had to get some stuff at Costco. And when
Thursday night Costco run?
Elite. It was empty.
Yeah.
It was empty. So as I'm checking out, there's two people. So there's a guy that's like ringing up all my stuff, and then there's a lady at the end, and she looks at me and she goes, "Miss Logan, you qualify for an exclusive Costco offer." And I'm like, I'm sorry, a what now? And she's like,
Damn.
no, listen. She's like, "Are you aware of our executive club membership?" And I was just like, no. And I was like, I'll just play dumb. And she's like, "Well, you get an extra 2% cash back." She's like, "Today only." See, she's like, "It's telling me because you're such a special Costco customer, we'll give it to you today for $50.
What's it normally?
It's 130. It's not, It wasn't really 50 because I renewed in February, so I paid $65 in February.
Right. So you're just paying up.
Right, but it's still $115, so it was still a $15 discount.
Yeah,
Okay.
and
But I
on
was
that
like,
new-
I'd never know that Costco did. I was like, are y'all okay?
on that news, Costco is down about $3 this morning.
Well, I wouldn't call that a scam. I would call that they're selling an upgrade.
Yeah,
But why are they trying to book membership revenue at this point in the quarter?
Uh-huh. It all goes to the bottom line.
Is there something wrong with their EBITDA?
EBITDA, listen to her.
Love a little EBITDA.
But anyway, your girl is now Costco executive.
Oh, so you paid up?
Yeah, I was like, I'll get 2% back. Okay, fine, let's go. Because now that threshold is lower, so the math is mathing. So
I think it all matters if you're Tony and you buy gas.
It
you live in the suburb.
For gas.
Yeah, it does.
Yeah, I don't go there for gas anyway. It's too far out of my way. So,
but if you buy gas, it makes sense. If you don't buy gas, it's hard to get your number.
You can't use the gas for that. Hey, by the way, you probably don't know this, Sadaf, when you were just talking about golf a moment ago, but Baby Shark is back in town, so he's available too. I mean, if you're looking for those kinds of people down on that low rung, if you're looking for those.
I didn't know Baby Shark was a golfer.
Yeah.
Yeah, he's good. He played in college.
Yeah.
Wow.
Yeah, I didn't know he has clubs with him. Yeah. I can use him. I'll add him to the loser list.
Add him to the list. Yeah, his mother was a hell of an athlete, so he's got some skills.
Mama Shark.
Mama Shark was a hell of an athlete, so
Baby Shark, you're on the loser list with everybody else. Okay.
Oh my goodness. Well, hey, you as a viewer, you're not on the loser list because you're watching the show. You're a winner. See what I did there? No? Okay. We got a great show for you today. It's a fantastic Friday here at Tasty Live. So just a round of shenanigans all around. At the top of the 8 o'clock hour, the weekend stocks. We got Jamal. It's nice to have Jamal back. Last week was Good Friday, and then he's been bumped before for some tariff shenanigans. But Jamal gets to be in the hot seat at 8 a.m., and his topic this week is turnaround on tariffs because the market had a stunning turnaround. And he's going to go over everything that went down this week, whether that was the big earnings like Tesla, Google, some other announcements threatening the Fed prez. Just a bunch of stuff happened this week. Jamal's going to recap it all. And it is hashtag Fan Friday, so that means Fast Market at 8:40. Tom and Bat are going to do viewer submitted trades, so stay tuned for that. And then 9 a.m. part of our market measure today is Kelly's Criterion, the growth formula. What? A who?
Huh?
I love a Criterion collection. The movie, the old movies. No, but I don't know what the Kelly Criterion is.
We have a lot of Kelly Criterion in the platform. We'll talk about it when we get there today.
Okay.
A lot of our models are built around that.
Oh, okay. That's interesting. I would like to learn all the backstory on that. Then live from the trade desk at around 9:30, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. I think it's going to be his last remote presentation.
Well, until he goes on his next vacation. And
oh, there's no stopping him.
Why do you hate work-life balance? Anyway, hey, that's our run of show. Hey, this is my theme music. Let's do your daily dose.
Our leading story. Breaking news. Coming across the wire. Our leading story. Top story. Just in. Today's headline. This just in. Breaking news.
All right, everybody. Today's a fantastic Friday. It's April the 25th. It's a part of the show. It's called the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
I said, are you ready for the news?
Ready for the news.
The S&P 500's rapid exit from correction territory hinged on Trump's walkbacks of tariffs and Fed fight. In a stunning reversal, the S&P index was able on Thursday to exit correction territory, ending at least 10% above its recent low set in the wake of the April 2nd Liberation Day tariffs. Market has gained an astounding $4 trillion back in market cap. Let's go.
America, baby.
It's so funny that people that they talk about bear market territory, bull market territory. Like, it's the most ridiculous bunch of garbage, and people.
But
it's on. It's off. It's like.
But if there's a percentage threshold,
it doesn't. It's a percentage threshold. It's just some made up number by somebody. It doesn't mean anything. It's just a stupid made up number.
Okay.
That's like saying you go to a baseball game and somebody wins by, let's say, 10 runs. That's a slaughter, but 6 runs is not. I'm just saying. It's such,
you lost me. I don't follow baseball.
Okay. It's just such, think about it like a basketball game. Like, what's a blowout?
Again, not okay.
Is it blowout 20 points or 30 points or 40 points?
Sure.
And if you come back from a blowout, it's just like you're just making up numbers so that they have something to write about. It's ridiculous. I don't want to hear one more. I don't want to hear one more bear market territory, bull market territory story ever.
Can we talk about the indices as a whole? What are you doing in the S&P relative to the Nasdaq relative to the Russell?
I think that we've had 3 days of a massive rally the last 3 days. So, I mean, we've gone up 230 points. And one of the things that Tony and I both said yesterday afternoon was that if the Google number was good and they gap opened higher, which they did last night, that we were sellers. Unfortunately, they sold off, this morning rather than waiting for us. Yeah. So the sell-off that I wanted to play this morning, the sell-off that I wanted to play after the opening today actually seems like it happened in the early morning session today. Yeah. They were up about 30 handles last night, and now they're down 5, but they were down 20 minutes ago. So we've had about a 50 handle turnaround, which is almost exactly what we thought. I mean, Google numbers were good. We said if Google numbers are good, which we were betting on that they'd be good, that if the gap opened up, we thought there'd be a sale. And so far, that's exactly the way it's played out.
Man, if they just waited for you, just a little bit. Hey, keeping it moving.
We could have been somebody.
We could have been
somebody. Yeah. No, I have many tabs open. JP Morgan thinks that the market's sell America narrative is overblown. It's being blamed, the sell America has been blamed for the volatility of the last few weeks, but foreign investors aren't ditching U.S. assets in droves, according to JP Morgan. Instead, the bank is seeing hedge funds selling as the primary driver on the downward pressure of stocks. What would be your analysis?
Well, I think from day one, we've said America's too big to fail. So I was never in saying that I thought that it was never a sell America in the sense that America's just too big to fail. It was never going to happen. But I think there's a certain and it's easily explainable, and I think it's somewhat justified. There's been some anti-American sentiment. I mean, listen, when you're the biggest player, let's say you're the biggest kid in the playground, and you pick a fight with everybody else, everybody's going to kind of resent you and not like you. And I think that's
well, Sam, let's talk about how it felt like to be picked on, since that's what you have more knowledge on about in the playground. So how did that feel from that perspective? The rest of us could figure out the rest.
Nobody picked on these guns. Are you kidding me? Kids would cower and be scared. I mean, are you crazy?
Shiver in fear.
What do you call that move? The scarecrow? Two little arms.
I haven't started my summer, workout, weightlifting, the whole deal. You
look buff these days. Yeah.
You know how buff I get in the summer.
But let's talk about some of these so-called havens in bonds, in gold, and things like that. Let's talk about what you're doing to end the week.
Well, I want gold to crash and burn. It's actually down $44 today, which is good for the good kids. Silver's down a little, but we're short gold, long silver, and then we're short gold in a bunch of different places. So, plus when gold goes down, they kill gold premium, which is what we're really short.
They do. And it was up yesterday, and they rallied premium, but not to the lofty levels that it was. If you remember, we were talking about gold, Ivy rank 100 and change earlier this week, around 48 yesterday or so. We'll see what it looks like this morning. Markets are a little bit wide in GC to give yourself a good indication on what volatility is going to be like.
Yeah, but everything in there trades. And just so you know, in gold, if you trade GC, every single order in there trades one tick around mid price. It's not like like I've already adjusted my gold position twice. We're flat deltas in GC. We just have some short strangles. They've come in a little bit today.
Back got short gold yesterday on option trades today, every Tuesday and Thursday. I used to be the world's worst commodity trader, but I seem to be a gold guru, Sosnoff.
Okay.
Yes, I've heard that. I've heard that from many people. Your mom, other people like that. Your wife.
Yeah.
What are you guys doing in treasuries this morning? How are the yields looking?
We're flat. The yields, the bonds are at the high end of their range. They're 115.20, which is the highest they've been. But we flattened out 2 days ago. So we're flat bonds.
Hey, I got to keep it moving. I think someone wrote in about this, or maybe you talked about it this week in Confirm and Send, but I'm not sure. But leveraged ETFs have seen a surge of inflows this month as investors seek to position for amplified gains as markets recover from the sell-off. What are your thoughts on leveraged ETFs in this current economic climate?
We have talked about it on Confirm and Send, and we've talked about it on the show. Tasty we support all products. So if you're product indifferent, you rarely use leverage ETFs because you prefer to use futures. They're more capital efficient. They're more active. It's just they're better products. But if you're not comfortable using futures and you want to use a double or triple leveraged ETF, go right ahead. Just remember, they are 1, 2, max 3-day trades. They're not swing trades. They're not long-term holds. They all have a very expensive cost to carry. We call it like a negative drag built into it. And you pay, just so people understand what the difference is between the leveraged ETFs and futures. At futures, you pay basically a cost to carry, like an overnight rate, which might be 2%. But if you're doing leveraged ETFs, you're going to pay a much higher rate that's embedded inside of it because you're a customer. So it may be as much as 8 or 9%. So it's just a more expensive product to trade, but they work fine.
Okay. All right. Thank you very much. That's good information. U.S. bank regulators are pulling back guardrails on bank crypto activities. They, on Thursday, announced that they're going to pull several documents that urge banks to show caution when dabbling in cryptocurrency and related activities. The Federal Reserve was withdrawing a pair of supervisory letters stipulating that banks should seek advance approval from regulators before engaging in crypto asset and stablecoin activities.
Yeah, this is there's a lot of lobbying paying off here in respect to crypto. I'm not opposed to removing some of the oversight. What I think they need to be careful with are some of the altcoins and some of kind of like the, there are a lot of, there are a lot of worthless cryptocurrencies, legit worthless cryptocurrencies, and we need to be careful that people don't get snookered, into buying just complete garbage. I mean,
I'm very worried about my fart coin retirement.
Yeah, you got to worry about your fart coin and your Haktua coin and your Trump coin, all those kind of things. Just be careful with that stuff. If you're going to trade
95.5 for Bitcoin though, hanging in there nicely.
Yeah, if you're going to trade cryptocurrencies, you're going to make it part of a long-term portfolio. Make it one of the top 5, 10, 15 digital assets and that are liquid, that are real, I guess.
Hey, what do you think about this? CME announced they're going to launch XRP futures contracts next month.
Yeah, they announced that actually before. I think that's fine. I don't think there'll be a lot of activity in there. I think it's going to be really challenging for them to get a marketplace, but we'll see.
Okay. I just thought I would mention it. XRP.
Yeah. I would rather see the CME focus on, make better markets on the event-based stuff and make that competitive, because I'd like to see that in a listed marketplace. But I would rather see the event-based stuff come to the CME than based on ETH doesn't really trade, so I can't imagine XRP is going to trade.
Sure. Hey, let's get to some earnings from last night. Alphabet reported revenue of $90 billion and earnings per share of $2.81. The company shares rose as much as 4% on stronger than expected revenue growth. A hilarious moment was there was a random line item, and Google made an extra $8 billion in the last quarter from an investment, and they wouldn't say how, but we learned it was they have an investment in SpaceX. And so that has multiplied by some number that they just magically made $8 billion. And they're just like, oh, we're not really worried about that. Could you imagine?
Yeah. Well, they didn't make anything yet because it's unreal.
Yes, on paper,
yeah,
Mr. Pedantic. Exactly. What did you do in Google? How are you going to manage it this morning?
I think we did good, but we'll see. We bet on the stock being inside the range, which it clearly is so far. It's about 165. Yeah. Mm-hmm. So we bet on it being inside the range. We sold naked puts, so that's got to be good. And then we also sold a bunch of cheap June strangles. I'm hoping to make 30, 40 cents on them, but we'll see.
Okay. See what happens. Intel reported their first quarter earnings, and they beat on top and bottom lines, but they issued weak guidance and says they will continue to slash expenses into the next year. Revenue for Intel came in at $12.67 billion versus 12.3 estimated. Did you do anything in Intel?
We did, but it's only a $20 stock, so it's pretty hard to do.
Sure.
We sold some. I sold some 19 puts.
Yeah, down $1.50 this morning. Intel.
I think the puts will be about unchanged.
Continues to be a disappointment. It continues to be a Sosnoff.
I think the puts will be unchanged. I think it's going to be a scratch to a small winner, but maybe I'll be a small loser. Whatever, it's going to be nothing.
Hey, Beth, before you put up the next slide, median U.S. CEO pay hit a new record. Do you guys want to guess what it is?
I would say.
So this is median. So this is the median
what is the CEO
among U.S. CEOs.
Of the Fortune 500 or?
Yeah, of the top U.S. CEOs. Yeah, it rose 7.5%.
4.8 million.
Wow.
What do you say, Matt?
I don't know. I mean, I think it's going to be. I think it's going to be more than that. Probably. You said what? 4.5? I
said 4.8.
I'm gonna almost double say 8.
Oh, well, you could keep doubling it, tripling it, or whatever. I can't do math yet. I haven't had coffee. $16.8 million. Be so for real right now.
That's unbelievable.
That's so ridiculous. That number's ridiculous.
Yeah, that's just crazy. But it's just about pay boosts from stock awards, and up until again, and this data's for 2024. So we'll see how those numbers come in line in the crazy markets we've had in 2025. But yeah, it hit $16.8 million. So do with that what you will. Story.
I would like to see what one of those CEOs' value would be if they lost their job and tried to get another one.
Yeah. Well.
Yeah.
Well, here's a bonkers story. Speaking of losing something and getting another one, I do not understand. Please explain to me, like I'm 5, why people keep giving this guy money. But former WeWork founder Adam Newman has raised another $100 million for his real estate and technology startup called Flow. The Series B round values his new company at $2.5 billion. What?
You're such a failure, Sosnoff.
I mean, all I'll say is that, you don't understand it, but whoever's putting up the $100 million, they're not stupid. I can promise you that. I mean,
they seem like a little bit, because all you got to do is listen to a podcast on what this dude did, and
it doesn't matter what he did; it matters what he's doing now. And all I'll say is that I don't know exactly what he's doing now or anything like that, but people are willing to put up $100 million. That's real money.
Sure.
Honey, I guess
somebody look behind the curtain. Sure.
So somebody believes in him. That's for sure.
Wow. Keep it moving. Hey, Boeing says that they are going to resell jets as tariffs hit the China trade. Boeing's looking to maybe put their jets on Facebook Marketplace. No, I'm just kidding. But they are looking to resell potentially dozens of planes locked out of China by tariffs. China sent them their box with their mixtape and their hoodie and their plane, and they sent it back. And they're like, "We are done."
They should put the planes in the TikTok store.
Yeah, there you go.
That's right. There you go. Good one.
Put them on Taobao. What are you doing in Boeing?
We had a position and we took it off when they had earnings this week, so we have no
Boeing
going
IV rank of 16, by the way, basically unchanged.
Yep, we have no position.
Hey, here's something interesting also in the aviation space. United Airlines said that they had made an investment in an aviation startup called Jet Zero that looks to build a blended wing body aircraft aimed at reducing fuel burn in the skies. I don't know what all those words mean, but United said it can order up to 100 planes from Jet Zero with an option to acquire another 100. Don't know what UAL stock is doing.
I haven't had
UAL, you got anything in there? They've been getting a little bit hit lately. 68 and change, down about a quarter right now. Your beloved Love, since we're talking about that too, trading up to 26 and change, Sadnoff, after 24 and a half opening after earnings yesterday.
Hey, guess what? Spirit Airlines said they have received approval to list their shares back on the New York Stock Exchange after the low-cost carrier emerged from bankruptcy. The company said its shares are expected to begin trading on April 29th. The New York Stock Exchange delisted Spirit shares in November as the U.S. no-frills airline filed for bankruptcy. I hope the New York Stock Exchange charges them extra for relisting.
How many lives does this company have?
What happened to the old shareholders? Did they get wiped out? I don't know. I don't know the story here.
I don't know.
I thought you would know. I don't know.
I don't know. What's the new symbol?
That I don't know. I think be under their old one.
I would assume if they reorganize, did they get rid of their old? I don't know what happened here. I don't know. Yeah.
Hold on. La 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 la. It's Save Q. No, Save. That was their over the counter. Sorry. Yeah, Save was their original. I don't know. I don't know if they're going to get Save back or not.
I don't know.
No, FLYY. Ha! Look at me. I found it. Fly.
FLYY.
You ain't got no alibi. You fly.
No price yet. No nothing there. Yeah.
Yeah, my guess is they just wiped out all the old shareholders and then come out with something new, but I don't really know.
There you go. Well, we will learn together.
Usually when they change symbol like that, it's never good for the old shareholders.
Yeah, never good for the shareholders, right.
The Trump administration is looking at loosening rules to help U.S. automakers like Tesla develop self-driving cars at a faster rate so they can take on Chinese rivals. U.S. companies developing self-driving cars will be allowed exemptions from certain federal safety rules for testing purposes, according to the Transportation Department. Are you doing anything post-earnings in Tesla?
No, we got out on earnings and we got out Usually after earnings, we kind of get out. And so we got out of Tesla, Boeing, all those things. So we have no Tesla position on for the first time in probably 6 months.
261 for Tesla. It looks like it's actually up about $1.50 this morning.
That's good. Also on their call, Google reported that they give like 250,000 Waymo rides a week. So they have self-driving exposure as well. So they're benefited by this change too. So
Waymo.
Waymo. This is a bonkers story. An outsourced contractor relied on artificial intelligence to write the questions for the California bar exam, and people are big mad. I can't believe this dude got like a government contract and he's like, yeah, I'm gonna just wing it, and used AI to write questions to pass lawyers for the bar. And of course lawyers are litigious because that's what they do. Like this, it's a big mess. The LA Times reported that 23 out of 171 questions were made by this ACS Ventures, and the majority were developed by Kaplan. But the questions were developed with the assistance of AI, and they're kind of have to figure out what they need to do now to fix this.
Sadov, I could have been an attorney. My lifelong dream.
Why stop there? You could have been a doctor.
Hey, well, that could have gone better. Almost immediately after pre-orders for the new Nintendo Switch 2 opened up to customers, the GameStop site couldn't handle it and just basically seized up. They were available for pre-orders. They were supposed to go up at 11 a.m. yesterday, but GameStop's site and app shit the bed almost immediately. GameStop literally has one job, but they're getting into crypto, they're getting into all this other stuff. But when it comes to gaming and their actual customers, they couldn't even handle it.
Yeah. I mean, I don't know what to say.
I don't know what GME is doing.
GME, we haven't looked at that one in forever. GME is trading at, well, you got to put in GME. I put in me. GME is trading the 26.98 on the bid, basically unchanged. Quite a little bit of a rally last couple of days.
Some people were able to put stuff in their cart, and then they're like, I think I bought this, but they never got confirmation emails. I don't know. It's just, it was kind of a mess. So, hey, Starbucks says customers are staying longer in their stores to take advantage of free refills. Starbucks' new CEO and chairman, Brian Niccol, says the chain is working hard to ensure our coffee houses have the right vibe. Tom, what is the bad coffee policy on free refills?
We don't give free refills, but we let you hang out at the coffee shop. And we have,
you cheap SOB.
we have a really good vibe.
Yeah, I know.
Starbucks.
What are you doing in Starbucks as a stock? How about that?
I don't have any. I had to stop trading Starbucks. I have a cease and desist.
Sadov, no tariffs for coffee. You'll be happy to know. Thank you, President Trump. Starbucks, 83 and change, basically unchanged on its butt. Ivy rank of 51, Sadov. Earnings looming April 29th. Coming.
Sad news. I don't know if I've ever eaten at one of these. I know they had them when I was growing up in Texas, but I don't remember that like I ever ate there. But San Diego-based fast food chain Jack in the Box is closing more than 150 or to 200 locations as part of a broader strategy to improve long-term finances. Have you guys ever had Jack in the Box?
Of course.
Oh my God, back in the day, yeah. Lucky Jack.
Where did you get it? Where was there a Jack in the Box?
On the East Coast. We had them on the East Coast.
Okay.
Yeah, we had them growing up on the East Coast.
There's a Jack in the Box in Mortgage Grove, not too far from me here.
Morton Grove?
Mortgage Grove, we call it. But yes, Morton Grove, yes.
we had Jack in the Box growing up. The burgers were but we used to get the fried tacos. They were good.
Fried tacos?
That was my memory of them. Yeah.
Wow, okay. All right, I have no idea. Hey,
it was a late night food place. Let's put it that way.
Mm-hmm.
For the first time in 4 years, the Golden Arches is adding a new menu item. McDonald's is debuting a new crispy chicken item with a bold new sauce. The McCrispy chicken strips will be served with a creamy chili dip. And it's going to be a permanent menu addition. The McCrispy strips are made with white meat chicken coated with a crispy golden brown breading sprinkled with black pepper flavoring. I don't like it says just flavoring. Why not just black pepper? Okay.
Yeah, I mean, you would think that the seasoning isn't that expensive, right?
Right.
Bold new sauce. Yes, I don't like
and it also includes the all-new creamy chili dip, which is a tangy blend of a burst of flavor, savory and sweet. What's McDonald's doing? And would you guys eat these? I would eat these. These look good.
Nah, I don't. Those don't do anything for me.
Yeah,
I wonder how much protein is in them.
McDonald's $3.17 and change, up around 60 cents, maybe 80 cents. A little bit of a mixed bag of tricks today on some of these stocks.
If I'm eating the chicken strips, I'm getting Dave's or Roost or something like that. I'm not eating McDonald's.
Yeah, not
well,
you.
But if you're on a road trip, like there's not every place has a Dave's.
What road trip do I go on?
I'm just saying if you were on a road trip.
Yeah, I don't know, like maybe if you were driving down to Nashville or something like that.
I mean, if I was on a road trip, we usually have a car that follows us with all the food.
Okay. Hey, finally today for my viral video of the day, as you know, every Friday I like to do a little segment I like to call Will Tom Eat It, where I scour the internet for food for fat traders. And I found something for you, Tom. The weather is getting nicer, sort of. Here in Chicago, it's about to be patio season. But I found for you, Chicago does great smash burgers. But look at this twist on the smash burger. Watch this.
Turn into a burger haven. So naturally, things are going to evolve.
That's when you get places like Smash Ibarito.
At the core, it's a simple smash burger with cheese, with tostones as buns. And if you don't know what a tostone is, it's a smashed plantain fried. I love the blending of an American cheeseburger with a rich Puerto Rican culture. And it seems like they're just getting started. They just introduced the Pica Puff, which is their take on the Chicago-style pizza puff. You can catch Smash Ibarito at their residency at Desert Hawk.
There you go.
Yeah.
Jibarito smash burger.
I've had not that, but I've had a Cubana on a fried plantain at a Cuban restaurant in my neighborhood. Great. And they pour hot garlic sauce on top. It's amazing.
Growing up in Brooklyn, a lot of Puerto Rican flair there, like a little arroz con pollo and a lot of other nice dishes. So I'm a fan of this. They look good.
All right, Boricua, let's go.
Yeah. Oh,
hey, look at me. I am finishing on time. So, Bat, what's coming up next?
Yeah, but we have Jamal at the top of the hour. We needed you to go longer. All right, well, we're going to take a quick 90-second break and come back. We got more Tasty Live right after this to confirm and send.
World of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters. Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a look at the market. Oscillating back and forth between down 15.20 to up 15.20. Fairly tight range, I guess, if 60-70 handles is a tight range. But we're right in the middle of it right now, hanging out at 4,500, just a skosh under. NASDAQ down 72, Russell down 17, and the Dow down 171. They're all down around 0.25%, maybe a little bit more. The Russell leading to the downside almost by 1%, 2-to-1 margin, down 17. Volatility up 33 cents. Volatility has been staying bid, Sadnoff, no doubt about it. Bonds are up 20 ticks to 115.26. That's about as high as we've seen them, Sadnoff, in the last 2 weeks. What are you thinking here with bonds? Do you still have a bond position? No position in bonds, looking for a sell-off to sell some puts, I would imagine. Bitcoin, 95,500 near its highs. Oil down 66 cents. Gold, as foretold, down 40 after option trades yesterday. Google, Schmoogle, 164 and change, up around $5 inside the expected move to the upside. Sadnoff, that's all I got for now. Looking at the euro, just because we've talked a lot about it, it's down small this morning.
Player, I rolled some calls down in the euro this morning, but that's about it.
Beautiful.
All right, let's do a little confirm and send. Emails that came into us from viewers all over this amazing world.
Yes.
All right, we got a bunch of them today. So yesterday on the show, you recommended against holding leveraged ETFs. Actually, Vanetta just did this. You recommended against holding leveraged ETFs like TQQQ and SQQQ. I think you said hold them 1 to 3 days at most and never more than a week due to the fees and the decays that the funds have. Person spot on. My question is, why not short both of these funds? One ETF is long and one ETF is short, and hold them for a long time as they decay away. In fact, why not short any of the ETFs that have a large expense ratio, leveraged ETFs that have a large expense ratio to hedge risk?
It sounds good on paper, and it seems very logical, but it's all factored in. Is my easiest way for me to say it for you. Like, meaning it's not cost effective. It's going to eventually be rebalanced. It's a disaster in a nutshell.
Yeah, I have a friend. He used to work for us. He ran a program trading desk for us back in the 90s, and he's now running the ARB desk for a high frequency firm, and his job is to trade all the leveraged ETFs and make markets in there. And all day and night, basically 5 days a week. All they do is the arb between all of these products. So whether it's a basket of stocks, whether it's TQQQ against SQQQ, they arb these things nonstop. Here's the challenge that you have as a customer. A, they have 10 times more leverage than you have. B, they have 100 times more money. And C, they have all these different choices of what they can do. So the arb, just like Tony said, the arb is so tight that it's down to fractions of a penny. If you try to do this, you're way outside of their cost of doing business. You pay more for money. You don't have the same amount of capital. It's almost impossible to arb these products. Like there's no edge left in them.
Right.
As a retail investor, it's one of the few things you just can't compete in the area of index arbitrage. So, I mean, on paper, yeah, it sounds kind of cool, but you just don't have the capital rates to compete with the high frequency firms. Their job is to keep these markets liquid, which they do, and in return, they basically own the arb.
Yep.
It's just too expensive for a retail investor to do it. Let's go next slide. I drive a truck, and I'm usually driving 8 to 12 hours a day. But I would like to trade as time allows. I would like to focus on 1 to 3 products to trade. I've been very interested in bonds since I noticed the movements are a bit slower compared to the NQ and ES and SPX. This lets me make adjustments. If needed at reasonable times, what are some other products you would recommend for someone in my position?
1 to 3 products. Very interested in bonds. So they're looking for a bond product to trade?
No. What he's looking for is products like the bonds that he's always driving, and so for safety reasons, he doesn't want to run over other people and trade while he's driving. He wants things that don't move as fast as NASDAQ and S&Ps. So obviously, you're going to look for things that either don't move around as much or have maybe a lower volatility, something like that.
Or a smaller product to those products so you can trade it smaller?
I think he knows about smaller products. I think he's looking for options. I'll tell you what I told him.
Go ahead. So, I'm a little bit at a
I
loss.
like this guy because I like anybody that's driving a truck 8, 12 hours a day. I didn't know. Do you know the way they make money is just getting paid by the mile? Did you know that?
Yeah, my brother-in-law is a truck driver.
Right.
Cross-country truck driver.
Right. So same thing, I think, for this guy. So I said, listen, there's ZB for sure. There's ZN, which is actually more liquid than ZB, which is about half the speed of ZB. So you can definitely trade ZN. I said you can also look at /6E, which is the euro. It only has a 7 or 8% implied volatility, and it's pretty liquid, so you could trade 6E. I said, and if you want to, you could step up. If you want a commodity like this, you go very wide in gold and you can very wide in crude oil. I go, those would be the different commodities if you like futures options, if not including the index ones. So I said, the euro.
Yeah, I think gold and bonds are gold's in play right now. Like gold can get a little tiresome at times.
Gold's can get hairy, no question. Mm-hmm. And I think crude oil, the same thing. But right now, crude oil is kind of in a very narrow range. Euros definitely, same thing. But those would be the kind of the top 5 or 6. Let's go next slide.
Good job.
Is beta weighted delta a measure of correlation to the SPY?
Is beta weighted delta? Yeah. I mean, yeah. Sure. You're taking everything that has an inverse relationship, no relationship, small, large in your overall portfolio, and spitting out one S&P number. Sure, it's got to take all that into consideration over time. Doesn't have to be spot on each day.
The simple answer is yes, sure. That's a very reasonable way to look at it. If you went and asked Jacob Perlman or Dr. Data, Mike Reckentine, and you said to them, is beta weighted delta a measure of correlation to the SPY? They would say, in a roundabout way, it's not mathematically accurate, blah, blah, blah. Both would say, it's not perfect. And And so from an academic standpoint, the answer is it's not perfect. They're a little different. But if you're talking to traders like Tony and myself, the answer is yeah, it's basically the same thing.
Mm-hmm.
Let's
Totally
go to
the
the next
same
slide.
thing. Mm-hmm.
Next slide. So let's say you have a strangle on and you're looking to roll at 21 days to expiration. By the way, you know what today is?
21 days to expiration, South of how fortuitous of you.
That's right. Today is 21 DT. So let's assume your short strikes are 100 and 200. Where is the optimal place for the stock to be when it comes to roll? I assume right in the middle, but I'm not 100% sure.
Yeah, you can assume right in the middle. That would be nirvana for you. It would be delta neutral. You'd be rolling to basically the same strikes. Times 3 weeks has gone by, depending on when you put the trade on. You got the most out of it. You're probably at 50% or better. Yeah, it's time to go. That would be the best. I mean, you also want volatility to contract, but time is over a 3 week period. Time will beat volatility expansion.
So usually when you're trading most option strategies, the objective of most defined risk strategies and stuff like that is always you want the underlying to go to the short strike. Like that's kind of where you maximize your profits at the short strike. But when you're selling a strangle, like this example here, you, just like Tony said, you want to be right dead smack in the middle. There's no delta risk. It's the perfect, it doesn't get any better than dead smack in the middle.
Right.
Next slide, Beth.
That's what you want. I mean, when you put the trade on, that's what you wanted. You probably want the same thing at 21 days.
Sure. I'm noticing that the implied volatility rank, IVRs, falling quite a bit, even though volatility remains elevated. We actually talked about this yesterday. Mm-hmm. I'm sure this is due to the overall high volatility we experienced a couple of weeks ago. After the volatility spike during COVID, we started accepting IVRs in the 20s and even the high teens. It would seem that we're in that situation again. Can you confirm?
I cannot confirm. We are not in that situation right now. Volatility in the 20s /VX is nothing like what we had when we were looking at IV ranks in the teens. So stay patient. IV ranks will expand. You can already see them expanding just the last couple of days. So no, we are not in that place.
Yeah, I'm going to say that although there are similarities to post-COVID, and anytime volatility contracts, you're going to have similarities to what happened post-COVID, but each time is a little bit different. And I would say that right now, there are plenty of opportunities when IVR remains high. We're actually covering things below 20 and still laying things out above that. So I would say that, no, we're not ready to start selling IVR sub 20. That's for sure.
Right.
We're gonna play the game the way we always played the game right now. Let's go to the next slide. And the last slide. So the last month, this person writes, the last month has been challenging. Got a bunch of these emails, and we agree with you. I've spent a lot of time defending positions. I can't help but think that this has caused me to miss a number of directional opportunities. Do you think that's the case?
No, not necessarily. I mean, if you had a position on where you were using, 30 to 50% of your portfolio, let's say you were on the higher end, volatility was expanding, and you did it a little bit early. And you were there. You had placed your bet. You had made your bet already, and now you were defending. You didn't miss anything. If you were at the lower end of the range, 10 to 20% of your buying power, and you just sat and defended trades and didn't look for other opportunities, then maybe you missed some. But man, that hindsight game is something I get mad at myself for a day, and then I completely forget about it. And I think you have to be something like that. Otherwise, it'll eat you up inside forever, and you won't take advantage of the prices you have today. Because relatively speaking, you have high implied volatility now, and plenty of opportunity on both sides of the board.
It's funny. I think that, every single person, it's totally human nature. Every single person thinks about, oh damn, why didn't I buy Apple at 170? Why didn't I Why didn't I buy Nvidia at $88? I missed it because I was so hung up on defending everything else. And if I didn't have anything on, I could have done this, I could have done that. It's much easier when you look back and say, I should have bought Nvidia at 88. Well, I bought Nvidia at 88, but the only problem was I also bought it at 98 and 107.
Right. Right.
So,
good point.
How do you know? Like at 107, I thought it was cheap. At 98, I thought it was cheap. At 88, I knew it was cheap, but at that point, you're already locked and loaded. So it's very easy in hindsight to mess up your head and think, oh man, anybody knew you got to buy it here. But I'm telling you, a week earlier, I knew you had to buy $10 higher. So it's not nearly as easy as it seems. I'm like Tony. Right. I do not let that stuff beat me up. I refuse to.
You can't. So the big question I have here, because we have just about 90 seconds before I have to get to my friend Jamal here, is since you were a truck driver in New York City, how did you not know that truck drivers got paid by the mile?
Because I didn't.
Oh, you got paid by the load. Never mind. Gold just sold off a little bit, Sosnoff. It was down 60 just a minute ago. So I closed my Broken Wing Butterfly for $1 overnight, Sosnoff. That's all I'm going to say.
I was in high school. When I was driving the truck, I was in high school. I graduated high school early, and then I drove the truck in New York City. I don't think they paid high school kids by the mile.
Yeah, whatever. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with This Week in Stocks. Jamal.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend. You know what that means? On this Al Pacino's 85th birthday. That's right, The Godfather, Serpico, Dog Day afternoon. Scarface, Scent of a Woman, Carlito's Way, Heat, The Insider, and Donnie Brasco. Happy birthday, Al Pacino. We got my friend and fan favorite, that's right, Jamal in the house. How are you?
What is your favorite friend? What is your favorite Al Pacino movie?
First of all, I'm impressed. I mean, he's definitely Italian because he named all of those. He wasn't looking down at a sheet or nothing.
No. He read every single one of those off. Trust me. Couldn't do that in 100 years.
I don't know. His eyes are straightforward.
What are you kidding me? Come on, man. I know this guy for it.
Sazonov knows his adversary too well, Jamal. Sazonov knows his adversary too well. Yeah, he knows it.
What's the favorite? Come on, everybody, tell me what's the favorite.
I would say, obviously The Godfather is the best movie, but I would say for Al Pacino, Serpico was really a moving movie for me.
You know, Serpico's a true story.
Mm-hmm.
Yeah, of course I know it's a true story. Yeah, absolutely.
Yeah. Was that cop in the city or was he in Brooklyn? I don't remember.
I thought it was Manhattan, but I don't.
Manhattan. Manhattan. It wasn't in Brooklyn, but it was a very moving movie. It was good. I have to go with that.
Dog Day Afternoon was good too.
Dog Day Afternoon was great. That was in I believe that was in a bank in Brooklyn.
It was a bank in Brooklyn.
That's confusing.
Yep.
Yeah, I'd say Dog Day Afternoon. What's the one that he did? I don't know. It's not like the greatest. It's just something sentimental for me or whatever. Maybe it was time when I watched it. What's the one he did with Ellen Barkin when he's the cop?
Oh, when he pulls her over? Is that? No, that's the different movie. Never mind.
No, it's the one where this person, they found this person who's murdering people, and this guy got murdered by this lady, a lady of the night, and they start. You guys never? What's the name of it?
No, I've seen it. I know exactly what you're saying.
Yeah, I'm blanking on.
Who was it with? I'll look it up. Al Pacino and who?
Ellen Barkin. It was him and Ellen Barkin. It's like and it plays that song. Come with me, Sea of Love. That's what it is.
Sea of Love.
Yeah. That's I don't. Something about that movie.Maybe it was at the time that I saw it, but that movie, I love that movie.
You're just an Ellen Barkin fan.
Wait a minute. 1989. How old were you? How old were you in '89?
I was 13.
Yeah, I understand what it was.
You know what I mean?
Yeah. Mm-hmm. I got it. You thought life was going to be like that.
I thought it was. I clearly thought it was. Let's pull up the slides and talk about this week in stocks. Clearly, is this the indicator that everything is fine? We're doing this week in stocks. I didn't want to do it 2 weeks ago. I thought I was going to scare the people. I thought I was, put everything that I was going to put up. But it seems like things have calmed down a little bit. They're showing signs of walking things back. White House is walking back its aggressive stance. They're talking about could cut some tariffs on China in half. Who knows? It does seem like this has mostly been a ploy, right, to get people to renegotiate. We'll see how it plays out. Mm-hmm. China apparently has warned other nations not to strike trade deals with the U.S. at its own expense, so they're working a backdoor way to this thing. Is it buy American now? Treasuries are up second week in a row. Volatility's subsiding as the tariff talks died down. Is that the cue that maybe things are sort of calming down and volatility's coming together when they're not selling treasuries as much?
Well, I think that time, I don't think there's ever been a market period where we haven't seen that just letting some time go by pretty much normalizes everything.
Yeah. Gold, crazy run it's been on. That touched that 3,500, immediately retreated. It's down over 5% at this point. Dollar's bouncing back. The thing that's really interesting to me though is that VIX is still in backwardation. This is the fourth straight week, even with VIX at 4-week lows. So now VIX is yesterday was the lowest close since the beginning of the month. VVIX is still over 100, and VIX futures are still in backwardation. So that's the one thing that we're still holding on to. You know what I mean? And they're still hanging around with.
Well, the reality is that volatility has been heavy relative to the size of the moves. So no matter what we want to think, the volatility's still been understating the size of these moves.
Yes, it has been.
That's why the VIX is still in backwardation.
That's right.
Yeah. Historical vol is still kind of elevated at this point in time, even though implieds have pulled back some. Let's move to the next slide. You're still able to kind of get paid a little bit now, though, of volatility, I would say. This is one of the ways that I like looking at volatility. We can look at VIX. We can look at VIX being in backwardation. Those are interesting as well. I always pull this chart out because it's that ratio of VVIX to VIX, right? And so if you look on average, it's probably about 5.8. Low volatility environments, 2017 is a good example of that. This thing was 10, right? And it's simply just dividing those two by one another, right? As of yesterday, it was 3.82, which is fairly low. So point being, even though VIX is below 30 now, right? Somebody could just come in and say, oh, VIX is below 30. Things aren't as crazy. I think when you couple the fact that this ratio is still fairly low with the fact that we're still in backwardation, it's just something to consider, right? Another 150 point move to the downside. And not only are we still in backwardation, but VIX is probably back at 30. So just keep that in mind. Let's move to the next slide. This is one of the more interesting charts to me. Looking at the dollar and the 10-year yield. Most of the time, this is kind of floated together, right? And we've seen some deviation more recently. Dollar's gotten whacked, which is, if I would have told you last year, dollar's doing what it's doing, you'd be like, oh, well, stocks are all-time highs, and it's just not been the case, right? And just watching this thing right here, something was breaking for a little bit when this ratio was really, these two were not really on the same page. So you kind of wonder, are they going to have to raise rates at some point to keep the dollar from falling? We haven't seen any kind of discussion about rates having to go up because of inflation or if these tariffs are inflationary, all this stuff, right? So this is just kind of interesting. And I think this is a ratio to watch for fear as well.
Yeah, I don't think. I think you have to watch the bonds. I don't think the dollar is going to be what moves rates at all. I think it's all bonds.
Okay.
I don't mind having a watchful eye on the euro though, and the dollar. So I hear you here, Jamal. I hear you.
They've been making. You talk about the euro. It's a good point. They're making huge moves. The euro, some of these other currencies, and there's a lot of volatility in the currencies right now too. By the way, keep that in mind. Let's move to the next slide. So this is just a pretty good chart to bring up. This is, and I think, something for a lot of people to keep in mind. You talk about, Tom, how things calm down eventually. And I've seen a lot of different charts talking about further out in time, 6 months, a year. Obviously we trade in a medium range, but for people to keep in mind too, if you have a long-term portfolio, something to keep in mind is how the response to the response for the S&P 500 over later time periods. So this chart down at the bottom, let's start there with the purple. These are the dates of the S&P 500 first closing in correction territory. So May 20, 2010, August 4, 2011, so on and so forth. And the percentage is the return on the 12 months following it hitting the correction territory. So 12 months after May 20, 2010, we had a 24% return for that 12-month period afterwards. And the only time we didn't have a positive return was in the 12-month period after February 27, 2022. 2022 obviously was a rough year. It just so happened, I guess, a year forward, we were still in the red, 7% in the red at the beginning of 2023, but eventually we bounced out of it. So year out, if you're looking to buy stocks, just keep that in mind. If there's some stocks I'm sure have gotten to your level that you like, you feel a little comfortable buying stuff further out. Just be aware of that.
Yeah, we were kind of making that assumption too. Like Tom said a minute ago, buying stocks low and then buying them lower too. So you got to be careful here, by painting, trying to paint the bottom, but you nibble, you go slow.
Yeah, that's the word. You nibble.
Yep.
Let's move to the last slide. I think this is one of the quieter things in the week because it happened on a Sunday of the week where we had, Good Friday, et cetera. But Capital One agreed to buy Discover for $35 billion, largest credit card issuer by loan volume. Tesla rallied on weak earnings numbers due to Elon saying he's going to spend less time with Doge. Oklo, which I know is a stock that people love to trade, and talks to supply energy to OpenAI. And I guess Sam Altman stepped down his chair for whatever, because there's always been something between him and OpenAI and Oklo, whatever. So earnings next week, we got GM, we got Caterpillar, PayPal, Microsoft, Apple, Meta, just to name a few. It's going to be a busy week, actually, because you got this core PC price index on Wednesday. That's the Fed's preferred measure of inflation. You got GDP coming out on Wednesday. I don't know. I don't think the market, that doesn't really matter as much, I would say, unless they just say GDP is completely way lower than they expected. And then we got a jobs report on Friday. Research, April 23rd, OJ, Trade Smart with Ratio Spreads was a good one. Check it out. Happy birthday to the Godfather.
Happy birthday indeed. Starting off, even the S&P is down 7. They're at the higher end of their range so far this morning with a very, very tight range, really going nowhere. Please tell me which way the market's going to go today, Saz.
Yeah.
I made the call yesterday, which I thought was very good. It looks to me today is going to be dead, but I thought higher opening, you sell them. Now you're going to have to wait for a bounce to sell them. I mean, the challenge for the market this morning is you've got Apple under a lot of pressure. You got Google higher, Apple lower, and I think it's going to be a little bit of a tug of war this morning.
You are correct. Apple trading 205.5 or so, down around $3. We're going to take a quick 90-second break and come back. We got the opening bell. Jamal, thank you so much for your time. We'll be back in 90 seconds. Tasty Live. Stephen and Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell. Even the S&P, Sadnov, still red, but only by a skosh, down 4. Gold just sold back off again at down 62, trading near its lows. NASDAQ down 37, and the Russell continues to be the weakest in the group, down almost 17, the Dow down 103. Google had, Google beat numbers, I guess. Google's higher, 165, up around $5.50, $6, where it's been sitting for most of the morning and night. Apple, on the other hand, is down on the other side, down around $3 or so, 205 and change. Some of the other commodities that are moving, bonds up 22 ticks, trading right on their highs, up 115.28. Oil down 52 cents. And the euro, which we've been quoting ever so slightly most of the days, hanging steady, basically unchanged. Sadnov, Intel was the other earnings play. It's to the downside again. Intel getting interesting under $20. What do you think?
Intel is never interesting. It doesn't matter where it goes. Honestly, it's not interesting. The other stock that's up big this morning is Meta.
Meta's up big every morning, Sadnov, but not this year. It used to be every day last year.
Yeah, it's up. It tends to do what Google does, so they're in the same kind of ballpark. But yeah, Intel. I mean, yeah, I can't call Intel interesting. I can't say it's interesting, just because I feel like it's been trading $20 for the last 10 years.
Sure. I get that.
I mean, I think Intel's the kind of stock where you just have to sit there and stay long, and then one day it'll be 27 again. But between now and 2030, when that happens,
just because the price is low and low relative, it could go much lower. But you exactly. Have to be somewhat long it than somewhat short it, right?
I mean, let's face reality. Intel is the Ford of chip stocks.
That's a good way of saying it. It's a good way of
saying it. So if you love Ford, we have certain stocks.
If you love trading Ford, you're gonna love trading Intel.
Exactly. And if you love, if you're in the airline business and you love trading American Airlines, then you love Ford and you love Intel. That if that's your portfolio, you might as well buy telephone and just call it a life.
Or lack of. Yes.
Just pack it in. Go for it. You got there's your 4 stocks.
You're funny.
Yeah. I mean, we don't. I got one Intel position on. I'm short the 19 puts. I'm trying to. I take it. Oh yeah. I'm short the 19 puts in May. Mm-hmm. I think it's going to be a wash, but who knows? Maybe I'll lose a little bit. Short some 24 calls too. Those will be obviously a small winner. But that's about it. Big positions in Google. The question is, in Google, how much does June premium come in?
Man, I think it's got to get squashed. I mean,
June?
Yeah,
I mean, I would
50 some odd days away. You're saying, yeah.
I mean, it has to come down.
I don't know. It's got to come down 3. I think 3 handles. I think you'll see it. It's 39, maybe 36 and change.
Yeah. So I'd like to see some June strangles, the wide June strangles I sold, drop into the 70 cent range from $1.20, maybe 80 cents. If we can make 30 to 40% on those, would be nice. But we'll see. That's my big play on the opening. Is just cover some Google.
Dare to dream, Sadnov. Dare to dream.
Dare to dream. Let's get this.
You still got 2.5 minutes to go, Sadnov. So you're gonna have to wait. You're gonna have to wait your turn, Sadnov.
I mean, nothing says Friday morning like an unchanged opening. Last night, they're up 30, they're down 20, and then when we open, they're unchanged.
Yeah, place your bets, Sadnov. But we've had a nice rally off of the lows back to the mid-range of where we've been, I guess, from March, late March till now for the last month or so.
Yeah,
it's been quite a ride.
All ugly this morning is gold. It's about to go down $70. Gold could go down any one of these days. Gold could be down 200. I'm telling you.
I know that's what you've said. I'm the world commodity trader, but I've become a little bit of a gold guru. Off 2 option trades today, Tuesday and Thursday, both closed within 24 hours. Getting the direction correct, Sadnov, is a beautiful thing.
Yeah, the day I call you a gold guru will be hell will be freezing over. I promise you.
Well, it's a small study set of just 2 trades, Sadnov, but I am 100%. Just saying, numbers don't lie.
An awfully small sample size. Yeah, but down 70 early is not exactly going to get the
juices flowing for the for the gold bugs.
I'm just rolling down calls. I've rolled probably down 4 times already today. I got to roll some GLD.
Keeping the dream alive.
Keeping the dream alive. I mean, the gold silver ratio has got to be really good today. I don't know. I don't know where it's trading. How much time do we have? I'll check.
You've got less than a minute.
Yeah, I don't think I have enough time to figure it out. Where's gold trading? It's
I can give it to you. Gold is trading 32.81.
Yeah, silver.
Silver's trading 33.15.
Ooh, 98.97.
Under 100.
So the last couple that we did over 100, 102 and change are pretty good, but we still have some on down in the low 90s. So we have to battle all the way back.
Again, that's the opposite of the stock market, right? That relationship, short gold, long silver, has gone to all-time highs. But when do you get short that? I mean, was it at 104 or was it 94? Right? I mean,
exactly. You have no idea.
Yeah. Right.
At 94, it looked rich. At 104, it looked richer.
Right. Yes. This is
all right. Let's get this party started. I need to hit the bell. Hit the bell.
There you go, my friend. I hit it for you. I hit it first. Even the S&Ps turned green on that side, up 3. NASDAQ down 12.
Yep. I'm trying to see what we got here. What we got, boys, girls, everybody.
Ladies and gentlemen.
Yeah. Let's see about Intel's not exactly what I wanted. Let's see, Google.
Let's take a look at Intel. Intel down $2.13, a little bit lower than where it was pre-market. Google, would you take a look at that? Up $4.77. Sadnov, gotta help. Gonna love it.
Google, not bad. I mean, looking at these spreads in there, they came in pretty good. The ones that were $1.20 on the close. Let's see.
78. It's what you wanted.
78 cents. Not bad.
Mm-hmm.
Thank you, Google-licious. We sold some strangles in Google. They were about $13, 13.5. They're trading for $11.25. It's not bad.
Beats a sharp stick in the eye.
Yeah. Take a fill, and we sold some naked puts. Now, the naked puts are obviously going to be your best bet.
Mm-hmm.
And we're going to cover those.
That's all direction.
Well, it is 8:32, and we're done.
No, you still got Intel. Did you get Intel? I don't think you did.
Oh, I've been saying we're done with Google.
Oh.
Google be schmoogle, all done. Intel, let's do Intel, and we'll be done with our... Intel's down $1.75.
That's better than $2.12 for you.
We're going to buy back our naked short calls. Those are obviously garbage. and bought back the calls, and that leaves us short the 19 puts. Let's take a look at these. Yeah, we're down a little bit of money. So what do you do against the 19 puts?
You're in. Are you in? What month are you in?
I'm in May.
May. You sold the 19 puts. A guy like you, well, markets are okay. 10 cents wide. You probably sell 21 calls and wait a little bit. Look to close it today.
That's exactly what I'm going to do. Mm-hmm. Sell the 21 calls. Let's say
they're 55.65.
Let's say 60 cents.
Let's try 60 cents.
All right. Let's say 50.
You're going to go down to 59 and get filled.
58.
58 is correct.
All right. So now I'm short the 19.21. And we're dead smack in the middle. All right. Intel turns out to be a scratch. No, tiny loser. And
at the moment, Sosnoff.
Tiny loser at the moment. And Google, big winner. One of our best. I would say that earnings continue to be very good this cycle. Very, very good. The big ones, Google, Netflix, Tesla, they all paid off big time. And we're out of Google. Now what? What do we got? What do we got tonight, earnings wise?
Nothing. Friday to Monday, typically nothing. South enough. You got the beautiful weekend coming.
Also, you had Slob. We didn't trade it.
Yes, we did. SLB, also known as Schlumberger, the earnings slayer, said down 93 cents.
Schlumberger. Down 93 cents. Okay, let's take a look and see if we've got any other problem children today. Let's see, you problem children. Where are the problem?
Well, let's see what's moving. I could do that for you, Sadnov. To the downside, well, obviously you have gold down $6.67 on the GLD. Costco down $3 and change. Lulu down 2 and change. Pretty much an unchanged market here, with Apple only down $1 now. Sadnov, Apple's rallied about $1.50 or so off of its lows. On the upside, you got Meta up 11, MSTR up $9. Netflix, a stock that never goes down, Sadnov, up $6 and change to 1,102. Reddit also up $5, Coin up $2.80, and your beloved Boeing up $2.75. Tesla up $2. And the market turns green.
All right. That's a good opening for the good kids today. We'll take it. I am ready to do a little fast market.
Let's do it. We'll take a quick 90-second break. We'll come back with your fast market trades right after this.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Beth, I forgot you used to go on the road.
Oh, yeah. She was on the road for 2 years.
And then she had the Bellagio written into her contract?
No, but it was, I think, Beth, were you at the Flamingo with us?
Never. No, we would just go there for dinner.
Don't worry, Nikki. They put me in the Barclays across the street.
You're a camper. You could rough it.
Yeah, you're a camper.
Right?
Now.
Yeah, you're a
camper guy.
You're a camper.
Hold on, honey. You're a camper.
Oh my God. Is there anything up? Don't stand up. Is there anything up there?
I have no clothes on underneath my shirt. I'm not in the office.
Oh no.
Can you put that leg up again?
No. Do not.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. That's right, with Fast Market. That's right, Sadnov.
Huh?
That's right, Sadnov. We're ready.
What do you think here so far?
I've been wrong since yesterday, Sadnov, so I continue to be wrong today. Volatility slightly up going into the weekend. I get volatility being a little bit bid here. Market being a little bit of a mixed bag of tricks with even the S&Ps and NASDAQ up and Russell and Dow lower. I am on the wrong end of the curve, Sadnov, so I don't know. I'm not getting long. I'm not big short. I suck.
Oh, well, I mean, that's what it says. That's what it says on your Glassdoor.
No.
On your Glassdoor review, that's exactly what it says.
You can suck it, fruitcake. I mean, I had the deltas when we rallied, and I let them out, and now I don't have them, and I'm feeling left out. So
I don't like the way you're talking to me. You're not going to like your next Yelp review. That's for sure.
Oh my God! My driver was not very happy when he delivered my food. That's going to be my next Yelp review.
No, you're not going to like your next Glassdoor review either. I'm telling you that right now. Somebody wrote to me. It was really funny. It was cute. They go, Tom, you should
You should slap that guy you work with.
No. That's what I said. He's like, have you ever read some of the things that people write about you? And I go, why would I ever do that? Like, why do I want to know? Like, anybody that reads stuff that's written about you, you're like, are you out of your mind? Like, I don't care. You know, I go, did Tony write it? They go, I don't think so. I go, no, I don't care. I go, I don't read any of that stuff.
Usually mine are worse than anything that anybody else can do. Usually.
Yeah. Somebody, one of Corinne's friends sent her something that somebody wrote about me, you know, and she's like, and her friend's like, is your husband really like this? And she's like, she sends it to me. She's like, oh, I'm panicky. You know, like, look what they wrote about you. I'm like, look what who wrote? Somebody in their basement, you know, like you can't let this stuff, like, you just, it's the age of the anonymous internet. I mean, who cares? I don't care. Write whatever you want. I don't give a crap. Can't read that stuff. If you read that stuff, you'll go crazy.
True.
My favorite is I love when we have Rising Stars on, because I love our Rising Star segment, and so many people watch it all over the world. Like, you know, millions and millions and millions of views on Rising Star over the last how many years, millions of views.
Yeah.
But for a lot of the Rising Stars, and they're really generous. They fly to Chicago on their own. They take their time out of their schedule. They're great. Okay.
Yeah.
So like it's
bare their soul.
Yeah, they bare their soul. They don't hold anything back. They're totally so honest. And people, you know, but then there'll be somebody, you know, they're not used to people writing about them on the internet, you know?
Right.
So then they'll send me an email like, oh, Tom, did you see what somebody wrote about me? And I'm like, you can't read it, dude. You just don't look. Okay. You know, you told your story. You were totally honest. Don't read that stuff. It's going to drive you crazy. Don't look. And they're like, how do you do it? And I'm like, you just don't read it. Don't go crazy.
So true. Like water on a duck's back.
Yeah. It's just that's it. Just, you know, move on. Okay. Don't worry about it. And don't overthink this stuff. Nothing, honey.
Agreed.
Just a delta here. And I'm going to make one more delta adjustment, and then we can start this segment. I like a little of delta adjustment. All right. What's going on? Anything crazy that I'm missing?
No. So far, you've got basically an unchanged market.
Okay. All right, let's do this. They were just up 10. Now they're down 4. You know.
Yeah.
This is what we deal with all day long.
Markets are dynamic, Sadlov.
Markets are dynamic. It's made some delta adjustments. We're all good. It's a good morning. Let's go.
Good morning, sunshine.
Let's go. Hang on one second, Beth.
You see, you wanted to get going. Now we can't get going.
Okay. So these are trade ideas that have come into us from viewers all over the world. We have not looked at these yet, just so you know. These are all new to us.
Yep.
Aaron from North Carolina. He's looking good IVR, sell the 1 standard deviation strangle in corn. Now, we already have a bunch of corn positions on Aaron. Let's see.
Now, when you say Aaron, you're just making a joke. That it's not what you really are. Because I get some emails, you know, tell Sas, you know, it's just Aaron. I mean, you always say how stupid Sadlov is on Twitter, but he proves it every time Aaron comes along.
Hey, Beth. Hello, Beth.
Yes, Tom, I can hear you.
That's just wake up. Can you pull the Aaron?
Oh, I'm sorry.
Just
Beth.
pull the one Aaron quote for me, if you could. The video.
I'd be happy to. Tony, you're in big trouble.
Yes.
I am so sorry. I didn't mean to do this.
We'll do it after you finish the trades, okay?
Oh, no, then it won't be timely enough. We need to kill about 6 minutes here by you finding this and getting it on and
you want to do it?
Not making any sense.
Let's do it.
All right, we'll do it when we come back. Okay.
Aaron. Okay, Aaron, we're going to do this. You want to sell the 1 standard deviation strangle in corn. There's 28 days to go in May. I'll probably sell May, and then I will roll it. You know, we'll roll it shortly. Take a fill. We did. Let's see what strikes we did here. Hold on one second.
You sold the 465, 510.
465, 510 strangle. That's the one. That's the closest to 1 standard deviation. I sold it in.
I did the same thing in gold. I stayed shorter dated than normal, just trying to take advantage of the move. I think that's what you're looking to do here too, right?
Yeah, I mean, I just went wide. I'll roll them in another 10 days. We'll roll forward, and move it out. Let's go to the next slide. Ooh, Joe from Portland, Oregon wants to do SoFi. We did trade a bunch of SoFi. Earnings trade. You picked the strategy. I have a custom.
Yeah.
He sold 6 of the 10 puts at June and bought one of the 13 calls. It's funny. I bought SoFi. I was talking about this last night on a webinar I was doing, and wow, this stock's $12.80.
Yeah.
Do you remember where we bought this during the crash? Like $8.
Yep. Yeah,
I bought it
under 10. Yeah, I remember that. I think I started under 10.
No. I sold it back out at 10. We bought it in the morning when the market was crashing. We paid between I want to say 820 down to like 780 or something like that. And I bought it all pre-market and then sold it on the rally. Wow, almost $13. I have not looked at this since we sold it out at $10. Joe, I don't mind this trade, but not today.
Not today, boo.
Not today, Satan, as Vanetta would say. Not with the stock up, almost at $13. I need the stock to come back down a little bit, and I will. Here's my promise to you. When is earnings in here, Tony? It's got to be soon, right?
Earnings in SoFi are coming. They're coming on the 29th. So next week, early next week.
Is that Monday or Tuesday?
Tuesday, it sounds like. But
okay,
it's Tuesday morning, so you'll have to do it Monday afternoon.
All right, so we'll get long SoFi on Monday afternoon because I want to be long SoFi, but I don't want to buy it up here. Hopefully, maybe it'll drop a little bit between now and then. Let's go next slide. I'm with you, Joe. It's just up too much today. Ooh, Hugh from Cedar Rapids. Hugh, this is a stock that I've only traded a couple times, and I'm just going to tell you, I have not had any luck. Now, I know this stock is probably on its butt right now because they're killing. It is. They've myrtleized. Boyle is the leveraged natural gas, right?
Yep. Yeah, that's a tough one to trade, though. I mean, it's a leveraged, isn't it, Boyle?
Yeah, it's leveraged. I haven't done very well in here in the past. It's got 116% implied volatility. It's
down near its butt. I mean,
this
would be a short-term trade too here, Sadna.
Yeah, and it doesn't trade. Trades a little. I shouldn't say it doesn't trade. Trades a little. So what does he want to do? Broken wing call butterfly. No, actually, I would rather do a put butterfly.
You'd want to do
I see what he wants to do. He wants to buy where's the stock?
The stock is 47.18, 47.20.
He wants to buy the 40s. We don't usually do it this way. Buy the 40s, sell the 47s, buy the 50s. It's a little bit of a different way.
Yeah, so he's buying more delta than he's selling. He's buying a $7 wide call spread by a $3 wide call spread.
So if you do the 44, 47, 50, it trades
44, 47, 50. That would be equal.
That's just a regular butterfly, right?
Yeah.
Okay. So if I want to do this as a broken wing, which he wants to do is pay a debit, right? The question is how wide he
wants long delta on here. He's very bullish, not just neutral. He's bullish. So I like the way he's getting bullish. I mean,
no issue with it.
Right.
Let's see where this thing trades. I'm going to tighten the strikes 42, 47, 50. Long a $5 spread. Oh, that was too easy. All right, let me see something. I'm testing the waters to see. Oops. Oh, that's a mistake.
Yeah, you got filled 12 cents under mid price. That's not usually the case.
Well, when I keep getting filled at better prices, I think I'm putting in the order too high, right?
Probably.
Okay, so I'm testing a couple of.
Here's your before you keep doing this, can you wait a minute? You're buying a $5 wide call spread by a $3 wide call spread. It can only go to $2, right?
Yeah.
Max is $2. So you got 70 cents you're making here on this trade. I mean, you're kind of being a Johnny.
It's okay. It's his trade, not mine. Talk to Hugh.
Well, he did the 40 call. Like he wanted to buy the 40 call and sell the.
All right, I did it at a bunch of different prices because I was obviously too high at first.
I mean, he wants to pay $2.40 for something that could be a $4.50 profit. You're buying something at $1.20 and 30 and change that can go to $2. You're a Johnny.
Be nice to Hugh. Be nice to Hugh.
We're being nice to Hugh.
Oh, Hugh, I think, is a stud.
Tony's being mean to me, Beth, and I want him punished.
Tom is being a Johnny, like a complete Johnny.
$1.26, $1.27 total. We'll see what happens. Thank you. We'll try it, Hugh. I'm in. I don't love this trade, but I
can't even feel you. You're so small on this trade.
LULU,
Omaha.
Sean from Hong Kong. Don't worry, Beth. I didn't play around with him. It's
that's why it was small. Go ahead. Look at Lulu.
He wants to do a Lulu Jade Lizard and manage the position before earnings. Oh my God, Sean, you're killing me. What do we got in Lulu? Lulu. We have we currently have in Lulu.
Give me S&P done 18.
What the hell do we have? In Lulu, we're short an inverted strangle. It's definitely not working for us. But it would have nothing to do with this trade. So what do you want to do, Sean? He wants to. Sean wants to sell the June 240s. Is that right?
That's what it looks like.
Sean, I don't have it. Oh, sorry. LULU. I switched my screen.
What'd you have? Oh.
The June. What the hell? June 240s. Got it. He wants to sell those, and he wants to sell the 320, 330 call spread, right?
That's correct.
320, 330 call spread. And this trade is for 1127. And if I move the put strike down one, it's 887. I think you move the put strike down one.
Huh.
And 887-ish. I don't know. We're going to do a little price discovery here. You guys are killing me today.
Oh boy, not enough price discovery.
886. All right, we're going to try this again. I'm doing a little price discovery. 888, nothing done. 887. Well, I guess 886 is not that bad. All right, Sean, you're in the game. 886. I'm trying to do more. Nothing done yet. Nothing done. Still working it. Let's go to the next slide. Tammy from Nashville. XSP. Sell the 0-day at the money put. What do you know, Tammy, that I don't know here? You just want to see me sweat it out today? XSP. I won't sell the 0-day at the money put, but I will just mess around with you and sell the 0-day expected move put. What's the 0-day expected move in here? $5?
That's correct.
So 246, we'll sell the 241s, and we'll go to the upside and sell the 51s. We'll sell the 52s. And we'll do that spread. It's going to trade for, by the way, if you don't see huge volume in the XSP, 151. It still trades just like the SPX. It's fine. You can trade it. It's cash settled. There's nothing to worry about.
Right.
I mean, you worry about the trade, but there's nothing to worry about.
Sure.
Yeah, it seems rich. We sold the Strangle, Tammy. 0 days. We'll see what happens later on for 151. Let's go to the next slide. Lloyd from Portsmouth.
Whatever you say.
Well, I thought it was going to be Portsmouth, but it's Portsmouth, the UK. I do not know where that is. He's looking at telephone. Sell the 45 day.
You were just poo-pooing telephone a moment ago, Sadnov.
I know.
I mean, just because telephone's gone nowhere in 5 years, it does pay a 4% dividend.
The irony here, sell the 45 Delta 28 call in June, filled at 95 cents, looks ripe for a down move. What do you know about this, Lloyd? Ripe for a down move. What the hell is happening in telephone? T. I haven't traded telephone in so long. What does he want to sell here? He wants to sell the June 45 call. 45? Oh, sell the 45 Delta 28 call. We can try. 77 filled. All right, we'll see what happens. Let's go to the next slide.
Okie dokie.
Mike Y wants to trade Netflix. NFLX. My issue here, Mike, is that the vols come down a lot, but still over 20. It's 20 what? 29? Yeah, still okay. Mm-hmm. Let's see. What do you want to do? The June 970 stocks had an unbelievable run. 970. Oh no, 980 you're selling. 970 you're buying, right?
Yes.
And what's he doing on the call side?
It looks like he's doing 1240, 1260.
1240, 1260. So you're doing $20 wide on the call side?
That's what it looks like. That's correct. $10 by $20 because he's slightly bearish.
$10 by $20.
Right.
Okay. So another one that this is not easy to figure out what price this trades at either.
Yeah.
I'm doing a lot of price discovery today.
Oof, that was too easy. Not well.
That one, what price is that? $4.98?
That is correct. Credit. On a price improvement.
I don't know how to. I mean, these aren't easy, you know. Let's try another one. Okay, so I'm just trying to get it down to I'm trying to do some price discovery before I put in kind of real size. All right, so I'm not that far off. Maybe a couple pennies. All right, we'll work some more. Next up. Thanks, Mike. From Goodyear, Arizona, the model ? Tesla. Mr. Musk coming back to Tesla. He and Tesla will thrive. You got a lot more confidence than I do, model ? Put or put spreads in June. Ooh, no. Not with the stock.
Never fade a superstar, Sadnov.
Yeah, you can only fade superstars that have crashed and they continue to crash, and he will continue to crash.
Sad enough, letting your brain get in the way of reality.
Well, my brain seems to work still, so I'm going to say I'm not touching this trade. Now I will sell puts in Tesla in a down move. I've been long Tesla until yesterday, but I'm not going to sell them here on an up move. Let's go to the next slide. Riley, another Londoner from Hims. I swear to God, I would never trade HIMS again. Tony, this is your favorite company. What?
Hey, no shade, Sadnov, no shade. I mean, everybody needs a little help sometimes. You're not help. You're not HIMS worthy.
Amazing fundamentals. I see HIMS having another great quarter, reporting soon. I see it going to 35 plus earnings plus name.
Say what you want. The stock's on its butt. $27, $28 just under. The stock trade up to 67. Sound off in February. It's back near its lows only in December. 27 and change. So I understand why he's a little bit bullish here, just by price.
Wide markets. Earnings coming up. I'll go 16. Ooh, boy. I was going to say I'll sell 16 Delta puts. I'm not going to buy calls.
Mm-hmm.
But these markets are wide. The markets on the 20 puts are 76,117. Like what price you put it in at? What price?
This is a tough one. I mean,
$1.
I'm gonna say $1.03 is not enough credit.
$1.03. Well, the market's 76,117, and if you're filled at $1.03, they're obviously putting prices in to attract you. I mean, I'm just trying to. These are tough. I'm trying to do price discovery.
Yeah.
Well, $1.03 we got filled. $1.05 we got filled. So the real market is 105, 106.
116 bid, Sadnov. 116 bid.
Are they?
Mid price is 113.
All right. Well, there you go. I tried. All right, Riley, you took me down, dude.
You can't even do it right when you got HIMS on your side. Unbelievable.
HIMS on my side. What's from Singapore? We're going London, Singapore. Gold. Given the correction in gold, expect GC to be range bound for the near term. Might be a good idea to steal the 16 Delta Strangle or $50 wide iron condor for May or June. Here you go, Pixels. I am short every freaking strangle imaginable in gold and GLD. I have them on. It'll make your head spin. So the answer is I don't need any more. I am locked and loaded in GC, GLD, and the gold silver ratio spread. So we are good to go there. Let's go to the next slide. Next slide, please.
Next slide, please.
Oh, that's it. Okay, what do we got?
You did it.
In corn, we sold a 16 Delta Strangle. In SoFi, it's up on the day. We're gonna get long it on Monday afternoon for Tuesday, but not today. In Boyle, we did a broken wing call butterfly in the money, so we're playing the upside. There's a few people that like to trade that way, and it's not usually our style for broken wing butterflies, but we did it.
Yeah.
In Lulu, we did do a Jade Lizard. We're filled in there, and we did the upside Jade Lizard. In XSP, Beth, we sold a strangle, not a put. We sold a 0-day strangle. In I'll let Beth change that. 0-day strangle, perfect. Sold strangle. In telephone, we sold a naked call. In Netflix, we did sell the iron condor. Yes. In Tesla, we did nothing. In HIMS, we sold no, not naked call, a naked put, Beth.
Naked put in
HIMS. And in GC, we did nothing. So we did 7 out of 10 trades. But I should say, we already are long GC. We already have a lot of strangles on in GC. So it wasn't like we disagreed. We have that position on. It's one of our largest positions right now.
Keeping your size in check, Sadnov. Good job out of you, my friend. You know what else we're going to do a good job with? We're going to take a quick 90-second break. Market's basically unchanged, oscillating around unchanged. NASDAQ just turned green. Even the S&Ps are down 6. Russell's down 15, the weakest of the group. And the Dow is down small. We're going to take a quick 90-second...
Stop texting me. You're not getting any of my XSP trade, just so you know.
You're going to be back in 90 seconds. You got more Tasty Live after this.
You cannot have it. It's mine. Mine.
So selfish.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Beth, I forgot you used to go on the road.
Oh yeah, she was on the road for 2 years.
And then she had the Bellagio written into her contract.
No, but it was. I think Beth, were you at the Flamingo with us?
Never. No, we would just go there for dinner.
Don't worry, Nikki. They put me in the Barclays across the street.
You're a camper. You could rough it.
Yeah, you're a camper
right?
now.
Yeah, you're a camper
guy.
You're a camper.
Hold on, honey. You're a camper.
Oh my God. Is there anything up? Don't stand up. Is there anything up there?
I have no clothes on underneath my shirt. I'm not in the office.
Oh no.
Oh no.
Oh, can you put that leg up again?
No. Do not.
Oh.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Rolling to the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. That's right, with a market measure, followed by our friend, Mr. Scott Sheridan, who's going to take your phone calls at 855-238-2789 or 855-BE-TASTY, just in about 15, 20 minutes, Saz.
All right, boys and girls. Well, before we get into this market measure, which is a really good one, it's heavy, so you got to get your helmet on. But before we get into this, just a quick little reminder that the Bat and I are going on the road together. And our first show is coming up in Atlanta in less than a month. And so if you're anywhere close, we would love you to come on out. It is Friday morning. There you go. We'll be at the Buckhead Theater in Atlanta, Georgia, Friday morning, May 30th. Now, I know you're going to think, why are you guys doing it on Friday morning? Because it's a live trading event. It's called At Work at 11. So you get to your job by 11 o'clock. But I mean, most of you, don't have jobs. We're all living in our mom's basements, running around naked. I got that, but you can't do that at our event. So, in case you have a job, or whatever, we'll be at the Buckhead Theater, Atlanta, Georgia, May 30th. Doors open at 8. Show starts promptly at 9. It's over at 10:30. It's all
beautiful.
Free. It's all free. In, out. You're going to learn so much. In an hour and a half, your head's going to spin. And it's just the Bat and I. So we really hope you can make it, and we're looking forward to it. You can sign up at tastylive.com/events. We have 10 more shows coming up after that, so they're all over the place. But this is the only one in the U.S. you can sign up for now. You can also sign up for London and Milan, Italy. So I will be doing London with the Bat. We'll be in London together, and then I'll be in Milan with Dylan and this Scottish guy named Rich. So
this guy you got a man crush on. You got both your man crushes there, Sadlov. Who's gonna get to who's gonna get to sit next to you at the table?
I let them
you guys here. Just pardon me for a minute.
I let them take turns.
Breakfast. One does dinner, the other one does breakfast. You're a giver.
I'm a man of the people.
You're a giver.
And then after we get back, you can sign up for Denver, Chicago, San Francisco, New York, LA, Charlotte, North Carolina, and Austin, Texas. And then if you don't like us, you can sign up for Mike, Nick, and Katie and Ryan. They're doing a whiteboard tour. They'll be in Washington, D.C., Seattle, Washington, Dallas, Texas, and San Diego. And then if you don't like them, Dr. Jim, July 13th in Boston.
If you don't like Dr. Jim, I understand.
October 19th in Detroit and December 7th in Tampa. You sign up for all these at the same spot. If you don't like any of us, then don't come. These are fun events. They're all free. We pay for everything, and they're crazy expensive. So we would love you to come out and support the Tasty team. And we're doing them for you guys. So we do this all for our customer base.
Let's do it.
Yeah. So our customers send us a lot of emails. You see them from Confirm and Send to the stuff, the trade ideas and all this kind of stuff, and a lot of questions and things like that. And in the process of that, they also send the research team stuff. We forward stuff to the research team. So one of the questions, and you guys are going to pay for this question, one of the questions came in and said, Beth, can you bring up the first slide? It said, I really want to learn more about Kelly's criterion. And what is that? Because I hear about it, and what does that mean? What's the point? What's the formula? Is it a model you guys use? You guys have talked about it on air. Jacob's done a piece on it before. Jamal's done a piece on it. Dr. Data's done a piece on it. Julia's done a piece on it. So what exactly is this? So we're like, research team is like, okay, we'll put together a piece. All right, Bat, get your helmet on, because this one, it ain't easy.
All right, so let's do it.
Imagine 3 gamblers with $10,000 each playing the same game where they have a 60% chance of winning, and they receive even money on their bets. After 100 bets, gambler A bets 50% of their bankroll each time, gambler B bets 20% of their bankroll each time, and gambler C bets 10% of their bankroll each time. Which strategy do you think would lead to the highest ending bankroll? It's not a trick question, but it's a math question.
Sure.
Is there even an optimal strat? Does an optimal strategy even exist?
Gambler A bets 50% on their bankroll each time. Gambler B bets 20%. Gambler C bets 10% of the bank. I'm going to go with C, but I don't know.
Yeah, I mean, there's no way you would know. It's not like, it's not like we don't sit around here and work out this formula.
Sure.
The correct answer is actually B, but there's no way you would know. It would just be a guess. Me too.
Yep.
Let's go to the next slide. So the answer to maximize our return in this case is B. I knew that because I'm a math genius, but Tony, I'm just trying to make
you looked, okay?
I'm just trying to make him feel better about himself. He has very low self-esteem. The optimal betting size wasn't discovered through trial and error, but through a precise mechanical formula called Kelly's criterion. It was developed by John Kelly at Bell Labs in 1956. The formula determines exactly how much to invest when probability favors you. Perfect for the tasty kind of mentality. Mm-hmm. This approach combines aggression when you have an edge with protection against ruin, because just because you have an edge doesn't mean you're all in, which creates a path towards maximum long-term growth. And so obviously, because of the approach that we take at Tasty, which is quantitative and mechanical and mathematical, we want this. So Sure. Let's keep going. So here is the Kelly formula. It's expressed this way, and we're not going to break this down because we leave this stuff to the smart people at the network.
Because we can't, is what you
we
wanted
leave
to
this.
say.
We leave this to the mathematicians of the network, like Julia and Jacob Perlman, because we don't want them laughing at us. But for your for your engagement purposes and reference purposes, here's the formula. Let's go to the next slide. So this is what we do understand. To determine the optimal capital allocation, and Tasty is all about optimal mechanics. That's what we do. We only need to know A, the probability of profit, and B, what the odds are. And so, that's kind of right up our alley. This approach can be applied to option strategies where the variables are known before order entry. Remember, we know the variables control the stuff you can control.
Sure.
You control your account, control your trade size, control all those variables, control your probability of profit. We're going to use an iron condor as the first example. Next slide, please. So if we have a portfolio starting with $100,000 and only trade one iron condor strategy, what would be the best capital allocation percentage and what would be reasonable odds and reasonable probability of profit? What should we look for? Assume this iron condor has an 85% success rate, which is very high, more accurate than pop, a 15% losing rate, and let's say 3% premium over $1,500 in buying power. Okay, that's just some random numbers there. And again, same formula as we showed on the last page. Let's go to the next slide. So in this case, in this example only, and this is a much higher allocation than we would do, in this case only, the optimal capital allocation percentage should be 10%. Just using that formula, meaning that consistently allocating 10% of your capital to this strategy, remember this has an 85% return rate, can maximize returns over the long term with, here's the key, with 0% chance of depleting the fund. Let's analyze the performance after running 100 occurrences using Monte Carlo simulations, which is what we do on the platform when we give you for example, the P50. We run thousands of Monte Carlo simulations. Let's go to the next slide. That's why Tasty's such a cool platform. So this portfolio should expect to see a 25% final profit over 100 trades with zero chance of depleting the capital. That's the key. That's why we always give you these max capital allocations, because we never want to deplete capital. So the Kelly suggested 10% with a final mean of 125. That's after everything was done. The average drawdown being 35%, and the ruin rate is 0. Now, this is not how we trade, just to be fair.
Right.
But we're just presenting to you why we do the things, why we talk about the things and trade the way we do, and why we use the kind of research that we use, and the people that we use to do that research, all mathematicians. Let's go to the next slide. However, not all strategies can be long-term profitable based on Kelly calculations. So profitability depends on success rate and odds. In general, higher success rates and better odds lead to higher Kelly numbers, indicating the strategy has more edge and traders can allocate more capital accordingly. The inverse is also true, but again, in trading, remember, we can get to 99% if we wanted to, but we don't want to because it's not worth the risk reward. Let's go to the next slide. So if we maintain the success rate at 85%, but increase the odds to 0.25, a new optimal Kelly number rises to 25%. However, if the odds decrease to 15%, Kelly produces a negative number, signaling that the portfolio will eventually lose money. So it really does matter, essentially, what the odds are, because you can set yourself up for an expected negative return, just like if you sit down at a blackjack table, or if you over allocate, or if your trade has too low a probability of profit and you're allocating too much money. Let's go to the next slide. So most professionals don't use the full Kelly percentage, but rather a fraction of it. That's what we do here at Tasty, a small fraction of it. So over or under allocating, then the optimal Kelly threshold can significantly impact the performance and the risk portfolio. Our objective is to under allocate because we feel like that puts people in, that gives people the greatest number of occurrences. But you make less money.
Yeah, that's why I went with the 10%, just trying to throw more occurrences in there. I mean, over time, you hope to get and manage winners, right?
Yeah, but the average drawdown is less, the ruin rate's still 0, and you end up with more winners. It's a slower grind. But our job or our business is to keep people in business. Yep. Let's go to the last slide. So on some of the takeaways here, and this is a really good piece that the research team put together, Kelly Criterion provides a mathematical framework for determining optimal position sizing that balances maximum growth potential with capital preservation. Many traders use the fractional Kelly, 25 to 75% of the calculated value, to accommodate potential risk. Here's the key. Option strategies are particularly well suited for Kelly applications since both the probability of profit and the payoff odds can be estimated before trade execution. Harumph. That was quite good. That was quite good.
It was on something that we use all the time. Yeah, hey, even the S&P down 24, Nasdaq down 51, Russell down 22, as foretold. Sadnov.
Really, you foretold this too?
No, this one I didn't get. I mean, yeah, I don't have long belt, but I mean, I stink. We're gonna take a quick 90-second break, but you know who doesn't stink? Your friend and mine, that's right, Mr. Scott Sheridan, coming up next, 855-238-2789, or 855-BE-TASTY. Beth, please open the phone lines. I was trying to act like Tom. Please open the phone lines. So if anybody
hold on. What about my AA run thing?
Oh, crap, you remembered. I was hoping you wouldn't remember.
Tony, I blame you.
I agree with you.
All right, video's coming up.
No.
Matt, you good?
No.
Yep.
Is this the AA run?
Right.
Be nice.
That's better. Thank you. Now, AA Ron, where are you? Where is AA Ron right now? No AA Ron, huh? Well, you better be sick, dead, or mute, AA Ron. Here. Oh, man. Why didn't you answer me the first time I said it, huh? I'm just asking, I said it like 4 times, so why didn't you say it the first time I said AA Ron?
Because it's pronounced Aaron?
Son of a bitch! You done messed up, AA Ron! Now take your ass on down to Oshag Hennessy's office right now and tell him exactly what you did.
Love that.
He even says the principal's name wrong. It's so good.
It's so good.
Let's take a quick 90-second break and come back. We got more Tasty Live right after this with your friend of mine, Mr. Scott Sheridan, next.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Vanetta, welcome home.
I have been trying to wear this outfit for the last 6 days. I thought I had the next 4 years off, honey. I was looking at property in Boca.
You still get Easter bats. I'm not getting one because we would get one for Nick and Gina and Sasha. They're all in their 30s now, and Chandler's 30. I mean, I'm not getting them anymore.
But no, if you have older kids, it's nice to know that you're thinking of, like, Nikki would love a DraftKings gift card.
But to get him a basket with the stuff hanging out in chocolate.
DraftKings gift card for Nikki would be a waste of money.
No, a DraftKings gift card for Nikki. That's a good basket. And some Zins. You put some Zins in there and some Prime energy drinks. A DraftKings gift card.
I got one of those in the.
Yeah.
Do we record the breaks? Because that would be good. We could do like words of wisdom. We could do like a words of wisdom
there
bomb.
would be nothing good about recording those chats.
Occasionally we leave a mic open by accident.
I know that.
Yeah,
that's always fun. A hot mic. Yeah.
The thing is that I really like is every time Scott comes on, I love it because I know that everything's right with the world when he says, more importantly.
More importantly. I gotta ask a question. More importantly.
That's his favorite catchphrase. And honestly, it's got to be a Tasty Trade t-shirt. More importantly,
I agree with you. More importantly, it's going to have to be a t-shirt. We're going to get one of those made for sure.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
My friend, you know what that means? Time for a little bit more Tasty Live with this man. Tasty Trade World Headquarters, your friend of mine, the very popular, everybody wants to talk to him, and you can too, 855-238-2789 or 855-BE-TASTY, taking phone calls right now, phone lines open, I got 4 or 5 lines open, give us a buzz, Mr. Scott Sheridan from the Scott Sheridan Studios.
Good morning. Are we going to talk about Batman and Robin, or are we just getting right to business? All right, Tom, you like the Bears draft pick. I wanted to talk about it. I wasn't sure. I've heard overall this was kind of a crappy draft. And what's up with Sanders? What's wrong with him? Nothing's wrong with him. I would say what's wrong with the Giants. I would have taken that. I would have taken Shedeur Sanders in a heartbeat. They made the stupidest. Who would they take? Jackson Dart instead. I hate that trade. Yeah, I would have taken Shedeur. He's so much better. He's going to be so good.
Oh, wait a minute. You're a judge of football talent now, too, Son? What can't you do?
Did you just meet me? Of course. Yeah, did you just meet Tom? This is what he does. Like this. Scoop of vanilla, scoop of chocolate. This is it. Like, what do you want to know? He'll tell you the draft order for the second round if you want to know. Yeah. All right, so go ahead.
I would have taken Shedeur Sanders, for sure.
So, who'd the Jets take?
The Giants, not the Bears.
Yeah. My favorite is it doesn't make a difference who the Jets take. They just boo. I mean, for good reason.
I did like the fact that the Green Bay fans were very vocal against the Bears.
Yeah, I didn't watch, but I
it was great. It was great. They booed they booed Roger Goodell nonstop, and then they booed the Bears. You know, of course.
Okay, fair enough. Listen, in fairness, they've owned us for the last 10 years.
Yeah. No, I don't blame them. I don't blame them. But, you know, they're Green Bay fans.
I don't know how we became the best division in football, but we did. So, you know, we'll see. It's going to be good. I mean, what are the Bears still? 8.5?
8.5.
8.5. Yeah, that didn't work out. So that didn't work out so well last year, but we might have to try it again this year.
I think we have to go back to the well.
I think I still have those tickets actually.
I think we got to go back to the well. Yeah,
I think we do. But this time we'll just do it on an app. But you're paying me up front. I don't take credit from you. So if you want in, I need to see cash. Tony, don't you agree?
I 100% agree. 100% agree.
Yeah, because your credit starts off really good until the bet starts to go south.
Do you take
and then
PayPal?
All of a sudden,
do you take PayPal?
Yeah, I'll take PayPal. I'll take Venmo. I don't care. Venmo.
Do you take
what do you want to do?
Do you take stable coins?
No, don't take stable coins. But I will take. I'll take cash, Venmo, PayPal. I don't care. But I know how this goes. I make the bet, and then the Bears are like 2-14, and you're like, no, I didn't make that bet.
I know,
right?
I know. It's right? You can't win.
And then if you do, it's pay daddy, and then it's obnoxious.
You're giving me a bad reputation. This is such an unfair. This is such an unfair.
This is an attack.
This is an attack on my character. I do not appreciate this.
No, it's not an attack.
On a character meter, I gotta go. Go with my friend Scott here.
My character. What?
Go with me.
I gotta go with my friend Scott here.
Now I'll know how the day is really going if Beth wants to chime in. So far, she's been silent, and you two were a little on edge yesterday, so she might be trying to mend that fence. So, Beth, do you have any comments? Here it comes. Absolutely not.
No comment.
See, but you know what no comment means. No comment means she agrees with me. Did Tom get his nuts this morning?
No comment does not mean she agrees with you. No comment means she's trying to get rid of you.
No, what it means she's afraid of you. She doesn't want you on the bad side again. So therefore, she's just not commenting. She's not poking the beast, as they say.
Oh my God!
And you're
Tom
the beast.
hasn't paid his bills, so he has no air conditioning. That's what the problem is right now.
He's got some issues on the home front. He's a little stressed.
First of all, air conditioning is electric. So if you don't have air conditioning, you have lights.
No, it's been disabled. He has no air conditioning.
Wait a minute, by the air conditioning company, they came in and pulled the plug, and you don't know how to plug it back in?
Well, by the air conditioning technician who hasn't been paid.
I made a mistake and used one of Tony's guys again. And in the process of fixing my heat, they broke my air conditioning.
Tony, I have a question for you. Why would you ever refer somebody to Tom? It doesn't. It doesn't go well.
He asked.
The funniest thing is he refers people that have no idea what they're doing. Like, it's almost like he makes up these people. Like, the people that do stuff for him, it's like they've never done anything for anybody else. Like, they're just, I don't know where he finds these people.
Tony, I would take one of your recommendations anytime. I'm sure they're quality people. I'm sure they're nice people. I'm sure they're quality.
They're very nice people.
If you pay them, they do the work. If you don't pay them, they don't do the work.
Tony,
that's the relationship I have with them.
You know, he gave me a landscaper once, and then the guy that came back to fix my heat, I'm like, weren't you the landscaper? And he's like, no, that's a different guy. That's like my cousin, you know.
But wait a minute. I was watching Chicago news this morning. It's going to be a high of 50 tomorrow. What do you need air conditioning for?
No, I don't.
He's fine. He doesn't need it.
I don't need it. It's.
Yeah, but your windows don't open, do they?
I mean, I don't like. I mean, I have my house sealed. It's hermetically sealed.
Right. It's hermetically sealed.
Yeah.
Oh my God.
Yeah. I don't like open doors and stuff like that. No.
It's dangerous.
Yeah.
Fresh air.
It is. Fresh air. It's bad for you, Beth.
Vitamin D.
Yeah.
No.
All those things are bad.
Yeah.
Are you shuffling outside yet? Is it shuffle season?
No, it's not shuffle season. No.
No, but it's defrost your lunch season.
Yes.
Oh no.
Yeah, remember those
COVID
days?
all over again.
No. Like Jenny Craig? Like, wait, what are we doing?
No. I just got stuff to do today. I got guys working. I got stuff doing all day. You know, it's busy.
No. Do tell. Whoa. What's defrosting the lunch? Oh, scallops?
She's just making up. She doesn't know what she's talking about. She's delirious.
Okay.
No,
I guarantee you
I have to defend. I
can hear you.
Beth is factually correct on this. You just don't know, Beth, what's he having? Come on, 7-year-old expired scallops. What are we going with?
She still has drugs in her system from Coachella last weekend. She doesn't know what she's doing.
Oh my God. That's a mother you're talking about.
Wow. Now I know.
That comment?
See, the deeper he digs, the guiltier he is. So you know that.
I know.
Right?
Yeah. He feels bad. I know. It's okay.
Yeah, you do.
Look at
All
the
right.
shame. The shame.
All right,
Totally.
Let's get this. Why don't we get to some business? Let's get.
I'm ready.
To
Let's
some phone
go.
calls. You want to give the number again?
238-2789 or 855 Tasty. It's a phone number right below my smiling face. Give us a buzz. I see you on the line, Nancy and Ajette. We will get to the rest as soon as you call in. Go.
I like it. Top 15 symbols going through the system. First 40 minutes a day. No broad-based indices or futures. Time for you, number 15. TLT at a 48. For everybody else, Google with an L at a 29. Tesla at a 35. NVIDIA at a 32. Intel at a 34. PLTR at a 61. MSTR at a 21. Goog, Noel, a 31. WFC at a 34. Amazon at a 46. GLD at a 64. Apple at a 40. Meta at a 55. And Netflix at a 29. TQQQ at a 44. And number 15 for Tom, TLT at a 48, rounding out the next 10. ABBV at a 36. IBIT at a 44. SoFi at a 36. AMD at a 38. AVGO at a 44. Microsoft at a 42. MU at a 38. Costco at a 50. And Hood at a 49.
For those who don't know, those are the top traded symbols at Tasty Trade to this moment. Google being number 1. Hood being number 25. And that's the IV rank of each one of them below in yellow. Correct, Mr. Sheridan?
First 40 minutes, not till right now, but yes.
First 40 minutes. I have
just
that's right.
On the way it is.
That's you're 100%.
That's why when I say top traded symbols first 40 minutes of the day, that usually refers to the first 40 minutes. But it's nice to know that you don't listen to me and Tom doesn't listen to me when he asks why Spoo's not in there. Okay.
Welcome to my life.
That's even worse because Tom made the rule, because we used to have Spoos in there and futures in there. Tom made the rule: no futures, no
broad-based indices, no broad-based indices or futures.
Sure.
And
Tom made that rule. Then he asked why was it there?
Right. Happy Friday. Okay.
Happy Friday's right.
Phone calls.
855-238-2789 or 855 Be Tasty. What's up, Tom?
I didn't say anything. I'm just sitting here minding my own business. Being
Nancy in California, thank you so much for holding,
soldier.
Nancy.
Hi, sir.
Hello. Hello.
I can hear you.
I can hear you.
Oh, wonderful. Wonderful. Thank you, gentlemen. I just like to say I appreciate your dedication. I appreciate all the show you put on. Thank you, and all your phone call, and everything, especially during these crazy turmoil times.
Thank you.
Thanks so much.
So my question is, sir, for three of you, how do I get my child on board to do this? Because I've been doing it just during COVID and before, and I'm doing okay. Because she's 28, I know she got what it takes. She's only 28, but she traveled the world. She already bought 2 properties. But the thing is, her job that she goes to, she cries every single day. That I don't want to see her doing that. So I want her to start trading, especially options. And how much? Second question: how much seed money should I start her out with, and how do I get her to do it?
It's a great question, Sosnoff.
There's a lot to unpack in there. I mean, the seed money, I really don't know how much capital you have, but somewhere between, the perfect number is a little over 25,000, but if you wanted to do it less, 5 or 10,000 just to get started would be fine. And I think you need to start her off with some basics. Like, you need to start her off with like maybe ask her what kind of stock she likes, do a covered call, maybe a naked short put, maybe direct her to our Learn Center. We have some tailored learning on the Tasty Trade site, and we have an amazing Learn Center on the Tasty Live site. So we've got an incredible amount of resources for her. That's where I would start her, with some really small positions, small capital, some small positions, and basic stuff, and see if she bites.
Totally agree.
Mr. Tom Sosnoff, I know you addressed this before. Let's say if I open her up with $100,000. What is the reasonable income that she can make a month?
For her, where she is, where she is right now, a decent return would be a really good return for her right away. Would be a few times the risk-free rate. So let's say between 15 and 20%. So 15 to 20,000
a year, not a month.
A year. Is that what you asked? A year?
Yeah.
A year.
Shift a month. I'm sorry. Just be clear.
Yeah. I mean, risk-free rates are on $100,000. Risk-free rates right now. Let's just call them you'd make about 4,000. I think 3, 4, 5 times that number would be reasonable for being an active portfolio.
But that means doing straddle and all that, not just sell put and sell call.
Not really. Not really. That might mean just selling some puts. That might mean doing some covered calls. The market has to accommodate. You need a little help, of course.
Yeah.
Yes, sir. So what my plan, though, is taking her to your live sessions.
Where are you? Where do you live? Where do you live?
Right now in La Mesa, California. She's in Chicago, though. She's in your hometown. She's in Naperville, sir.
Oh, she's in she's in Naperville.
Trip there. Yeah. Naperville.
Well, we're gonna have a show. We're gonna have a show this summer. Tony and I are doing a show in Chicago, and we're also doing a show in LA. You said you're close to Mesa, right?
LA. Yeah.
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 Okay.
No,
but we're going to be there this summer.
To Chicago and take her there to see you.
Yeah,
and shake your hand. Maybe that's what solidifies things.
Yeah, Tony, when are we going to be in Chicago?
Okay.
I will look at that right now.
Hold on, I'm going to tell you right now. I think we're going to be in Chicago in I think it's August, but let me just check.
I'm looking right now.
Beautiful.
Chicago.
August 15th.
Thank you.
August 15th. We wanted Nancy. We'll see you in Chicago. August 15th. It's a Friday.
Now. I'm going to sign up right now. Thank you so much for all you do, and I appreciate it.
You can't sign up yet for Chicago. That'll be open up 60 days before. But just keep it on your calendar. Come out for August 16th. Okay. I guarantee you a spot. Okay, you're guaranteed.
I mean, if you want to be a good mom, I mean, you can fly her to London on June 20th and come see us then. I mean, if you want to be a real good mom,
but if you fly to Chicago, August 15th.
She's been there, done that. Yes. we definitely going to make that one. And I'm going to LA to shake your hand again, sir.
Beautiful. We'll see you in LA, Nancy. Thank you.
Thanks. Thank you. Have a good one.
Thank you. Appreciate your time.
Thank you.
We're going to go.
Thank you.
You're welcome. Thank you for holding. We're going to go back home to Chicago. Ajit. Maybe it's Ajit. Ajit. Can we keep him on the line, please, guys? And we'll go to the next one.
You guys hear me?
Oh, there you are. How are you? How are you, my friend?
I am doing good. Tommy got it right. So I don't know. You need work, but you got it right. You're pronouncing it right. It's Ajit. So
Ajit. I'll mess it up next time. Trust me. I hate him.
Don't worry. It's all good.
Good.
Bitcoin. Bitcoin futures or the ETF. Everybody's been talking about gold. We all know that broken play. I mean, not broken play, but the broken record there. But Bitcoin, it's been a silent mover. I mean, it has been moving in the past couple of sessions. I mean, it went from about 83,000 to about 96. I mean, they're hovering about 97,000 here intraday right now. Any potential things that you guys are looking at there? I mean, long term, I am very long on it as well. Also, some short put spreads I put on there at a 61.8% retracement around 82K. Been working out really, really well. But what do you guys think? Tommy, what do you guys think? Scott, Tony?
I mean, personally, I'm with you. I'm bullish, but I'm not buying it here. And unfortunately for Bitcoin, there's not a lot of ways to trade it. I mean, of course, you could trade Coinbase, which is kind of lagging, but I as far as Bitcoin itself goes, it's kind of a passive trade for me. I'm just passively long.
Yeah.
So you don't trade
so we usually buy on dips.
No, I don't really trade the Bitcoin futures. They're a little wide for me still. I guess the micros are okay.
It's a big contract too.
Yeah, I'm not going to trade the big product, and the micros are a little small. I prefer. It's funny. It's the only place I actually prefer trading the cash markets.
Yeah, I hear you on that one. So yeah, so that was my question. But otherwise, yeah, you guys keep up the good work.
Thanks,
Got it, man.
Thanks.
Thank you for your time. We're going to go to Bill in South Carolina. Bill, what's up?
Hey, guys. Nice to see you. Hey, I've got a question about the Kelly criterion thing that you guys went over earlier. That was really fascinating. I've got basically two questions I need help clarifying. So I'm unclear on how you calculate the odds, and I'm not sure what the relationship between odds and the payout ratio is. So, for example, normally I'm writing contracts that have a 2.5 to 5 times risk, and I don't know how you figure that, because if you do shift from less than a $1 payout, then it seems like that would shift the Kelly criterion quite a bit.
You know what, Bill? I've been thinking about this because we got a whole team of mathematicians. I'm going to let them respond to you. Could you do me a favor? Could you just send me an email to tom@tastylive.com, and I'll forward it on to Jacob or Kai, whoever wrote this piece, and let them respond and give you the actual math terms, because it's a very fair question. I don't want to butcher the response. I want to get you the actual math formula, and I'll just ask one of those guys to send it to you. So if you send it to me, they'll answer me, and I'll respond to you.
Okay. Well, I really don't want to hear the answer. I just want to hear you make something up. But I'll do that.
Well, in that case, I'll just have Tony do it.
Bill, if I'm ever in South Carolina, I'm coming to see you, man.
Well, I'm going to see you guys in Atlanta. I've got tickets. I'm coming, bringing a friend.
Awesome.
Hey,
Please introduce yourself to me.
Yeah,
Please introduce yourself because I want to shake your hand.
Yeah, unfortunately, your ticket just got confiscated.
Please do.
See you soon.
All right, brother. Be well. Sadnuf, I love our viewers. You know that? I mean, they can see right through you. We're going to take a quick 90-second break.
I just had his ticket revoked. It's okay.
We got more Tasty Live immediately following these messages. Be back in 90 seconds. Liz and Jay next. Thank you, Mr. Sheridan. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
And welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Dierking. That beautiful brunette to the left of me is Miss Jenny Andrews. We made it, Jenny.
We made it through the week, and you have a busy, busy weekend. It's prom weekend in your house.
It is prom week. It's not till Sunday night.
Oh, okay. So you got days to...
Yeah, isn't that crazy? So prom is on Sunday. Both children are going. I shouldn't use children. One's an adult. One's 18-year-old. I'm so excited because they do... Annabelle didn't go to prom last year, so this will be their only prom they're at together. Which is fun. Yeah.
Fun. It'll be nice to get all the pictures together.
I know, it will be nice. It's so funny because they're so close in age, and I always take pictures of them before every dance. Everybody always assumes they're dates. That they're dating because they kind of...
Well, you'll have to share some pictures next week. I know we had gotten an email a few weeks ago from a viewer of his daughter at prom because he remembered from the past we used to share prom pictures and viewers would share prom pictures, and we've seen John's prom picture, we've seen Julia's prom picture.
Our super producer, John, I wish we could pull that from the archives.
I know. So in the past, we've posted all of our old prom pictures. And why don't next week with Day, if anyone wants to share prom pictures, we'll take them.
When is your prom? When is your high school prom?
I don't even know, honestly, because ours is only a senior prom. So my daughter's only a sophomore.
So juniors don't go to prom?
No.
Wow. No, ours is juniors and seniors, which I kind of like.
You only go if you're going with a senior. Like it's senior prom, seniors go. But if a senior's bringing a date who's younger, then they'll go.
It's so crazy too. I mean, honestly, I think lots of things have changed since we've been young, right? Lots of things. So, last year my son went without a date and had the time of his life, and I know a lot of kids this year are going without dates as well, which is kind of fun. I'm actually a fan of it. Like they stayed, they went downtown, they danced, they had the time of their lives. So I think it's interesting to not. I know a lot of schools are different, but I know a lot of kids are going without dates. So it's interesting.
Well, your kids, I'm sure, will have a great time. Hopefully, they've got good weather on Sunday.
It's supposed to be 67 and sunny, so we're good.
Yeah, nice. It'll be perfect. Are you having pictures at your house?
No, and the problem is with the two of them. So keep in mind, it's a girl and a boy. So she's getting her hair done. She's getting her makeup done. Then they're taking pictures together. Then they have to go to their grandparents' house to show them. Then I have to go to my son's date's house. Then I have to go to Annabelle's date's house, or Annabelle's date picture party. Then I have to go back to the senior party. Then I have to go back to the junior party. So I'm going to be.
Oh my gosh. Crazy.
But it's like that for every dance because they're so close in age and they're not dating friends. You know what I mean? So. Well,
have fun. You'll have a good time. I have never had a child go through prom because Logan they would only do senior prom. And when he was a senior, he had COVID. So he didn't go to prom.
Oh yeah, they put his head on a stick. I remember that. I mean, that sounds like they were mad at him. They didn't put his head on a spike. They brought a fat head to prom so he could take pictures.
So he's in some pictures, which was cute. Honestly, at the time, I remember thinking I didn't mind that he ended up with COVID because you get worried when they're all going to these prom houses.
Yeah.
I didn't want him going to the wild prom house.
Yeah, I get it. But no. The juniors really don't. They're going to dinner, and JD's going to a prom house. But he's the most responsible child I've ever met in my entire life.
Yeah, JD's. I wouldn't be worried about it. JD's a responsible.
I couldn't even get him to drink a beer in Germany. It was out of control.
And drinking age in Germany
I was
is
you're going to drink that beer, and you're going to like it.
So funny.
I'm kidding. I wanted to, but I did not threaten him to drink a beer.
So funny.
Okay, so Jenny, do you want to jump in the platform? There's a couple things. Number one, we have Kai. Love him. Kai's gives us the recap of the week. This was amazing. This is a good one. We have that. Number two, it's 21 days till expiration.
21 days. Number three, it's 10:04. Do you want to put in the Jacob Study SPX $10 wide for $7?
Sure. I didn't know if you were going to say June or Jacob Study, but let's do it.
I kind of want to try the 40 Delta. Let's see. 40 Delta, $10 wide.
Look at the 40 Delta to the upside.
Forget it. Forget about it. It's so tight.
And that's exactly what's weird about it is that's 40 Delta and this. Oh, that makes me feel better.
Although, you know what? It's $25 wide, which is the same as we saw yesterday.
Yeah. It's just
more.
Weird.
Oh yeah, no, $25 wide, same as yesterday. Yeah, throw it in. We're only risking $300.
Better than risking $7. Filled. Okay, and then the other thing to do is take it off at 25%. Now, Jenny, I'm going to say something. I know we probably should stick to the rules. I'm taking it off for 20%.
I would even say, 20%. I would say $100. You sold it for $690, buy it back for $590.
I'm going to change it just because I want out and I don't want this to be a full loser. Okay, there we go. So, that is in. The other thing that I want to just make sure we're going to get to if we can get to the roll it, hold it, close it. Spoos just went green, which is amazing. But this is the one we want to address. If you don't take action, you'll take ownership. This is the double calendars that we've been rolling. So let's continue to roll this one out. What do you think?
Right. I mean, it was working a lot better and we were getting something for the roll when it was closer to 37. Now with it close to, 39.50, I don't know if we'll get anything for the roll. But we'll try our best.
Well, we can put in the other one too, the other side. So I want to just show. So we're going to buy this 37 back. Then I'll go 1 week out. Yeah, I mean, whatever.
Yeah, 15-cent credit, take it.
I don't know if we're going to get that, even if it's a dime.
Although we could just, if you pop out the side and see what did we pay, if you go out in Bank of America, go out like 2 weeks and just look at our total credits and debits.
Oh, I can see it on mine down here because I have our year-to-date P&L. We're down $38 total. So
okay, well, keep rolling. As long as we can keep taking in credits, keep rolling.
It's kind of my point. And then the other thing I was going to say is I know we can't buy it back, but this will help. So we put in the put as well, you see? So, and this is worth nothing. So I can try to buy this back. I don't know if that's going to work. And then go out. Oh, it's only 6 cents. But can I sell it 37?
Yeah, sure.
Taking an extra 12 cents?
Sure.
Okay, so that one has no bid, so I'm going to cancel this. It's going to hold up some capital for a wee bit of time. But I think we're fine.
Oh, yeah, the one to roll off. And then
because I couldn't close it. But I mean, then we're taking an additional, 30 cents on that.
$20. Right.
Yeah, fine. Okay, so both of those are out.
Google, we did the earnings trade, and Google's only up 370 now. I thought I saw Google up quite a bit more earlier. Yes. So we did a downside ratio spread, but we collected $1. So we collected 103. We made 103. I would just take this off. We'll get a lot of buying power back.
We did buy something.
And all you need to do is buy back the shorts for a penny. Oh, well, maybe I thought they were a penny. Yeah. Yeah. Just buy the shorts. All you have to do is buy one short back. If you buy one short back, we'll get all of our buying power back.
I mean, we got all of our buying power back by buying 2. It doesn't really matter.
Yeah. I think you're going to have to pay 2 cents.
2 cent debit.
Okay,
so that's gone. And then Intel. Let's take a look at Intel. They were right next to each other. So Intel down, Google up. We had the 24 put. We still have the 24 put, and it was out in May, so it's fine. Now I think we buy it back and roll it out in time.
Roll it to 21-day mark. Are you going to ask me? Roll it, hold it, close it?
Yes.
Roll it. I'm looking for my cards. Oh, here they are. I've got them. Roll it, Liz.
Roll it. So I'm actually slightly bullish in Intel. So here's what I'm going to propose, Jenny. You can stop me if you want to. I'm rolling to the exact same strike, and I'm adding a 17.
Yeah.
Okay.
Do it.
Glad we have the stock. Okay. So there we go. Okay. And 17 was very conservative.
Yeah. Perfect.
We'll get filled on that. I'm not too concerned, but I'm going to take it down another couple pennies. Ooh, it's pretty wide markets. There we go. Okay, so an additional 60 cents.
So then we're just leaving that till June. I ended up putting on the ratio spreads for even. I did like the 21-20 ratio spreads for even in Intel against all my stocks. So as many shares of stock as I had, I did that downside ratio spread.
That's perfect.
But I don't know, because I think I just have to wait on it, and check it at like 258.
Yeah, that's true. You're going to have to do it 258. I just let mine ride. So I lost a bit of money in Intel, but story of my life, Jenny Andrews. Story of my life. I let it ride. Because I've been doing those downside ratio spreads in a lot of the products, and sometimes it just blows right through them.
I know. And it could have. And then I'm like, then it would get doubly long. But I felt like I was taking a page out of your book doing that downside ratio spread.
That's how I got myself doubly long. That's why my position is bigger than a bread basket. Yeah. Okay, Archer, we have 80% profit here. Archer's 871. Pretty good.
Hey, roll it, hold it, or close it. Roll it.
Roll it.
Roll it out to June. Roll it out to June.
Oh, we're already out to June. God. You're taking
Well, you opened your pool. I mean, you opened your pool this week. Makes sense we're rolling to June.
Yeah, it does. Can I roll to the 8?
Roll it to the 8. Yeah, roll it to the 8.
Okay. Taking an additional 50 cents. I'm fine with that.
All we're doing is moving our puts out in time, moving our short puts out in time.
Okay, Jenny, I'm going to go to Twitter real quick. I'm going to go top down because I want to make sure we get to everybody before we go to Kai's study. Keep an eye on the time. It's already at 10:11. This is Jack Tucker, 2 tranches 0 DTE SPX Iron Condors, collected $11,000 in premium, setting a GTC for 40%. Picture shows the GTC orders.
So let's see what he's doing. He's got the
and he did this at 9:30, 9:40, and 9:30 and 9:42.
I'm just trying to see. So the 54.20, 53.95. So he's got his $25 wide. I didn't know if he was sticking with his $25 wide or going with the Jacob study of the $10 wide. So he's got his typical $25 wide.
Yeah, and I like that he did vet the $10 wides, but the $25 wide, that I think it's fine. I don't think the $10 wide was the clear winner. I was just shocked by the results.
I mean, Jack Tucker's been doing this. He's got a lot of days, log days of doing this trade. So yeah, and it seems to be so far kind of a slow inside day. So we'll hope. Good luck, Jack Tucker.
I know. We shall see. And then Jack JT comes in. The sentiment right now is not great. So, and then he puts up the actual consensus.
Okay.
Actual minus consensus minus previous. So thank you very much for the information. I appreciate it. I'll make it big for a second, and then we can get out of it too.
Okay.
And I will heart that. And then Mikey, our Polish warrior, comes in. TGIF, ladies, $45 in my pocket in 20 minutes. Looking for the SPX to close at 5,500. Seems like a great magnet.
Yeah, right. It's Friday. We're not that far.
And no, I did not give her a list of movies to watch, but one day I will. But I'm going to look. Let's go back and look. So 5,500.
Wait, did the prom pic? One of our viewers, Todd, sent a prom picture of his daughter, and I posted it since it's prom week. Did that show up?
Oh, it did. We'll get right to it. I just want to see something real quick while we're in Mikey's. Why won't this type? Oh, there we go. S. Okay. So he wants 5,500 like a magnet. I'm going to go to 0 DTE. Here's your 5,500. I want to see the open interest. That's not bad.
No, you might get a 5,500.
Do you remember when we would look at, TP would look at this, where he'd say that's where, when the open interest is right there?
Right, where there's the most open interest.
It kind of does pin there, and that seems to be the line. Now, Mikey, we have opposing forces because you at 5,500 means that we.
It still means we won because we took in 690 at 5,500. We are up $190.
If it pins exactly at 5,500,
we're up $190.
There you go. I like it. Okay, and then I'll go back down. Last margin call took the Google double calendar, deconstructed the put side, $70 back, and holding the 167.5 calendar currently. Wasn't the move I wanted, but profit is profit. There you go. Profit is profit.
Yeah, that's from last margin call. Oh, there she is. So Todd had shared this. His daughter on prom, looking beautiful. Love that dress.
Oh my God, she's gorgeous.
Yeah.
Yeah, and she's going to college to play soccer.
That's awesome.
I know. She's beautiful.
Yeah.
And then Frank Walsh comes in with all of our economic calendars for today. So thank you very much, Frank. We love everything Frank the Great does. So we'll pop back into Twitter after we're done. But I want to get to what Kai gave us. So this is the weekly recap, for lack of a better term, right? Weekly summary of market measures.
Good.
Which we requested.
Just so to know if there's anything that we missed, we're looking at what the market measure was, and we're looking at the takeaways. We're not going through the meat of the market measures, but if there's something that you see and you're like, oh, I want to know more about this, you can get it in the archives under the market measures tab. You can see all the slides.
And I don't know. I mean, I know we requested this. I said I don't care if it's an options drive or a market measures. Just give us the best of the best.
Right, from the week.
So it might be under the, I know it says market measures here, but it might actually be under the options drive too, just so people get, just to clarify that. Okay, so here we go. Oh, it won't let me go next to it. You saw it moving before, and now I can't.
I can share the slides.
And I am not kidding. It won't let me go.
I will, hang on, I will happily share the slides.
Okay, so do I just stop sharing?
Yeah, John. Yeah, let's stop sharing. You can. We're not on full screen, and then I'll share. And just give me a second, and I will share everything. And I can take over in a second.
I mean, we saw it all working. I believe that I am magnetic.
Let me. Okay. Here we go. Give me. Don't share. Wait. Give me. Okay. Sure. We can go through this. Give me 1 second just to get these in the correct order.
Okay.
All right. Okay. I'm ready to roll. Here we go. Weekly summary of market measures.
Beautiful.
Weekly summary of market measures. First up, we have trading gold, silver pairs.
So trading gold, silver pairs. This is the one that Kai has promised me that from a couple weeks ago.
Okay. And this has been a trade lots of people have been in, lots of people have been talking about. There have been many people getting long silver, short gold, thinking that silver hadn't had the same rally that gold had. So I'm kind of curious to see, did you watch this one, Liz?
I did not.
Okay. Gold and silver prices typically move together, showing a strong plus 0.8 correlation over time. So very strong correlation, right? You can't get a higher than 1.0. So 0.8 is very strong correlation. However, lately these metals have been moving in different directions more often. So
I was going to say that it's interesting because I'm a gold bug, right? So I mean, when I say gold bug, I have very, 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 very little positions in it, but I also have positions in silver, and they have not been working together. And it's so funny because whenever you're like, gold is down a lot, I always look at my silver position and it's been up.
And so that's why people have been putting on this pair, short gold, long silver, thinking that we're going to come back to its 0.8 correlation because it has lately not been as correlated as it typically is.
Right. But
okay. I told you, I see them selling gold bars at Costco. I don't see them selling silver bars in Costco.
Well, and silver's used for a lot more things. Silver's got some industrial uses as well.
Also, I told you about the mailing that came to my house looking to buy back unclass rings that people would be willing to get rid of.
I have not seen, I know we go to the same Costco. I've never seen the gold bars, and I've never gotten the mailings. I don't think they want my gold.
Oh, no, I go to the Costco in Orland.
I do too.
Oh, I thought you go in Bolingbrook.
No, I've never seen the gold bars there. They're like, Jenny's coming. Get the gold bars out.
Get the gold bars out. Get the gold bars on the split.
Stack them up.
All right. Recently, the gold-silver ratio hit 104, near its highest level outside the 2020 spike. This ratio has only been this high about 9.9% of the time in the last 20 years. So, did he say what ratio they need? How many gold versus how many silver?
No. It didn't say. But I mean, I think it's notional value to notional value.
I wonder if it's in the platform. You know how we can go to the pairs trader and just go to pairs trader if it's a preset pair. Presets. Oh, yeah. Here, gold, silver. Gold, silver pair.
There's no way it's 1-to-1. That's what they have in this.
It's not. It's not. So that's annoying that it comes up like that.
But I'm going to guess it's 10-to-1. Take a look at that because you've got.
I'm going to go to futures. Maybe here. Yeah, 1-to-2. 1 GC, 2 SI.
Okay, so that makes sense. But if you're looking at gold and silver, the notional value would be 10 to 1. Like GLD to SLV, it would be 10 to 1. So, but versus, because SI, the silver future, is a big contract.
So if I take a look, so Kai was in that study, it was saying it got to, let me go back.
And when he was telling me this, it was when we were in the office.
Just over 100.
And I haven't been to the office in a while. I wonder when this was aired.
Well, you can see it's not the same. It's not exactly the same chart, not the same numbers. So, and he had it at 104, I'm wondering, let me take a look. Oh, and this is different where we're buying gold, selling silver. I'm going to flip it. I want to see if we did notional value to notional value, SLV and GLD.
It would be 10 to 1 because it's 29 to 300.
It would be how many? 21?
It's 10 to 1 because GLD is 300 and silver is 30. Yeah. I mean, close enough, 10 to 1.
Yeah. Okay. So, buying silver, selling gold. That doesn't look like. I wonder if he goes. Well, here. You know what? We don't have the whole market measures. We've got the study and the takeaway.
Yeah.
So if people want to dive deeper into this one, I'm just curious. Like, is it still near as high? It doesn't look like it.
It doesn't look like it.
So for contrarian traders who expect the gold-silver gap to narrow pairs, trading is a good strategy. This approach involves simultaneously selling gold futures and buying silver futures based on current IV adjusted notional values. These futures can be paired at a 1-to-1 ratio.
Silver. Okay, so I guess that's GC to SI, 1 to 1.
Yeah, so it says notional 46,000, notional 46,000, which is why our charts didn't look the same when I had GC and SI. So if we're...
And I'm actually getting on to the market measures. I'm assuming this was a market measures because it says it's a market measures. I don't see it anywhere.
Okay, so if it's GC, SI, and it's 1-to-1, now if I look at this chart, does it look like
104? I can't read that.
Hang on, let me flip it. I don't know. Doesn't quite look.
I'm going to chat Kai and ask when this aired.
Yeah, because you see what I'm saying? Like, it doesn't look like this.
Yeah, no, it doesn't.
But you can still look at the pairs trader and look at the chart. And if you're selling one SI, buying one GC, or selling one GC, buying one SI, we're not quite at the extreme like we were down here. Like we were back on, April 22nd, just last week. It was at more of an extreme. It's come in.
I think this was last week's, maybe because we did you not do this from last week with TP?
No,
I was with you. No, we were both off on Friday. Okay, that makes sense. Yeah. Okay, so then the pair is kind of coming in line already.
It's moving back. It's moving back. So anyone that had this pair on, but I think there were people who were still putting this pair on earlier. It's coming back, but not to where it would just be, not to where it usually is. So I think it's moving in the right direction for people this pair on. But unless you put it on the 22nd, you're just back to where we were a week or two ago.
Correct. So it's good to know the pair wasn't an extreme, and a week isn't. I mean, that's still the extreme. What did it say? It's supposed to be 0.8, and it's 1.10 or 1.1.
These futures can be paired at 1.1. No, it should. It's typically, what does it say?
0.8. 0.8.
No. It's typically 0.8.
The typical ratio is 0.8, right?
Okay, so for traders who find GC and SI futures too expensive, less costly alternatives include the smaller MGC and SIL. Highly liquid ETFs include GLD and SLV, which can be traded at 1 to 5. 1 to 5, and we were putting it in 1 to 9.
Well, I'm always thinking notional value to notional value.
Well, yeah, no, 100 shares of GLD is 27. Oh, well, that was when GLD was 270. Now it's 3 something.
Yeah, this must have been last week's, Jenny, because
right.
Because it's moved quite a bit since then, but that's okay.
But you said you asked for this, so it might have been last week's, and you can see the prices are different. Like gold's not in the 200s anymore.
No, it's in the 300s, right? And it was up as high as 310.
Yeah. So, and then that would skew the ratio a little bit. But anyway, if people want to dive a little deeper into it, or it's just a pair to keep an eye on for sure.
Right.
Okay, next up we have after the fall and vols up. What's next? Dun, dun, dun.
I think these are last week's.
You think so? Recent market volatility past 2 weeks raised the question, what historically happens?
Okay, keep going.
Look at your market measure. See if it's the same.
It's the same. No, it's the same. I'm saying I can't find them in the market measures and I'm in the on-demand section. That's all I'm saying.
All right, what's next? Recent market volatility over the past 2 weeks raises the question, what historically happens in the 45 days following such volatility? Let's analyze how bullish, bearish, and neutral investment strategies have typically performed in similar market conditions. And all we ask for are the takeaways of this, what happens in the next 45 days. So, Liz, do you want me to read to you what happens in the next 45 days?
I'm going to read you the first one because short puts bullish historically perform the best, which I'm hoping for. I'm banking on because I'm locked and loaded.
That's all. That's pretty much all I have. A lot of short puts. So, yeah, hopefully that's what performs the best.
And then what's next?
Short calls have generally performed poorly. Yeah, which makes sense. Every time we see a market correction, we usually see a rise back up in the market, and that would make sense that short calls would perform poorly. I have 0 short calls on right now. I don't know about you.
I have short calls against long stock. I have no naked short calls.
I have short calls against long stock, but no naked short calls.
Correct.
All right,
and then strangles neutral have performed well following a drawdown period and may be a good alternative for traders who do not have strong directional opinions.
Okay, have performed well. So they're saying short calls on their own have performed poorly, but strangles have performed well. So you can have both sides.
You can have both sides. Well, you're getting all your cash from your put.
Yeah, right. And honestly, if short calls perform poorly, the puts perform the best, because if the short puts performed well and the strangles performed well, the strangles, what you lost on the short call, you made up for in the short put, but it took some of your short put profits away. So I'm going to go with A, short puts.
Well, yeah. I agree with you. You get a gold star, Jenny Andrews. I agree with it.
Now we've got losing streaks, underlying versus options.
Ooh, dun, dun, dun. I would really like to know what date these aired. Because what if people want to go back and really take a deep dive into it?
They can email Kai at tastylive.com.
Yeah, Kai at tastylive.com. Now, these should have been this past week. I know maybe the gold-silver ratio is a little bit off because we missed it in a couple weeks.
Mm-hmm.
Okay. So even high probability options traders take occasional losses. Over the long run, however, we expect to profit. That's true. That's never a truer statement has been said.
For a retail trader, the biggest danger to being able to stay in for the long run comes from consecutive large losses. I don't know what we got filled on.
I will let you know. Archer.
But if it was, okay. I went back to see if it could have possibly been, which it would have been too soon.
Oh, that's
too soon because we sold both sides.
Because it's not the
it's not. We're not just looking for. It's not Jajun.
Yeah. Okay.
All right. Back to the study. Previously, we have considered how frequently consistent short option positions resulted in serial losers, but recent market behavior has led us to narrow our field of vision.
This is interesting. How often have short put options racked up a large losses several days in a row? Oh, I can tell you. This was
Wait. Short option positions, not just puts. How often have short
option positions? Well, I think they're talking about short puts, aren't they? Well, it doesn't matter.
Well, that's what I mean. That's what would have been racking up the losses.
I think I just read it that way because they said in a down move, your calls are fine, right? Like your short calls are fine. Yeah. Okay.
Okay, let's take a look at the takeaways here. Overall, short straddles and wide iron condors had very similar rates of serial 1% down days as the underlying itself did. Out of the money strangles were slightly more streaky, while narrow iron condors were slightly less. So yeah, sure, narrow iron condors are going to lose less. And the vol, with the spike in vol, those spreads actually weren't that bad. Let's say you had a $10 wide put spread and the market blew through it. That $10 wide put spread wasn't trading for $10 because the jump in vol caused those put spreads to trade for like $6, $7. Yeah, they weren't trading for full loss because the vol was so high.
They weren't. Yeah. Which is kind of crazy. Near expiration, however, option positions pose slightly more risk than simple shares.
Well, it's okay. Near expiration option positions pose significantly more risk than simple shares. Each option.
I don't believe that to be true. Yeah.
Each option is worth 100 shares. So you can't compare, you have to compare apples to apples. You have to compare an option to 100 shares. You can't compare like one option to someone who has 20 shares.
Right.
Now I see the more risk, the vol blew up. So if you're short these options, you're taking the loss on the shares and then the loss in the vol expansion. So you're taking both.
No, you are, but to your point, if it's the 0 DTE or the shorter term, if it's the shorter term, it should be the same risk as the stock.
Yeah. Okay.
So looking beyond 45 DTE, short options positions were actually somewhat less prone to streaks than the underlying itself, and that makes sense because it smooths out your delta to be farther out in time.
Right. And if contemporary volatility is more turbulent than you might like, rolling expirations further out in time can lead to option positions, especially defined risk option positions with fewer serial large losing days. And any spread I had, that's what I did. Any spread I had during the down move, I just moved them out in time.
Yeah. Just move it. Just get it the heck out of the way. That's exactly what we used to do. Okay. Yeah. I think we're done, right?
Yeah, that's it. Now back to the platform, and I will make sure that I am getting to any tweets that come in. Let me refresh here in Twitter.
Thank you very much. Sorry for my technical difficulties.
And what earnings do we have? Do we have any earnings today?
I don't think so. It's a Friday. The only one that was kind of sneaky was the Netflix that was done on that Thursday. What did Netflix do? I know that sounds crazy. I should know this, but what did Netflix do on Thursday before Good Friday?
Oh, yeah, because we were all out of town.
Yes.
I don't even know.
I thought it was very bizarre, right? So it must have shot up. Okay, there you go.
Yeah. Yeah, skyrocketed. Netflix.
Wow.
What a move. Let's see. What's today? Friday, Thursday, Wednesday, Tuesday, Monday. So here it is. It went from, 984 the next day, opened at 1047.
I thought it was kind of crazy that they would do that on the Thursday, but I guess they don't. They're not thinking. You know what I mean? Well, because Easter does move. Doesn't the Easter date move every year, Jenny?
Yes, Easter's never, it's not the same moves all the time. So I think they just didn't realize it. When they set the earnings date, they probably didn't realize that it was the Easter holiday and the market was closed. Okay, Liz, we have 21 days till expiration. Do you want to bust out your cards and play roll hold to close it?
I do. However, I cleaned up my office and I'm not exactly sure where I put them. So it might take me a little while.
All right, I've got mine.
Okay. So it is 21 days till expiration. We've got quite a few things that we can do. So I'm going to open some up and maybe I can just kind of guide if that's instead of open them all up. Okay.
Sure.
American Airlines, number one. Now I think I have an opinion, but.
okay, here's the opinion. If we go to roll something and we're moving it to the same strike and we're barely collecting anything, then we're just going to leave it.
Yep, that's exactly correct. Then it's going to be hold. This is going to be my signals, my hand signals. Hold.
But American Airlines, yeah, there is no 9.5 strike in the 56 day. But I think if we go to the 42 day, we do have a 9.5 strike with a terrible market.
No bid at 64 cents. Yeah, just we're holding this. Hold.
All right. Next up.
Okay, the next up would be Baba. It's going to be Baba.
Baba, $5 wide, $5 wide. $5 wide, $5 wide. We don't need to do anything except put a GTC in for this.
Yes. And that's so it's something, it's not through our call spread. The put spread is very, 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 very cheap, but I don't even know if I would buy that back. So you have your GTC in for Baba. That's good.
Well, you know what? If you could see this 25.21, if we could buy it back for like a nickel, I don't know. Or we just leave it.
I mean, you could buy it back. It doesn't hurt to buy it back.
And then we could just roll the call spread. Okay, close the put spread. No, it's 9 cents. We'll just leave it and we'll put this GTC in.
Yeah, because if it expired right here, you're going to get out of it.
It's a full winner.
The easy things to make the decisions on are naked options. Okay, and the next thing that we're going to take a look at, CMG is already June. Let's take a look at Costco. We have the put spread.
And this put spread is so far away.
This angers me.
I know. It's so far away.
We've had it on for 9 days. It has made zero money. It's got to be wide markets.
I don't know.
What do we have? We have the 930, 925.
It's still within the expected move. So
yeah, but I'm not going to roll that.
No, we're not rolling this. I'm just putting in a GTC.
Yeah. The one thing that we will roll, and I think we've been rolling into perpetuity on this one, the next up is Etsy. It's a $10 wide. It's the 50-60 put spread. It's trading 40-50 put spread. It's trading 45 smack dab in the middle. Let's just roll it out in time again.
I mean, okay. Is there a point in time where, is this one of those that holds up a lot of buying power?
No, it's a spread, Jenny. It's a $10 wide spread.
I know, I was going to say, just stop rolling this silly spread and just switch to a naked option. But this is one of those that holds up a lot of buying power.
Yep.
This has been rolled and rolled and rolled again. 50-40 put spread. There we go. Roll it again.
I mean, we need a pop. You need a pop in Etsy to get out of this.
I know.
Okay, next up, Jenny, I'm gonna make this a little bit more exciting for everybody. Next up, you know it, you love it. It's Ford Motors.
All right, let's take a look at our 9.85 puts with 21 days to go. Let's see if we're gonna have to roll this to the 10. I think
that's fine because we are up exactly. This might have been our only put this year in Ford, which is fine.
I didn't think we'd still have the 9.85s in June, but we do. So, and isn't that odd that we have the 9.85s, but we don't have a 10 strike?
Yes, because that means let me just explain. That means that these strikes were already in existence when they declared a special dividend.
Yeah.
Because if you go farther out in time, let's go to, roll it to the 9.85. But if you go to January of this following year, whenever they declared the special dividend, anything that was in existence already is going to be adjusted.
But when I'm trying in my mind to figure out the special dividend, if I thought, like, it's weird, right? 9.
I almost think there's two. It was like 15 cents and 2 cents.
Yeah, it's like something strange for sure. But we're going to roll this to the 9.85 and take in another $15.
We love the 9.85. I don't think we started with the 9.85.
We're filled on the Etsy roll.
Okay.
Working the Ford roll. Why do I Faraday Future? We have one share of Faraday Future.
I don't know.
Hey, did you hear what's coming back? Did you listen to the news this morning, Vanetta's news?
No. What's coming back?
They're bringing it back. They're bringing it back. I mean, I don't know if I remember the exact symbol.
Just say it.
Hold on. It's not back yet. They're bringing it back. Spirit Airlines.
Do you still have any?
So
it was saved.
I know, but now it's Save Q. Now it's Save Q. And it's so I sold all of my thousands and thousands and thousands of shares at about 78 cents because I figured 78 cents was better than zero for the amount I had. Okay. Yeah. Now I sold it in my account, but my son, I just let his ride because what did he have? 100 shares and it was 78 cents. So he is left with this Save Q Spirit Airlines, but they were talking about it this morning, like what's going to happen to the people who had Save Q, which is zero, and now it's opening under a new symbol, which was like fly or something like that.
So FLYY?
Is that it?
Well, I don't know. That's what somebody in the chat, I just glanced up there.
Oh, yeah. Oh, okay. So it's coming with a new symbol. So I'm curious to see. I'll watch my son's account. Does his old Save Q turn into FLYY? Or do all those people with Save Q just have a bupkis and they start a new FLYY?
I mean, if you declare bankruptcy, I think it's a bupkis. I have no idea.
I don't know. But yeah, I remember when I got out of mine.
That's crazy.
I got out of mine. I mean, I don't know what to say about Spirit Airlines, but it's coming back. It's getting relisted on the New York Stock Exchange.
You're gonna reload your thousands of shares. It's pretty funny. Right. Okay. I'm just kind of glancing through here. PANW, we've had it on for 2 days, which means it was an earnings trade.
Do you think so? Yes, it was an earnings trade.
I don't know. It could have been, what's your assumption?
57, $5 wide, $5 wide. It's just a $5 wide. And
that's for sure was a what's your assumption.
Yeah. I'll just put it in a GTC. We're not going to roll it. It's in the middle of it.
Right. Then next up, for my friend Paul, who is now a student at the University of Miami, PLTR.
Oh. How does he like it there?
Loves it. He's in the Miami, not the Miami of Ohio.
Yeah, over in
Miami.
Oh, it's in Coral Gables.
He loves it.
Yeah. It's supposed to be beautiful there. Our friend the optometrist went there.
Oh, it's a hard school to get into.
He went there, I think, for optometry school. It's not where he started.
Okay,
it's not where he went for his undergrad. I think he did the optometry school.
I was like, because I don't think he could have gotten in. I'm just kidding. Hopefully he's not watching.
I know that
guy. He's not watching. I didn't think he could get in. Okay, so we're going to hold that one. Now take a look at PLTR. This one we can close and or roll.
Yeah, sure. Okay, so we put on this put spread 2 days ago. That's how much Palantir's been on a run. Look at this move.
Yep. They have earnings next week.
So we'll take this off and we can get back in on earnings.
Yeah, let's do it.
95-cent debit.
Now the next exciting thing I'm going to have you look at, Jenny.
What time is this? This has just been the longest 15 minutes of my life. You know how we did finish the show and we're like, fastest hour of the day? Not today.
Not today, Satan. Okay, but this is, guess what symbol I'm going to have you look at?
Snap.
Yeah, thank you.
Snap. 9 puts, 21 days. Let's roll this bad boy.
Yeah, let's get that thing the heck out of the way.
All right, moving it out to June, go into the 9, taking in A whopping 12 cents.
Oh, jeez. Oh, jeez. Just
do we want to get crazy and also sell an 8? And then we got the 8.9.
Yes, I do. Yes, I do.
Because I couldn't roll it for 12 cents. I'll take the 90.
Okay. Then the last thing that we're going to look at today, and it's only because I kind of vetted, things are out in June. We're not touching zebras. We're not touching things that we've already said we've looked at, like you all.
Hey, look at our SPX. We're up $70.
We put it in for, we put it in for $100.
I'm taking the $60. I didn't think, look at this. We could get out of this. We can take a cool $70 in about, what do I need to pay? What did we take in? $6.90?
$6.90.
So $6.20 would be $70. If I could get $70 in how many minutes? SPX. 10:05 to 10:45, 40 minutes.
That's, I mean, for an iron condor, that's not bad. No, that would be less than.
No. 10%.
Less.
It's 10%. 10% in 40 minutes.
It's pretty good.
Hey, yeah. It's not bad. I told you I lowered my bar lately. Switching to XSP, taking $40 out of trades. Just looking to buy my lunch.
Because now we're at the SIBO, we have to buy our own lunches.
Yeah.
That's so funny. Okay, there's one more that I wanted to look at, and it was the last one, just because I kind of vetted. Go to, okay, XLE is, we put it on 2 days ago, but it's already 25%, and it's a strangle.
I'm going to flip this. So I'm going to flip this.
XOP. Yeah, the last two I want to look at are XOP and XLE, and then you've done a fine job, Jenny Andrews. You get a gold star.
Thank you, Liz. Thank you. I guess I can, I'll keep my cards out for two last positions. So we have the 195, 120. It's a Jade Lizard on for 9 days. What do you think?
Oh, are we looking at XOP? Close it. Close it.
We're almost 50%.
I know.
That wasn't bad. Not bad at all. I'm going to give up a couple pennies. All right, that's working.
No, take a look at XLE.
And XLE, we have a strangle.
2 days, 25%.
$47 in 2 days on a strangle in XLE.
Yeah, we say, he gone.
Close that. Okay. We're getting a lot of buying power back.
I think we got a lot of buying power back.
Maybe not. Maybe we don't. Maybe, what did we put on today?
We can let's pop it out. I've been taking things out not taking things out. Making sure everything's pushed out as we get filled.
And you all, we've looked at this before.
We look at it every day. That's why I went right over it. So
we look at it every day.
So we didn't get filled in our closing SPX order. That's the only thing we haven't gotten filled in yet.
And every day we'll see if it gets cheaper to butterfly it off. 92 cents. No, too much. Too much, you all, too much.
Whoever is running the platform looks to butterfly it off while the other one says, we did that yesterday.
No, but one day it might be cheap enough. One day, every day that time passes and it decays, one day that option that we need to buy might be cheap enough.
I think we need to make, let me think. I think we need to make at least, we already have 50% on it. That we just sit and hold. That's going to be at the very end that we can butterfly it off.
Everything that's working, I'm adjusting the price so we get out.
Okay.
If I have to give up a couple pennies, I'll give up a couple pennies. Because then we're done. Then we don't have to say like, oh my gosh, what's still 21 days? We've done this.
So the only thing that we left would be your downside ratio spreads that can't be butterflied off, that can sit there, and or zebras in TLT.
Oh, and TLT, I believe we've already...
No, it's the 21 days till expiration, but it looks right there. We ratcheted it up once. You're about 80 cents in.
I was going to say we ratcheted it up once and then made another $100 on this. I'm tempted to say when we're getting TLT close to 90, I'm out. I got out. I put mine on, but I got out of mine waiting for another pullback to get back in.
Go for it. I have no problem closing things.
Because TLT's had, look at the run. From 86 up to 80, almost 89. I say we get out and wait for a day to get back in.
Sure.
640, 641. So, what is still working? SPX is still working. Snap's done. Palantir's done.
I think you're not working anything else.
Ford.
Everything else is going. Do you want to check my work when you get a chance? Because I've been so good at sending everything out.
Sure. I actually think yesterday I was having technical issues. So nothing got pushed out yesterday.
Oh, okay.
I don't know what we did, but nothing got pushed out yesterday.
That's okay.
I was on the phone with Lester. I spent my afternoon with Lester. He's our IT guy.
I love Lester. He's so sweet.
I know. Okay, so everything can't get out of this XOP, and I don't want to give up too much. Yeah, I'm just going to leave that.
Yeah, leave the XOP. So Ford, you got filled on. Good. Okay, everything's pushed.
No, we did. Did we? Oh yeah.
Yeah, the only thing you're waiting for is XOP and SPX.
Okay. All right, then let's take a look. Activity today, all symbols. This is what you should have. We put on the SPX Iron Condor.
Hold on, I'm going to go backwards. Okay. Hit it. SPX?
Yes.
Okay.
Then Bank of America, we rolled. Google, we closed just the short of our earnings trade. Intel, rolled. Archer, rolled. Etsy, rolled. Palantir, we closed. XLE, we closed our strangle. Snap, we rolled. TLT, we closed. Ford, we rolled.
Got it. Perfect.
Now, I'm going to see what we did yesterday, so I know what didn't get pushed out yesterday. Yesterday, our IBM earnings trade, which is fine. That was just an earnings trade. CMG earnings trade, no big deal. Intel, we brought back our short call. That's fine.
Boy, was that
the Google earnings trade. So I guess
was that wishful thinking.
I guess there's closing Micron, closing Disney. I don't know. So that some of that didn't get pushed out.
Okay, well, I'll do that after the show.
I don't know. Then earnings trades don't necessarily have to, because they're done. But maybe closing of some positions.
Yeah,
that's it. Who's pretty much unchanged.
Where's our SPX now? We're up $55. It's so funny because we wanted $50 for the Jajun trade, risking about $300, and here we're looking for a lot more.
I kind of say let's just get out of it to be out of it on the show, and then.
Well, this is a gift from the gods. I don't think there's going to be a real show where we can get out of an Iron Condor during the show.
I agree. I agree with you. Normally, the vol wouldn't come in that much. There's not that much time decay in 45 minutes.
No, there's not.
All right, so we sold it for $6.90, bought it back for $6.30.
Okay,
made $60.
They were chipping away at those losses.
Yeah,
those full losses.
All right, I'm gonna make sure we got to everyone on Twitter.
Yeah, we're almost out of time.
Yeah, we've got. I think this account is pretty cleaned up. Are there any positions that you're like dying to be in that you have on that we don't have on?
Trying to think. I mean, I have like little positions in my account that I like to be in that I was just looking at today, reestablishing. Like I reestablished some SoFi puts this morning that just kind of got away from me because they were puts and then they expired worthless. And then I was like, why aren't those in there? Things like that I like to have in my account. I always have like a JD position, but that's been kind of fluctuating around. Those haven't been doing well. I'm always looking at silver and gold, and I don't think we have any metals in ours.
We took off our Marvell yesterday, and you've got Marvell and I do too. That's one that we took it off and we didn't replace it.
No, and I don't know if we should. Remember we were talking about this? That's one of our bigger losers. It goes SPX something and then Marvell. What was it? What was before Marvell?
Micron. It was SPX, Micron and Marvell. But I don't mind the puts in there at this level, and they don't use a lot of buying power.
No, they don't.
So I don't know what you think. They expect to move 47.5, $10 lower, getting about 213.
Sounds great to me.
We need to have, if we don't have trades on, we're not going to make any money, right?
No, you have to have trades on in order to make money back. Make money back, make money. Like that's either way, right? The only way you can do it is to have the trades on.
Yeah. And after today, a lot of this is going to clear out.
So do you know what we can do too? Well, I guess ours are different. So I know Tom did this, and it makes sense when you have, so he's got a very large account. We're trading with handcuffs on because we've got a small account here. But I heard him say that he went to the watch list, sorted by positions, and then sorted by IVR, and just literally went in with everything that was a low IVR and closed it. Now, that's not the case for us because we have a lot of we have to get a little bit more creative with what we do because we have a smaller account.
Well, we don't have just strangles, but that makes sense. If you're locked and loaded with naked options and strangles and it has a low IVR, sure, that makes sense. Get rid of it.
And that's a very easy thing to do if you're just selling premium. Now, Marvell still has a high IVR. We're going to enter into a period. Where's the VIX right now? Can we see the VIX? So I think the VIX is still, elevated for the VIX for sure, but it's come down quite a bit. It's at 25. So it's like you and I are like, wow, it's 25. That seems low because it's been so elevated for so long. This is still above its norm.
And if we go out in time and look, what is it pricing August? It's pricing August around 20, still 23, 24,
Are you surprised by that? Well, Jenny, and I'm not, please, I'm not an economist by any stretch of the imagination, but remember we were under a 90-day pause.
Right. That ends in July or something.
Yeah. And so you're in August right now. I didn't know if maybe things would stay elevated until they figure out what's happening with everything.
But look at COVID. After COVID, we had high vol all year.
We did have high vol all year.
Yeah, we had high vol all year. So
now, but the IVRs will start to turn, and that's why I was thinking about it. I understand what Tom's doing. He's sticking to his guns, and I understand it because it's a loose guideline if your IVR is this low. Yeah. But when the IVR gets high, if it stays there for a while, that will start to come down, even though it's still high.
If you take a look at low IVR, what did we say? SPY is now. Oh, SPY is still
a 49.
Still 49. So what's low? I'm curious. So go to watch list, and he would go to what? His positions?
Yeah, you can go to positions,
and then look see who has the low IVR.
Yeah, sort by IVR. And then Lunar, we know we're long it. You know what I mean? And FFAI, whatever. We have a one lot. It's not, our positions are going to be a little bit different.
And then Wheat's 20 and Google's 28 and Bank of America's 29. And then it's not that they're not terrible. We don't have anything.
It's very, very low.
Yeah. Oh, and you know what else we got out of that?
Hey, Jenny, you're in SPYI. Okay, there you go.
No, it said it, but I typed in SPY. Oh, but 32.
Yeah, SPY is at 32. That's why I was 32. Like, what? Because 50 seemed kind of high.
I know, I thought so too. Oklo is a low rank too. That we used to have, we don't have now. That's a low rank as well.
Mm-hmm.
Yeah. Did you bring home your Oklo buttons, Liz?
You can't see it. I don't know how to show you my Oklo bag. There we go.
You got to pull it back close. You got to pull it back, not close to the camera, far. Yeah. Close to you. Put it where you are. There we go. There we go. There's your Oklo bag. Take it to the farmer's market this weekend. Our farmer's market, we know it's warming up. Our farmer's market opens this weekend. Our outdoor patios are all set up.
It's coming. It's coming, Jenny. We are finally getting there.
Yep.
We are finally getting there. Okay, Jenny, right. I think we are out of time for today. I would say fast hour of the day, done and dusted, but this one did drag.
Have a wonderful time at all the prom parties.
Oh, thanks.
All the prom picture parties.
I will post pictures. Everybody have a wonderful weekend, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you on Monday.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air, and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies to concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddy, Mikey Butler. How are you, sir? Good morning.
Good morning. Good morning. Doing well. Yes. Coffee's flowing. The sun is out, and we have a new tight end on the Bears here. So
yeah,
we'll see what happens with that. But I kind of like it. We need more offensive blockers, and we get that plus a little
he's not a blocker bonus. Though he's not a blocker.
He's big enough to just throw his body out there.
Yeah, but he's more in the Dalton Kincaid range in terms of more of a passing threat. He's basically a hybrid wide receiver, just a huge wide receiver, which I agree I like. And you still have Komet that can do the blocking and all that stuff.
So we'll use Komet for the blocking and we'll use him for the catching.
Yes, that's what I anticipate the plan being. I mean, it's exciting. In Ben we trust.
We have no other choice.
We have no other choice. So we're letting him right the ship. We'll see if that works out. I was a little, I had some texts from some of my Indiana boys that ended up getting Tyler Warren. He was kind of the projected number one tight end, and I was getting some texts that were like, "Oh, thanks for the tight end, appreciate it."
Giving you a little flack.
Yeah, but I think it'll be good. I mean, my spirits are high for the Bears, and so I'm excited. I think it's good. I'll take it.
Yeah.
I mean, this draft class, I wasn't, is not super exciting. So
no. I will say, I think the most fun pick is definitely Hunter going to Jacksonville.
Yeah.
Because they already have Brian Thomas, superstar. Now they have him. and I don't know how they're going to use him. Maybe they use him as a defensive guy that slides into a wide receiver every so often. But regardless, if you've got him and Brian Thomas on either side of you with Evan Ingram too, that's a fun offense.
Yeah, that'll be an interesting one. I was excited. I was warming up to the Genti idea. Yeah. I was warming up to the idea of trading up, which I think is always just a heinous move. But I was warming up to it. I was excited for it. Yeah. But that's okay. That's okay. I will say though, I don't think you need, like, this is the age of the double running back. There is no, like, Christian McCaffrey is like the last guy in. Maybe this kid will be the last guy in, Saquon. But like, if you see a lot of the teams out there that have made deep runs in the playoffs, it's you have a bowling ball running back that's just a huge guy, and then you have a pass catcher. So if we can draft, I would love it if we can draft a cheap bowling ball running back that just blasts through, because we still have DeAndre Swift for third downs. Yeah. And we should be using him for check downs exclusively. He's not a guy that just runs up the middle. So that's my 2 cents. I agree with that.
If I was the manager, that's what I would be doing.
Yes. But the vibes are high. Yes. So we'll take it. Speaking of high, the market is at the session highs or near the session highs. We had a little bit of a rally in the overnight session and then a sell-off. They were down like 20 or 30 to start the morning. Got as low as 54.80, which is like 35 points lower from here. The high being 55.53, which is about 35 points higher from where we're trading. So we're right in the middle, but kind of the high of the opening kind of trade here. NASDAQ up 32. You had Google earnings after the close yesterday. That was a nice little trade. I know you had a call diagonal. I did as well in this account and the Johnny Trader account. So we took advantage of that this morning, closed out of those. Those were a nice little profit there. Intel was the other one that had earnings. It's down $1.60 right now, basically to the lows, 19 and change. I mean, this has kind of been where it's stopped out, so to speak, in terms of like the downside. I mean, the 52-week low here is 1766. So, maybe a play for a little bit of a bounce here if you don't have anything on. I have a covered call type position. I know you did the zebra, so you're still in that too, but a nothing burger of a stock, it seems. T-Mobile was the other one that had earnings. T-Mus, it's down about $28 here, $2.33, so pretty big move to the downside. Dow down 158. You got the Russell down 12, and leading the group to the downside here, the Russell. And guys, if we could switch to the platform too, that would be great. Oil catching a little bit of a bid /CL. Up 13 cents, 62.92. You got volatility futures 23.95. They've come in a pretty decent amount over the last couple sessions. I'm a little surprised that it's coming in this much into the weekend. We've had a lot of kind of weekend noise, and it feels like volatility tends to stay bid into it. Not seeing that today, so maybe the market has finally calmed down to the situation that we're in. Bonds up almost a full point. They've had a really nice rally over the last week. Gold getting smacked today. It was up like 50 or 60 in the overnight session. It's now down 55 near the low of the session here. You can see it's had a huge move. Silver as well following suit, down 60 cents. What is not following suit is Bitcoin futures up 1,500 on the future spot, up almost 2,000. They have had a nice little rally. And by they, I mean the crypto space in general has had a nice little rally, 95,000 on Bitcoin, high of the week.
Yeah, love to see it. IBIT performing just perfectly for us here. Yes. But last week I closed that, or no, not last week. 2 days ago, feels like last week. 2 days ago, I sold out of that butterfly, the 50, 55, 60 for $1.40. And the stock was at like 51 or 52. Now, the 50, 55, 60 with IBIT right at 54, you would think would be worth a lot more. It's only worth another 20 cents. So that just goes to show with butterflies in a product that has high implied volatility, you really have to hold it all the way to expiration to get anything substantial out of it. So even with the stock price right at 55, which is the perfect spot for this butterfly, it only has appreciated by 20 cents because there's still plenty of extrinsic value to decay here.
Yes.
But yeah, I had that Google call diagonal spread. I closed it right on the open. The market was just like looking like meh, so just closed it immediately. Could have gone up another $2, could have sold off another $2 like it has here, but just wanted to secure that profit where we can find it.
Take the money and run, baby.
Yes, we are sprinting. Intel, I've got the 2021 call zebra in May. I looked at closing the short call, the 21 strike, but it still has 60 cents of value. It's not going to hurt me if we get a rally here, so I'm just going to leave it on, and we'll see if Intel can rally a point or two, and we'll get that back to a scratch. But yeah, nice Google earnings trade. And then the only other thing I have working here is the SPX Iron Condor.
Ooh.
We're at 21 days. I've got the 50, 50, 58, 50. So the SPX is literally right in the middle of that range. I'm working in order to close it for $1.40, which would net $150 profit, which is 50%. And if I don't get filled, I'm in no rush to close it, because if we come back to the market on Monday with another flat move, it'll probably come in another 30, 40 cents, and I can close it then.
Very nice. Yes, my only moves today have been the Google close. I also bought in some risk on the AMD position I had in my Johnny Trader portfolio. I just bought the put to make it did a put ratio spread. The stock has rallied nicely. Bought in the risk on the ratio. So I have this risk-free butterfly, and by risk-free, it cost me 9 cents net going into earnings next week. And then I just closed out of my Tesla short put spread because the stock is up about $20 today. It's had a huge move after earnings. So I actually am leaning a little bit short now because I have the 75.90. 75.90 call spread right at the money. The trade itself is out about $200 after a couple roll downs, rolls up, etc. So leaning a little bit short here. If we do get a little bit of a pullback, then I'll look to close that. So those are only two things I've done today. Oh, I also closed the shout out to Mr. Westwater, who we miss dearly. We didn't have him this week. I closed out of a short put spread that when we talked about last week. I closed out of this short put spread, the 110, 108 and a half short put spread in the notes. Took like 100 and something out of that, so $125 out of that. So that was a nice little trade. Thank you, Mr. Westwater. You are clairvoyant.
Yes.
Seeing the future. So thank you.
Yes.
Appreciate it very much.
Yep. Yeah. Not much else to do in this portfolio. We do have Microsoft earnings next week.
Yes.
So Microsoft is on the 30th after the close. I'm currently writing an earnings preview, so that'll be out later today. It's going to be a pretty in-depth one, but I was looking at Microsoft. They pulled a genius move. They released this press release 2 days ago, and they're basically calling for 2025 to be the year of AI agent adoption, and they're calling these companies that adopt AI agents as frontier firms. So they're giving these companies this nice, like, shiny badge. It reminds me of this bar. This bar used to have like a regular size beer, and then they had a larger beer that they called the man size. And I was like, this is the most genius thing ever, because what guy's going to come in here and be like, oh no, give me the regular size? Like, everyone's going to be like, yeah, give me that man size, you know? Ridiculous. But yeah, a lot of interesting data points with AI adoption and companies that are, going to use it. I mean, we use AI at tastylive.
Yes, we do. It's great.
So,
it's fantastic.
It's going to be very interesting.
Yeah. All right. Very nice. Yes. Bunch of big earnings next week. You have Amazon in there as well, Apple, some of the smaller names, AMD and such. Pretty much everything is going to have earnings over the next 2 to 3 weeks. So strap in. I would say that in general, the earnings trades have been pretty fruitful so far this year. I think we've had a lot of inside moves. We've had some that have been, outside moves, but we've obviously kept our same sort of trading style, defined risk sort of stuff. I did a naked put in CMG, which was an undefined risk position, but a much smaller price stock. I think in general, earnings have been pretty good. Google, we closed at an opportune time, given that the stock is near the lower end of where it's been trading today. But even if you were short premium or slightly bearish or anything you did in something like Google with a earnings move like Google had, doesn't matter what you did, you probably got paid on it. You can even see in the May expiration, pretty much everything has lost value. Even if you had to roll out to June for whatever reason, if you were, in the money on the put side over the last, month or two, this huge move lower, all those options got pretty zapped here. So I think generally earnings have been pretty good.
Yeah. And I know Dronin was playing it to the downside. I wonder if they're in here, but this is pretty much a non-move. So maybe even that downside put diagonal was at least a scratch right now, I would say.
Yeah. Wasn't he looking at a ratio? Was that not the stock he was looking at?
I don't think so. I think it was a downside 5-point wide diagonal and then a calendar spread. So probably a scratch in this $2 rally.
Any of those trades where you're selling a lot of short-term volatility, you're getting paid a ton on those positions. So I'm sure he's doing all right this morning. Not too bad.
Yeah. Yeah. But yeah, if you want to join us on the YouTube channel, we're streaming live there. Just go to Tasty Live. You'll see this video on the homepage, and you can click that link pinned to the top of the YouTube chat. That's the newsletters page. You can get the cherry picks for free. I'll also put in the Tasty Crypto newsletter that comes out tomorrow.
Yes.
And yeah, got plenty of.
I think we'll get Ryan back on Monday. So if you missed him, I think we're going to have him back.
Yeah.
Hopefully.
Yeah. Busy man.
Yes, he is.
Okay. Let's pop over to the YouTube chat here. Let's see what we got going. Evan Ingram traded to Denver. Yeah, I forgot about that. They have Strange, who's also fine.
When did that trade happen? Was that?
I don't know. I think it was after last season, obviously, but I don't remember when it hit the wire, but I know they liked Strange at the end of the year, and they probably just running with him.
All right.
If I start the year down 15% and work my way back to unchanged, is that really a 15% gain? No, it's a bigger gain from where you were. Because if you lose 15% and then you go back to even, you've made more of a percentage on your losses, or your lower percentage, I should say. But yeah, getting back to a scratch in this economy is good.
Yeah, I mean, it's all relative. It's been, a couple months. So if you overperformed or underperformed, or you're a scratch and that's actually overperforming relative to where we started this year, I wouldn't put so much weight on what happened this first quarter. I mean, trading is a long-term game. If you had a really tough time in the beginning because you were too big, or you were too directional, or you weren't sticking to mechanics, or taking too many shots, and now you tone that down and you've made a lot of that money back, then I think that's the good story.
Yeah.
To what you're, to your situation. Like, we had this sort of, and we outlined it in the cherry picks this week. Like, this year has been one of, the more volatile years in history, like and especially in recent history. There's only a handful of other times. You got COVID, you have '08, and you have like the .com bubble where it's been this crazy. So if you came out, with a scratch after being down, that's fantastic. If you made money in this market, then, what are you afraid of going forward? That's, or if you're down 5%, if you're down 5%, the market, everybody else who's just sitting and has no sort of strategy is down 15%. So, it's a good example and a good experience. It's one thing to trade through, the last couple of years and even prior to COVID, where it was basically up only every day, and it was a pretty monotonous trade. There wasn't a ton of trading to be done. There wasn't a ton of volatility. That's how markets normally are, and it's easy to kind of trade that upside. And now when you have periods of volatility, this is when it gets tough. And if you can battle through this, well, you got no issues moving forward. I think that's the way I would look at it. How I look at it.
Yeah, I mean the baseline comparison is always the passive investor in the S&P.
Yeah.
Or the Nasdaq, if you would have been in the Nasdaq, or if you would have been in the S&P, like that's your baseline comparison. So if you're at a scratch right now, you're doing better than the passive investor.
Yeah.
Based on yesterday, does it make sense to roll from May to June? It seems to me that for a straddle, the break-evens are pretty tight for an additional 60 days. Have I got it right that you wouldn't roll on 21 days, even if there's still extrinsic value left in the legs? Completely depends on the position. But yeah, I mean, when volatility is where it is now, where you're seeing slight backwardation, and that's going to reflect higher implied volatility in May relative to June, rolling out to June is going to yield a smaller credit than if we had a low implied volatility environment, where May's implied volatility would be similar to June, and you get a bigger credit rolling to June because you get a lot more time value based extrinsic value. Right now, the implied volatility based extrinsic value in May is offsetting your time value that you would get in June, if you want to think about it that way. So the net credits are lower, and May still holding on to extrinsic value. So yeah, if you want to hold in May for an extra week, I have no issue with that. Because again, like rolling at 21 days is to offset gamma risk. But gamma risk is tied to extrinsic value not being there. So if you still have a ton of extrinsic value and you can see that rolling to June doesn't give you a lot of credit, I have no issue waiting another week and seeing if you can get some more premium out of there. Or if you're trying to avoid an earnings announcement too. Like if the earnings announcement is in June and you're trying to avoid it, then staying in May is totally fine.
Yeah, I agree. I mean, the mechanics of rolling are always the same. It doesn't really, I mean, of course, the volatility aspect that we're looking at right now gives you a little bit more flexibility in terms of when you roll. But, rolling is one, to give yourself more time to be right on a position that probably hasn't worked right or hasn't worked for you. And two, to reduce your overall P&L volatility. Things are going to move quicker with less time until expiration. And so those are the keys, those are what we think about with rolling. Like I look at my position and I rolled a Micron position yesterday, for example. The stock had a nice little rally. I rolled out in time. I adjusted the strikes a little bit. It was a adjustment to manage risk. It wasn't an adjustment like, I wasn't so super worried about volatility. Volatility's high here. It was an adjustment to give myself more time to be right, adjust my risk, and I took advantage of that move. If I had waited a day or two, it would have been an even better one. But you never know that, in the moment.
Yeah. Yep. How do you get access to the Johnny Trader account? You can see it on the Tasty Trade follow page. So if you have a Tasty Trade account, you can look at all the trades. You can filter for whatever. You can duplicate trades. You can do similar orders and change stuff. If you don't have a Tasty Trade account, you can see stuff on the tastylive website and on the tastylive app. It's just not, you can't obviously trade directly from there, and it's not as filterable.
Yeah, I think it's only possible to see the last 30 trades, I believe, on the Tasty Trade or on the Tasty Live mobile and web platform.
Yeah.
But here on the follow page, you can do all sorts of filtering, which is pretty awesome. So, like, my AMD trades, these go back to, all the way last year. It gives you the last 30 trades in the specific underlying per person. So you can see all the stuff, I was trading AMD when it was at 170, now it's at 98. It's pretty cool to see all that stuff.
Mm-hmm. How do you handle a calendar where the front month has 21 days? I have a TLT May 90 call, June 80 call. So you have a diagonal.
80-90?
80-90.
Nice.
I mean, you're at max profit pretty much, or close to it.
Yeah, it's got to be a good trade. I mean, TLT and bonds in general, I've had a really nice rally. If you put these on anytime in the last couple weeks, you're probably in a good spot here. Maybe take some profits.
Yeah. I think you could, if you wanted to shut it down and close it, take the profits, you totally can. If you're still bullish, you could restructure it and go like July, June.
Mm-hmm.
You could do like a 90 June or 90 July, 100. No, you can't do that. There's no premium there.
Yeah, I was gonna say, if you wanted to sell a put spread in June, like you take your trade that you have is trading at like $9.
Mm-hmm.
So you have $9 in capital at risk and being used for another, $100 or so dollars. You can go sell the 87, 83 put spread, or the 87, 82 put spread, for about $1, and you'll use a lot less capital. You'll only use half of what your risk is on right now and the amount of capital you're using right now. You'll capture that same amount of money if bonds stay where they are or drift higher, and you reduce some of the risk to the downside. Like you're still participating in the upside, but you're reducing your exposure and your risk. I think that maybe is a consideration as well.
Mm-hmm. Let's see. New to Tasty, Darren, welcome.
Welcome.
Drone in. IBM, rinse and repeat. Google, put diagonal, $130 loss. And the put calendars of 35-cent loss. So basically
small.
But if you see a sell-off anytime next week, if you still have those on, then that'll be profitable.
Yes.
Oh God, we do have some crypto shills here.
No.
Goodbye.
Do I need to jump in there?
No, I got it.
All right.
I got the hammer.
No.
And a goodbye.
If you shill your shit coins, you are getting chopped.
You're getting the hammer.
You're out.
The smash.
Yeah.
Pan W covered call May 16th in the money.
Okay.
I will be at break even if it gets called away, but wanted to know if I could roll to the next month and get some premium. Still have about $3.50 of extrinsic value. What are the strikes?
I'm guessing the 67.5 or the 170. I mean, they're both kind of the same here. Just thinking if you're looking at extrinsic value. So, I would probably think about it nowish. I mean, this is probably a good time. Yesterday probably would have been a little bit better. But if you wanted to roll to like the June 170, or if you want the protection into earnings, I mean, it does have earnings coming up when May 19th. I guess this will be before earnings. I might consider doing it like nowish.
Yeah, you don't have assignment risk here, so you won't get called away. And if you do, you're instantly just going to make another $300. So, Yeah, I think you could roll out in time to June, or you can roll up a little bit if you wanted to, but you could also stay in May. And if PanW comes down a little bit to 170-ish, you'll be able to move up and out much more easily for a credit. Because right now you have a lot of intrinsic value in that option, which is hard to replace with extrinsic value.
Yes.
So don't mind staying in May and just letting that premium decay, or see if PanW comes down a little bit and then roll to June. But yeah, I think you could do a lot of different things here, but it's a nice trade.
Yeah, great trade. I mean, if you wanted to go from the 167.5, or if you have the 170, you could go to the 175, which is right at the money out in June. You basically do it at nothing. So you give yourself, $5, $5 to $7.50, depending on what your short strike is currently, of potential of more upside, but you still have, $9 of extrinsic value that you have in this option. So it will buffer you a little bit to the downside. It's something you can consider there.
Can you explain what catalyst you're anticipating when putting on a calendar or diagonal? So they're both they can be both slightly directional trades. Diagonal is more directional, of course, because you have the embedded vertical debit spread. A calendar is pure extrinsic value. So you're just looking for the stock price to move towards your strike. Your strikes. The diagonal spread, you're looking for the stock price to go completely in the money in relation to your strikes. So we're looking for a directional move, and the reason why we might put on a diagonal versus a short premium trade is if we're looking to capture pure implied volatility, extrinsic value for an earnings announcement. So like looking at Apple here, you can see if you sold the 7-day and you bought June, you're basically inventorying delta in June, and you're capturing a strong cost basis reduction, and you get all that extrinsic value next week. So we like it for earnings trades, or just for directional trades where we're looking to define our risk and have a nice high return on capital if we're right. But yeah, earnings trades for us, it just checks all the boxes. It's defined risk. We can get paid a lot for being correct. We can reduce cost basis aggressively with the sale of the high implied volatility short option, and we have no risk to one side. So like the Google trade I put on yesterday, Google had a small up move, and it was a 30% return overnight. If Google sold off, my risk is defined. I can roll from the 0-day to May and reduce cost basis further. I can roll from May to June because I went to July for the long option. So you still have defensive maneuvers and a lot of time for it to reverse if you're wrong. And in the case of a catastrophe, you are defined risk. So
yeah,
like for me, I probably won't, 90% of the time I'm going to be doing diagonal spreads for earnings for the rest of my earnings
life,
if you
forever.
want to call it that. Yeah.
Yeah, just to add to, like, it's not really looking for a catalyst in terms of like the earnings numbers or that we know anything or think anything about the stock. Those are things that, like, you can look at and consider and have your opinion on, but they don't necessarily always play out in the market. There have been numerous situations across both of our careers where, the numbers have been bad and the stock rallies, or the numbers have been good and the stock falls off. So those things, like, we don't really, that's not our focus. We're not out here saying, oh, we think Google's going to beat numbers, and that's why I'm bullish. It's more about, looking at the volatility. We trade a lot of price action for Google. We talked about it yesterday. It was like, the stock has been hit pretty significantly. Maybe it's kind of baked into the price here. Maybe the bad news is baked into the price, and that's an opinion. The trade that we had was being short front volatility against some long volatility in the back that has delta exposure. The diagonal spread is a little bit more directional than the calendar spread, which is really just a a slightly directional trade, but more of a volatility play. You're looking for that short term to come down, that longer volatility to stay bid or potentially expand. With the diagonal spread, what we were trading for is a slightly directional move, but really for it to be inside the expected move, or and with a diagonal spread, you give up that tail sort of event. And when you have this sort of 1% move, when the market's expecting a 5% move, you get paid on both those options because you're long delta and you're short volatility, and both those things played out in this situation.
When is Netflix going to stop running? Yeah, this has been a wild move.
Yes. It's the new Meta. Meta had that 25-day or 20-day rally. Netflix is having basically that. There's one little bar there. Yeah, big move.
Yeah, I think maybe there's something under the surface that hasn't been released yet. Or maybe there's things brewing, like a UFC deal with Netflix. That's what I'm hoping.
Not insider info, but
no.
I mean, Netflix makes sense as something that's probably lightly affected by tariffs. I mean, I think you're seeing that in Meta as well. A lot of the, things that don't really have a product to sell have kind of
something to manufacture.
Yeah. I mean, that story is easy to sell.
Yeah.
So,
buy the Nick Mike coin. Yeah. We need to make an OTC live coin.
We do. And forever hold. We'd never sell.
Gregor has an in the money short call at 112.5 in the June euro. Part of a broken strangle, planning to roll and hold it until it scratches. Yeah, if you want to lean short, that's one way to do it for sure. You basically have a covered put situation here where you have the short premium and the call and some intrinsic value. You could consider throwing on the short put if you wanted to, like the 111 or even the 112.5, basically doubles your premium if you're looking to soften the upside blow. But if you want to lean short, then yeah, keeping it just by itself would be the way to do that.
Yes.
Manny's got a covered call on TSM, 152.5, April 25th, considering rolling out. Would you wait 2 weeks?
April 25th is today.
Yeah. 152.5.
Yeah, you got to do something.
Yeah, otherwise the position is going to go away. Considering rolling out, would you roll 2 weeks out for a $2.30 credit at the same strike, or to June, the 160 for a scratch? Good question.
Yeah, I mean, if you're planning on keeping this for a longer duration, I would probably be more conservative and go further out in time. Because the shorter duration, if you go 1 week or 2 weeks out and the stock continues to rally, it's going to be harder for you to roll that out a week from now to a higher strike. If you roll it out now with it, it's had a nice rally, but it's not, it's certainly near its lows. If you roll it out now to May or June and the stock rallies another $5 or $6, you're still you're in an okay position in terms of being able to roll that in the future.
Yeah. But yeah, I don't mind rolling to the 160, the 155, the same strike. You could do any of those. It's just, if you roll to the same strike, you have the most downside protection. If you roll to the 155, you have a blend of protection and credit. If you roll to the 160, that's the most offensive roll you can make for a scratch, and you're basically just freeing up your shares to profit more.
Yeah.
But you give up all your downside protection below 160.
Yes. I think if you're long-term bullish, I would probably go to just the at-the-money strike. I would probably go to May and sell the 160. I know it costs a debit, but you want to hold the stock. So you got to lean long. And that $3.80 debit that you're rolling for gives you $7.50 of intrinsic value to the upside. So if the stock stays here, it's netting you $7 of value.
Yeah.
I'm sorry, it's netting you $4 of value. The debit minus the intrinsic value. And then you can roll that out again and you'll collect a much higher credit.
Are you planning to hold Uber Crab through earnings?
Yes, I was actually looking. What do I have here? I did buy back the put. Did I do that yesterday? I think I put that on there. Did I put that on there? Let's see. I think I posted this. Yeah. So I bought back the put yesterday for $1. So now I have the 75-80 ratio spread on the upside. I do plan to hold this. If we do get a little bit of a down move, I can sell out a put against it. We're kind of near the highs here, so I don't mind leaning a little bit short. I'm not. I would say I'm slightly short. I obviously have short delta here, but my ideal situation is kind of like inside in either direction, because this ratio should come in pretty nicely after earnings, assuming the stock has a nice little vol crush.
Yeah. To clarify, the TLT diagonal example, no earnings. So what's the vol anticipation? So TLT is just an example of, it's more about just manufacturing a higher max profit while defining risk. Like TLT has a 19% IV. I don't care what IV rank says. IV rank could be 100. If I look and see a 19% IV, I'm still not selling premium there because you're taking on a ton of risk for very little profit potential. You're going to have a low return on capital as well because you're going to be putting up $1,500 to collect $1 for the next 56 days. Like, it just doesn't make sense. So we're going with diagonal spreads in this environment because on the other side of the coin, you can buy a call option or a put option for $300 for 84 days in July. So like, let's say you're bearish TLT or bullish TLT, you could buy the 90, let's just say like the 90 strike put slightly in the money in July, and then you could sell the 85 against it for $2.50. If you get a move from 88.90 down to 85, you're going to make $200 on this trade. And you can't make $200 on any trade in the June cycle unless you sell an at the money option and you hold it all the way to expiration. Mm-hmm. So this is an environment, basically, if we see less than 30% implied volatility for any product, we're going to be on the debit side and do a diagonal spread. We're still reducing cost basis, but it's just a much more efficient use of capital. A diagonal spread here costs you $250. Your max loss is $250, and your return on capital is 100% rather than 10% if you hold it all the way to expiration.
Mm-hmm.
So that's the other reason for going with the diagonal or calendar spread is just efficient use of capital and managing risk in the sense of not having a ton of risk in environments where we can't get paid to take that risk.
Well said.
Thank you. Are we coming to London this year, Marty? We are not. At least right now, we are not. Yes. But Tom and Tony will be there.
Mm-hmm.
And yeah, loved London. Loved the venue.
Maybe next year.
Great memories. Seeing Smashing Pumpkins and Weezer at the O2.
That was really cool.
Unforgettable experience.
Yeah. In the box. I mean, come on.
Yeah. But yeah,
Beautiful.
the O2 venue where we did the show was really cool too. So yeah, we'll be back. But
yes.
this summer, probably not.
Yes.
Tesla June Iron Condor. 230, 350, 10 points wide.
230, 350, yeah.
I could probably get on board with that.
I have a little bit of short delta here. I don't like that I have short delta because I wanted to lean long and it looked beautiful into earnings. Like it was a big old non-movement and I was like, perfect. And now we're having a face ripper rally. But I certainly think this is on the table for something, selling some volatility here. No doubt.
Yeah.
I say you do it, Mikey.
I'll join you.
So one
I've got
standard deviation, maybe slightly short delta.
Yeah,
Lots of call skew.
I've got it routed for 350.
Beautiful.
The same strikes. So we will join you there. For Netflix, I sold a 920 put. Should I keep rolling it up if it continues to rally? You could. It's a nice trade.
Yeah.
It's just like when you roll up puts, if you're rolling up puts into a move like this, you have to be willing to just take the shares wherever you roll up to. So like I would say it's a long-term trade or a long-term position, core position, if that's what you want to do. If it's just a trade, I don't really like rolling up the put into this gigantic move. I think I would rather just close the put and then wait for a sell-off if it happens to redeploy.
Or do both sides. Make it a Jade Lizard or turn it into a wide iron condor or something like that. It's kind of tough for me to look at this and be like, okay, I'm going to just keep rolling this up. Yeah, you're at highs, past all-time highs. Market's been weak in general. Maybe you flatten it out. Continue to participate, but flatten it out a little bit with like a wide iron condor. Especially if you're naked these puts. Capital isn't a huge issue for you.
Yeah.
I mean,
agreed.
Do something against it, I would think.
Yeah.
Call spread. Something.
Yeah. Let's see. What strategies do you like for reducing cost basis in a stock that has been cut in half? So it's tough. This is why trading small is so important, because if you had, like, let's say you owned 100 shares at 190 or 180, it's going to be very hard for you. AMD.
Okay.
It's going to be very hard for you to aggressively reduce cost basis without just waiting for that stock to recover. But if you had a larger account and you have 100 shares at 180 or 170 and you're willing to buy another 100 shares, now your basis is at 140 or 130. And it's a much more manageable position. And I'm just using 100 lots, but like let's say you owned 20 shares. You could buy another 20 here and immediately cut your cost basis in half. So that's one way to do it. Outside of that, just longer term positions. I mean, you could do call ratios.
Yeah, that's really the only way you can do it. Because yes, dollar cost averaging will reduce your average, but it doesn't hide the fact that you're down significantly. And if someone goes down 50% and you do nothing the whole time, that was kind of the decision that you made, right? So at a certain point, you have to kind of get some realistic expectations and say, you know what, I want to reduce my risk here or my loss by $1,000 or $2,000 or whatever, and either sell the call, or if you're comfortable with the shares and the amount and you can add to it or whatever, adding in like a call ratio spread is a cheap, if not free way to double the amount of potential returns on an up move. And that's because, if you do this ratio spread for basically nothing, what you give up is the tail to the upside. So if the stock goes to 120 or 130, you don't participate all the way up there. But if the stock does rally, 10 or 15% and goes from 95 to 110, you have 2x the shares to the upside up to 110. And that sort of trade allows you to accelerate those kind of, that money, that value. It accelerates the value because you're long 200 shares without having to use additional capital.
Yeah. Yep. But yeah, it's a tough one regardless. You still need to move like a 30-point move. But yeah, I like call ratios if you own 100 shares because you can rent another 100 shares of exposure in that range.
Yeah.
Bob King, bullish on BRKB, sold an out of the money call. So, well, first of all, if you're bullish, selling a call is bearish. Yeah. I don't know if you bought this call. Oh, you own shares?
Okay.
So I think you own the shares. So sold an out of the money call against shares in May, 520. Got it. So depends on where your cost basis is, but this call still has $800 of value. So I don't think you need to do anything. It's not going to get called away until expiration.
No.
So you could stay in May if you want. You could roll to June if you want. Again, it's more about how long is your time horizon. If this is a long-term trade, then I would roll out and move that call up a little bit. Maybe if you go from May to June, you could go to the 525 for $5 credit, or you could go to the 530 for $1.50 credit, and you're just freeing up that space for your shares to profit. If you have a shorter time horizon, I would just stay in May at the 520 and try and chip away at that extrinsic value.
Yes.
HYG, I'm curious why there are no bids or asks in June above the 80 strike.
I mean, there are. It's just, this is corporate bonds. I don't know exactly how this trades. I don't know if this is, I know what it is. It trades off like corporate bond yields, obviously. But I don't know the makeup of this. So it might be that, relative to what the current rates on those are, I don't know. But there are bids and asks. I mean, you can trade these. It's just they're penny options.
Yeah, even in this crazy market, it's only had a 5-point range.
Yeah.
All through this tariff implication stuff. So that's why you're not really seeing that much premium, because the IV is 10%.
Yeah.
Should I short MHG?
MHG.
Micro copper. I don't know.
MHG, do they have them? Yeah, I don't trade copper without Mr. Westwater's blessing, and
full
because
analysis.
I want him to deep dive into some data for me before I pull the trigger on my copper position. So I'm going to wait for him. But it's had a nice little rally here.
Indeed.
So good on you if you wrote it up and now are flipping the cards.
Indeed it has. Nike short put in June, 46 cents. $200 in buying power with a pop of 80%. This is a reasonable trade for a Johnny trade?
Sure.
Yeah, I mean,
it's all relative. I can't do it for 40 cents. But if you're a little bit more risk averse, I don't mind it. I would go towards let's just put it in context. All right. So the 52-week low, which I think goes back many, many years, considering this has been really one of the worst periods for Nike, is down at 52.5, of 52.28. I would move to like the 50 strike, and I think I actually I did the 52.5 in May. I closed that one out on the 22nd. So that was earlier this week. But this is the sort of trade I would go to. Obviously, there's more risk and a lower pop, so to speak, but you're getting a full dollar for this one, or even the 52.5. Like that's the sort of, I need to get at least $1 on a naked position just to make it worth my time, in my opinion.
Yeah, I think collecting $1 is more our speed. Yeah. In the long run, it'll help your profit potential. Because if you do it 1,000 times, just all things considered, winners, losers, etc., collecting twice as much and having a similar win rate is going to be a better situation.
I'm going to do the 52.5.
There you go.
So, man, 170.
So yeah, the person who owns 100, they own 100 shares of AMD. So you could buy more shares, and that's the most aggressive thing to do, or covered strangle. So yeah, covered strangle could work too. I would just, I would be leaning bullish in that sense. So like, if you go to June, selling like the 90 and like the 115 for $6, something like that, $7.
Yeah.
But yeah, I mean, if you can afford another 100 shares, that's going to be the fastest way to reduce where you need the stock to go. But you're doubling your risk. Oh man, this crypto, holy Toledo. Goodbye. Side note, really appreciate you guys put notes in when you place rolling orders. Yes, we try. We do our best.
Yes.
But yeah, it's always nice to have the context for sure. I went ahead and followed Johnny Trade's long put in AMD. Is there good long put opportunities out there? What do you suggest when looking for a long put opportunity?
So this wasn't just a naked long put. In AMD, earlier this week, I did a put ratio spread. So I did the 85-80 put ratio spread. The stock was trading at 92.58. You can see IVR was 47. We've had a nice little rally. So we had about a $2-3 rally here, and volatility has come in pretty significantly with earnings coming up next week, and this trade was in the May expiration, so it's coming up here. So I went and I bought the 75 strike put. I did it at 69 cents. So my original opening trade was 60 cents. I bought this put at 69 cents, which gives me the 85, 80, and then the 75 put. So it's a 5x5 butterfly for a net debit of 9 cents. So it's a cheap shot. It frees up the capital, which is good. You free up about $800-900 in buying power. But I now have a $10 window on the downside to hit for up to $500, and it only cost me net 9 cents. So that was the trade, and I put it in there. I never just buy calls or buy puts. I don't think anybody on our network does that, because it's too directional, it's too binary, and you're not trading anything that you can control. It's purely directional. So this is part of the butterfly that I have now.
Yeah. Couple more quick ones. ETHA, are the options markets liquid now? Not really. They're tradable, but $13 stock. There's not much to do there anyways. DraftKings, 100 shares at 42. Yeah, call ratio could work there.
Mm-hmm.
Any high IV product like that, you're going to be able to make them pretty wide. Like a call ratio in DraftKings, you could almost do a 35-40 for a small debit, but that'll bring you back to break even for sure.
Mm-hmm.
Best way to hedge naked calls 15 days out. Ratio spreads or shorter term naked puts. Yeah, or 150 days out. If you have a long call, you could sell a call against it. If you have a short call, you could add a short put out of the money. Still lean bearish. So, but yeah, 150 days. If you have a short call,
it's a lot of time.
Yeah, a lot of time. If you add a put on the other side, it's going to really slow down that trade. So I think staying directional might be the fastest way out for you. But yeah, that's it for us.
Cool.
We got to jet out of here. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. We got plenty more content on the Tasty Live YouTube channel as well as tastylive.com. Keep your eyes peeled for the Microsoft earnings preview. That'll be hitting the News and Insights tab in a couple hours here. But yeah, we'll be back same time, same place, 11 a.m. Central on Monday. Have a great weekend. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back.
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's
Oh,
game. I'll get in this man's game.
Yes.
$5 mil.
$5 million.
$5 million and a speedboat.
A speedboat.
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancelleri. Bam!
We are back. It is still Friday, April 25th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, it's what a year this week's been.
Yeah, it's looking pretty interesting out here today. And I've been arguing all week why there's going to be structural U.S. dollar weakness, blah, 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 blah. And with all of that, I'm back long because these markets go where they go and do what they do. And if you're not going to trade the price action, you might as well curl up in a ball and forget all about it.
There's some interesting action across the board here today. A little bit clearer of a signal than we had yesterday when gold was up, the dollar was down, but stocks and bonds were both higher. Today it's back to more of a uniform flush where we don't really operate on the typical risk on, risk off that most people were trained on or experienced for much of the past 20 years. It's really either buy America or sell America. So today is a pretty clean. We're buy America today. Stocks are up, bonds are up, the dollar's up a little bit. Gold is down. Even energy is showing a little bit of reprieve right now. So as we turn to the charts here today and we go to the slides, the name of the game is at least there's some cross-asset reassurance happening right now. It's not fantastic. It's not like a 2% up day and gold being down 4% or so and bonds up 3 points. But it's something. The headlines overnight have been confusing enough. We see that China quietly begins to reduce reciprocal tariffs as it pertains to semiconductors. We then have comments this morning from President Trump that Chinese President Xi Jinping and him have talked personally. And then Chinese government spokespeople came out and said those conversations never happened. The U.S. needs to stop sowing confusion. So it's not the best kind of day for a clean news flow.
You told them again? Stop telling them. What are you doing? We're going to have to walk this back again? You told them again? These are supposed to be back channels, Donald. What are you doing? I can just hear the narrative in Beijing right now. Obviously there's some kind of conversation if they're starting to roll things back, and obviously China would very much like to roll things back. They very much need external demand, considering their own economy has now been in economy-wide deflation for 8 consecutive quarters. But clearly they don't want the business in the street right now. They're trying to save face. They're trying to make this look a certain way. And, man, the White House does not want to comply.
I think that's the story there. It's not that the talks aren't happening. It's that talks are happening, and they don't want them being aired publicly. So it's like, if the talks weren't happening, then we wouldn't have had the tariffs dropped overnight. So maybe there is some movement on that front. Next week, though, is not just about the tariffs as much as this week was. There's a robust set of earnings due out. I know others have covered them already. So we're going to focus more on what's happening on the macro front. It's quite the busy week data-wise, which I think is worth noting. We start in the first half of the week, and really Monday, not so much of anything on the calendar for anything anywhere. But when you go to Tuesday, Wednesday, it's quite saturated. So before we get to the second half of the week, when you look at the Tuesday, Wednesday calendar, what piques your interest the most? Knowing full well that a lot of the backward-looking data pre-tariffs probably doesn't have that big of an impact.
Yeah, it's why I've been so focused on the PMIs, because the PMIs, by their very nature, are forward-looking. So when you get the numbers for a given month, you're already looking from the perspective of people who have to look out 6, 9, 12 months ahead. These are supply chain managers, basically, that have to know ahead of time, or at least have some idea, have some forecastable sense of where they want inventories, where they need to buy inputs and how, what demand is going to look like maybe, with at least some level of conviction. And so it's very, very useful data. It's why it's such a good proxy for GDP, because these are, in their whole, a cadre of people whose job it is to foresee these things in practical, if I get this wrong, the business goes under kind of way. This is not a academic exercise. People always get down on economists, but these are not them. So, needless to say, we had some very illuminating PMI numbers from the US and Europe and Australia and Japan this week. Next week, we get China. That's going to be really interesting, and that's going to really fill out the global growth story. I'm also interested in the GDP numbers out of Europe. That should be interesting as well, but it's really the PMIs out of China that get me interested first and foremost, and then the BOJ rate decision, because not surprisingly, through the dollar's blistering sell-off since the beginning of the year, at one point it was down something like to 12%. The two currencies that have outperformed have been the euro and the yen. Look down the tables of which are the two most liquid currencies after the dollar. They are a distant second and a more distant third, but it's euro and yen. And if the trade is buy America or sell America, if you sell America, that liquidity has two places to go: Japan and Europe. Everything else is a liquidity backwater by comparison. And so when you look at what the BOJ is going to say, are they going to talk about rate hikes? Are they going to talk about them for next year? That would be interesting, and it would give a lot of sort of credence to the idea that if you're going to sell America, Europe is now starting to see some rate hikes getting maybe baked in, about 50-50 shot for next year around that defense build out. So that's going to be very interesting for me in terms of this binary stuff. And of course, global growth is the only story on the board. It's why the markets are worried about tariffs or anything else. So the China PMIs are directly a reflection of that story.
The BOJ rate decision to me is the one that I care most about. The inflation data as well. I know we have some PCE and personal spending figures coming down the pipeline. Those are the Fed's preferred gauge of inflation, looking to see how consumers are getting ready for the tariffs, because the data are showing across the board, at least in the hard data, that spending patterns have shifted. The second half of the week carries that non-farm payrolls report, and it doesn't look like it's going to be that hot. Looking at 130K from 228K, that's just above the line in the sand in order to keep the unemployment rate on hold. Right now, given the current pace of jobs growth, to keep the unemployment rate on hold at 4.2% over the next year, you need to add 113,512 jobs a month, according to the Atlanta Fed jobs calculator. So at 130K, that's just barely squeaking above replacement level, if you will. It would show that there's a little bit more deceleration in the economy. What I also think is interesting, though, forget the non-farm payrolls report here for a second. This inflation figure from Europe, we're starting to get down to 2% here. And I know the euro's been on a tear, but Europe is a lot more sensitive to exchange rate movements than the U.S. is, given the importance of goods exports for Europe, comparatively speaking. To that point, more weakness in inflation data to Europe may provoke an ECB to extend its dovishness, perhaps, act a little bit sooner, change up the narrative there. I think that's also worth watching, because it's not just the trade war isn't just a U.S. story. The ramifications are going to be felt globally, and other central banks and other economies are going to have to respond in some form or fashion.
That's right. I mean, I think we forget, and I want to give credit where it's due. The last time I heard this was in a very eloquent exposition on this by one Peter Zeihan. Always an interesting listen and always an interesting perspective. But he was out with a video yesterday basically saying, guys, trade deals in the absolute best scenario ever, U.S. and Singapore, take 18 months. And sometimes they take decades because they are very complicated things. And what we've seen in the rollout so far is lots and lots of confusion. We heard this from the Japanese delegation, of course, at the beginning of this week. And that makes sense, because obviously the flip side of these negotiations is that there's this Doge effort afoot, and also an effort afoot to purge the government as much as possible of people that the president perceives to be disloyal. And so there are situations where you need a lot of people. Trade deals are one of them. And if you fire a bunch of people who know what they're doing in this space and you don't rehire others, then you are left significantly diminished for staff to do this type of stuff. But for the people at the very top, like a Besant or a Lutnick, who have other things to do and whose interests are pulled in a myriad other directions, you need an army of third and fourth level officials to negotiate these things, especially when it's bilateral, country by country. How this isn't a recession? Because in the meantime, there is a 5 times than before tariff out there, 10%, let's say, because the can keeps getting kicked down the road, versus 2 on average before. I'm not sure how you don't get a recession. And I think this is what the markets are ultimately animated by most in this environment. It's why you take a look where the stock indexes are stalling today. It's at the top of their range from the point where this became a sell America panic versus just a recessionary fear. And we can't get through those levels. Name an index.
I don't know if that's a fair characterization. We're sitting at, these are the session highs right now for stocks. We are pushing up nearly 1% here in the NASDAQ.
Sure,
so we haven't.
But have we changed? But have we broken the range? I would argue no.
Not yet, but we're sitting up at session highs on the day, which is, I guess,
on the day, yes, sure.
One of the points here is that the market has shaken off some of the confusing headlines overnight, and I think you pointing out that it's not that Trump's lying or China's lying or Trump's telling the truth or China's telling the truth. It's that both are right. Trump is right that people are talking. China is right when he's saying that we're sowing confusion, because I'm sure the Chinese delegation has said, we don't want to do this in public. And the U.S. administration said, okay, yeah, sure. Let's just talk, though. And then Trump is, of course, out there talking in public. They're like, this isn't how we want to handle things. Fine.
Well, and then the Japanese delegation says, we don't know what they want. And the U.S. side might retort saying, yeah, we don't know what we want because we took the step of putting on these tariffs, telling you what our problem is, and said, here, go fix it. Now come back.
We know that we know it. We don't know what we want.
Yeah. Now come back and tell us how you're going to fix it, and we'll evaluate your pitch. By the way, we have fired masses of people that know the subject, and so how would we know what we want? You tell us what you're going to give. And so there's just a disconnect from all sides. And 100%. That's recession. And to me, that's what the markets care about. It's not these headlines. It's that recession is coming.
Well, volatility here is a little higher today. Yesterday, we saw that IVR in the NASDAQ dipped into the teens. Today, it's back up to about 34.1, 19,516, just across the 1% threshold on the day. The S&P, likewise, it still has volatility. It didn't really fall off a cliff yesterday like it did in the NASDAQ. But as we push higher here, 55.46 right now, both for ES and NQ, taking a step back here. It seems like this is, again, that line in the sand, Ilya. We haven't cleared it yet, but downtrend from the February, the March, the April highs here in both ESM5 and NQM5.
It's right there.
Under pressure. The NASDAQ's already cleared that downtrend for what it's worth, but it hasn't cleared the horizontal.
And NASDAQ is doing better than the lot, and the S&P is doing better probably for tech's help, because if you look at the Russell, you see where the recession fear is. The Russell is doing worst of all, and it's the one where you'd expect the greatest sensitivity to cyclical things.
Yeah, the Russell is not performing well compared to everything else, and it kind of speaks to what happened in the 2018 trade war. I mean, do the companies that comprise the Russell have the lobbyists that the companies in the NASDAQ do? Nope.
They do not.
So they do not get the carve-outs. And that's just how the game is played with these tariffs. So 1961.40 here. Again, low 30s IVR. The Russell.
We can't even hit the I won't fire Powell high here.
Well, I think that if you're looking at how the markets are performing here, clearly there's an interest in the NASDAQ is leading the pack right now. If I'm bullish, I'm probably playing into the NASDAQ. If I'm bearish, the Russell's probably the appropriate place to do it, just given the fact that it is it's the weakling of the bunch. And if things turn lower on tariffs,
as you know, as you know, I've favored that one. I now have all of them on, just because I thought the risk reward made sense at this very critical juncture. But the Russell is the one I've sat on for the longest for these reasons. It's been soggier because growth concerns have been a thing.
I have been riding out a short put spread in ES since March 14th. 5550, 5500. It's been real crappy, Ilya. It's been awful.
Makes you think that you're in the same boat with a lot of people, because it seems like there's a kind of gravitational pull to around these levels. So it makes you think that when you had that little range over there above 5,600, a bunch of people tried to buy that dip, and then found themselves in April, and are still trying to get back to where they got in.
So I'm actually just about to get back to break even on this trade, which is funny.
Feels like there's lots of people in this boat.
Yeah, so there's also that, which is like, okay, we're going into the weekend here. I'm back to break even.
And how many people are thinking that? Oh, we're back to the place where we thought we bought the dip before April found us, and it's Friday. Let me not have a terrible Saturday.
Well, it's going to rain all day tomorrow, so it's going to be terrible no matter what.
Yeah, but there's
so
always
I'm resigned to that. I'm resigned to that.
There's always a tweet.
Oh, it can't be that bad. Gold's lower today. The Mets are the best team in baseball. The Knicks won last night, and this nightmarish short put spread I had in ES that I've stubbornly held on to well past the 21-day window is now going to be a scratch. So I'm feeling a little bit more confident. There's some debate about whether or not the Zweig breadth thrust was actually triggered yesterday. Depending upon what data service you're using, you're going to see it as a yes or a no. That is a unique occurrence. It's only happened around, again, a dozen times previously. It's when the 10 EMA of NASDAQ NYSE advancers over the decliners plus advancers moves from below 0.4 to above 0.615 within a 10-day window. There are some people saying it didn't. There are some people saying it did. The point is that if you look at in time, 1 month, 3 months, 6 months, 12 months later, you're looking at very strong returns because it's a sign that the market has come off of exhaustion flows. Mm-hmm. One thing that we could point out here at the start of April, call put ratios and nominal dollar flow into puts relative to calls was higher here on April 7th than it was at any point during COVID or the global financial crisis. So talk about an extreme in sentiment. Oh, and then Ilya.
Sure.
The Economist cover.
Oh, yes. The Economist cover was so good. The Economist cover, so I tweeted, I looked at the dates stamp as I was retweeting this yesterday, as I was exiting the last of my US dollar short exposure and starting to load up the other way. I looked at the timestamp. It was April 16th when I noticed that The Economist had updated their cover for the week. That was a Wednesday. So they released it early. And
just as a point of reference, The Economist cover this week was an American Eagle that got into some sort of scuffle.
I mean, this Eagle's not doing well. So April 16th, as of Wednesday last week, they missed it by 4 days. 4 days. They came out with this very dollar negative cover, and 4 days later, the dollar appeared to bottom. And it's doing better against, interestingly, the likes of the yen and the Swiss franc than it is, let's say, against the Aussie, which is still being upheld by risks sentiment, the euro and the pound, which are hanging in there still relatively okay. They're just idling near the highs. But of all things, bonds are up and the yen is down. It's a strange world, but the dollar is actually rallying. Thank you, Economist cover.
Well, these Economist covers mean there may be something more structural negative going on that the Economist is, leaning into.
It's just the cover.
In terms of sentiment.
The key is the cover. I read The Economist religiously every week, and it's incredibly insightful and forward-looking, and sometimes years or quarters or months ahead, and I find it very informative for my analysis. But when it makes the cover story, pretty good chance that the narrative has become so public that it's been all the way priced in, and it's just about time to go the other way.
It's not a stock, but you know it's had a pretty good week this week? Bitcoin. Bitcoin's up 12.2% this week so far, Ilya. Gold took a step back, stocks took a step forward, and Bitcoin is outperforming both of them. It's up 2.1% today. Has a lot of narrative flexibility right now. A lot of narrative flexibility right now. And if the Nasdaq's going up, all the more reason to get back into riskier assets. You know, this is one of the things that Bitcoin has served a role in recent years. If you've underperformed and the market's going to go up, sprinkle a little crypto in there. Juice those returns. Seriously, right?
No,
you know,
absolutely.
And
people have definitely had that mindset, like, oh, you know what I could use here is a little bit of beta weighted by breakneck volatility. Let me just put a little soupçon of that here. Make these returns look good.
I think we may have lost Ilya.
No, I'm here.
Oh, well, I suppose then it's just May. Ilya, sector rotation today is pretty good. It's not great. This is the only thing holding me back from being so jubilant. The sectors that you want to see perform well, they are performing well. That can't be dismissed. SMH leader 1.97% higher, XLY 1.68% higher, XLK 1.57% higher. The problem is that only 7 of the 25 sectors that we follow here are actually in the green. So not a fantastic distribution kind of day, but NASDAQ here 1.13% to the upside, S&P 0.72. Things are moving up. What's your take on non-farm payrolls for next week, though? Is this a make or break for stocks? Can it influence the Fed?
Oh, absolutely. I think it's not so much that it's going to influence the Fed's decision. I think the Fed's decision is quietly already made and has been made for a long time. I think the Fed has been telling us since last year it wants to cut rates. This is a question of when the Fed can credibly do it. We heard from Powell now in very clear terms. He's saying, look, we see the survey data. We too are unnerved. We've talked before about how really what the markets wanted in March was to feel seen, like they're not going crazy and like they really are seeing what they're seeing. And the Fed acknowledged them, gave all the necessary cues and said, we get it, but also we don't know if this is going to be the kind of thing where tariff inflation is sticky and we need to be mindful of that. So we're going to wait until all this downbeat growth stuff shows up in quote-unquote hard data, according to Powell. I think they're just looking for clearance now. Because if you look at the reality of inflation expectations, the thing they're ostensibly guarding, in the bond market, break-even rates are sinking. So the market is already looking ahead to the negative growth, to the demand destruction from these tariffs, and thinking about that as a force that's going to bring inflation lower on net, whatever one-off increase the tariffs are as a sort of effective sales tax on imports. So it's already there. The conditions are there. The Fed has what they need. They just need a piece of data to pin it on and say, well, there we go. We're a credible institution. Here's our evidence. NFP is a wonderful candidate for something like that. And one of the only ones we have next week. I mean, there's a few others that look like hard data, but really we need a bad jobs report for the Fed to get spurred into action. And if we can get one before May, we might get a cut as soon as May. So yeah, I think this is a very important set of numbers. And if it misses, then we could really have something to work with.
Ilya, we're halfway through this show. Let's turn our attention to what's going on in the bond market here today, which is inching up. Not going to appear on the screen there. Yes, it is. Okay. Bond markets are inching up. Thank you very much. We take a look at what's going on in the bond market today. This, alongside what's happening with gold, probably two of the more reassuring developments, right? You talk about stocks up, bonds up, gold, currencies. This is the buy America versus sell America distinction that we've seen play out. So bonds are up with stocks near their highs today. 115 and 25 ticks here in ZB. It's still a 44.1 IVR. ZN is likewise moving to the upside here a little bit now, but it's staying within the basic range that it's been in since the start of March, outside of that fleeting move at the start of April. This is ultimately a reassurance, right? This is, again, one of those cross-asset reassurances that we were talking about at the start of the show. We would want to see bonds behaving this way if we think we're moving away from the worst of the tariff fears in financial markets, even if the economic stuff may be coming around the corner. And the economic stuff coming around the corner actually probably would be helping for bond bulls.
Yeah. I mean, for me, this is all very encouraging, right? Obviously, my song and dance, I think, alongside yours, has been that there seems to be a Trump put. It's just not in stocks. It seems to be in bonds. And it seems to be in the long bond in particular. Because there's that line, that the underside of the range there, the gray box, those long wicks you see there, that's where the president decides, you know what, let's put these reciprocal tariffs on hold above 10% all of a sudden. And that's when the bond market has a conniption. And when the rumor mill about him firing Powell gets fired up by him, he then has to walk it back because it gets into that same area. And of course, he never had plans of saying or of firing Powell, though he asked to look into it and said on his own social media platform that Powell's termination day can't come soon enough. He was not trying to fire him, though. That's not what he meant. In any case, he walked it back right there. And I've been looking for this to stop being a sell America sort of thing and more a regular recession thing, much as it was, let's say, mid-February through March. We see there bonds are rallying, and they're rallying at the same time that stocks are selling off. The dollar is selling off at the same time. It's all very classic. Oh, there's going to be a recession. That's bad for cyclical assets like stocks. It means that the Fed is going to have to cut rates. Interest rates are going to go down. Right. So the dollar is going to lose some of its yield advantage. Okay. Everything makes sense.
Dollar also behaves like a petrocurrency, given the U.S.'s place in the global trade order with respect to energy, and so softer oil prices don't help the dollar.
No. So it all looks February, March. It all makes sense, and then the markets become animated by this. Oh, this is a sovereign crisis kind of a thing. If we're going to lose Fed independence, if we're going to have these bilateral trade negotiations that crash global commerce with uncertainty, well then, this is a whole other kind of a thing. And to your point, the dollar as a petrocurrency, as a funding currency, as a medium of exchange currency, all of that is threatened by these tariffs because, of course, if foreigners are selling less to Americans, that means they have fewer dollars to hold and recycle back into the markets. That's a loss of American financial influence and a direct threat to the entire global financial architecture. Hopefully we've stepped back from the brink there now, and we're going back to a more normal sort of thing. We would want to see rate cut expectations start to build. We would want to start to see the dollar sell off as bonds rally and stocks come down to get back to, again, normal-ish type of conditions. But it's very encouraging, I think, that we're getting closer to normal, that the bonds are up, because it suggests term premium in this market is uncoiling a bit and things are starting to settle.
Continuous contract in ZN prior to the noise that we had at the start of the month, this is the 2-day time frame, just so I could fit the whole scope of this rally from the October 23 lows into this. You could see here, and maybe the weekly, just to make this a little bit less, that start of April confusion, contortion, whatever you want to call it, we see that of head and shoulders pattern here, inverse head and shoulders pattern here, was potentially taken off the board. However, you're back up in the high 111 area, and all of a sudden you're thinking about, okay, what does life look like on the other side of 111 and say 25 ticks? That puts us firmly back in this up channel that we've been in since the October 23 lows. It reinforces that this breakdown is a false one. Oh, wait, is it? No, yes, it is. Right? So you operate again with a little bit more of a long delta bias back to the highs that we had earlier this month, and then ultimately back to the highs that we had in September. So you could see that if we're getting away from the hair on fire environment and just going to classic recession playbook, then notes, bonds would be well served. Notes are probably better served than bonds in that environment, if only because it depends where term premium goes, but if term premium is going to stay elevated, 30s are a lot more difficult to stomach. And we can already see how 30s, they fell out of their range that was in place throughout February and March and went down to a new level, whereas notes did not. Notes just reverted back into their March range. So clearly ZB is dealing with something else that you're not seeing, and I think that's the term premium compensation aspect of this all, right? It's that time component. One may wonder why, or just simply pin the tail on a donkey and say it's because no one has any clue where U.S. policy is headed, still to this day, and nor for the Fed. But hey, you know what? Powell backing off the Fed makes a Fed rate cut before the year turns over, all the more likely, even perhaps as early as June.
Yes. The great irony here is that the president obviously wants lower rates. It makes sense why he wants lower rates. All of this becomes much more digestible. In the best case, let's say you're operating here as a grand 4D chess master, and the uncertainty is part of the equation. I can see that. I mean, the president would not be the first, nor surely the last, to deploy this kind of madman theory of geopolitics where you make everybody think you're crazy, and then everybody falls in line because they don't want to deal with you. You're too powerful not to mollify. And so and Nixon famously did something similar in this vein, very effectively. Détente is something that's taught very, very favorably despite all of Nixon's other faults. So when you look at it from that perspective, you say, okay, well, if I'm going to pursue radical change, it would be great to have lower rates to cushion markets through this period of radical change. But where the strategy seems to kind of fall apart is the actions the president has taken, think what you will of them. But the markets have thought of them as a reason to take rates up, not down, because of the uncertainty and the fog with which everything has come out. And of course, threatening to fire Chair Powell is like a 10-ton bomb cherry on the uncertainty sundae here. So that we've stepped back from this, that the bonds are rallying and seemingly unclenching, this is, of course, I think, demonstrating, look what happens when you don't spook markets into demanding duration compensation off the charts because they don't know what's going on. So maybe we're learning something here, and maybe we're finally coming to the point where we stop attacking the Fed and let them cut in peace without looking like they're kowtowing. They've been wanting to do it since last year. You start to kind of float ideas out there that maybe there's more certainty on the trade front. Bond markets unclench more. You bring rates lower. All that's very encouraging. It doesn't change that a recession is coming. So I wonder what stocks are going to be able to do with it ultimately, but at least the bond market should find this favorable as long as it continues.
What's interesting right now is that you can get a pretty decent risk to reward setup here in the long end of the curve. We go to ZB right now, something in that 58 to 60% probability of profit neighborhood, right at the 1 standard deviation bands of the expected move through 56 days to expiry. The short iron condor is going to net you somewhere close to a 3-to-1 risk to reward, depending upon where you put your strikes. A little bit less, a little bit better than that, as you mess with your pop percentage. So, or pop, I should say. There are ways to do this. I'm still leaning a little bit net short. The net short put spread in ZN. I'm still doing the short iron condor here in ZN. Likewise, this position is working, and given the chop that I foresee ahead, I like the idea of continuing to play that directionally neutral with a slight upside tilt, because we have those recession concerns filtering through the background. So this is a position next week that's going to be rolled here in the Tasty Follow account. ZB as well, that has still a little bit more time, so that's not going to be touched. But chop is fine. That's what we want. We want a lot of chop and vol to come down if we're going to be directionally neutral. And vol's coming in and we're chopping around. So I think it's not broken, don't fix it.
I'm still long the long end, and I'm long it two different ways. So I bought a call vertical, and then we had that crazy sell-off, and I've still had it. And so when it seemed to hit that Trump put exhaustion point, I sold puts. And so I've managed to kind of bring the cost of the entire long position down that way by approaching it from both sides. And now I'm just looking for this rally off these lows to sustain. It's got some very important technical wood to chop, as you might say. It's basically at the top of its range here, and it's got to make a decision whether you look at ZN or ZB. But I'm hoping this is the moment here. It certainly looks like a lot more conviction than we've seen in quite a while.
Yeah, I think ultimately bonds backing off is giving some people some opportunity to move back in stocks, but then it's going to, once things calm down a little bit more, you say, oh, wait, why are bonds this high? Oh,
yeah. Yeah, that's sort of, that's pretty much the essence of my exposure right now. I'm long the bonds, I'm short the stocks, I'm looking for normalcy.
Well, gold's here coming back, and this is why I still think we're in that atypical buy America, sell America mindset, because stocks are up today, bonds are up today, dollar is up today, and broadly speaking, you have gold down off 1.35%, not quite at the lows, but basically just near the closing levels that we had 2 days ago. So yesterday's rally was erased. Momentum continues to come off the board, and volatility is staying fairly low. It's only a 59.5 IVR here in GCM5. So I'm leaning short still. I don't love being short gold, given my longer term bias, but I do think that there's a bit more weakness potentially in check here. I don't love that 1 month moving average is creeping up, but it's creeping up to a point where the market previously found some support. So maybe, I might just be getting greedy here, looking for another like $40 or so. But if we get a drop into 32.20 to 32.60, I don't see a reason to play this on the short side anymore. I'd much rather flip back long and go back to what's been working for the past year plus, which has just been buying out of the money gold calls and going to sleep at night.
Yeah, I'm looking at this pullback not as a trend change, but as a buying opportunity. I'm trading the correction, just not via this, because of course the flip side of this pullback in gold has been the rebound in the US dollar. It's almost exactly the same move. Just look at euro dollar, you get the same thing. Look at the yen, you get the same thing. So I'm playing it there, where as you got out of your gold long and flipped over, I got out of my dollar shorts that I've been in for weeks. And now I'm on the other side. Now I'm actually long the dollar, looking for the tactical correction. But trend-wise, I wrote all of 2 unnecessarily long macro articles about how the dollar has a structural headwind here, probably for a period of years. So I'm with you. I'm looking to get long gold. I'm looking to get back short dollars. I think those are the dominant trajectory ideas here, but not all at once. Markets don't move in straight lines. It looks like we need some kind of a correction here. So I'm looking to see where gold ultimately settles to be a buyer, and I'm hanging out in a long dollar position in the meantime, which I will flip on a dime when the time is right.
Yeah. I'm not feeling great about it. Like I being long gold is very nice. I feel like I'm, A2 Brutus. But silver is a little bit more concerning, if only because keeping the long exposure on here. In general, just taking a step back, gold, silver, copper being down is great for broader risk sentiment, right? We're not stockpiling hard assets every twist and turn. Okay, but silver here, the price action is pretty gross. Uptrend from the December, January, February swing lows. We're trying to punch through it the last few days. We had that nice bullish engulfing bar on Wednesday. Didn't quite get follow through yesterday, and now with today's action, this is looking a little bit more evening star candlesticky up here, and it's at a place where, oh look, a morning star candlestick pattern, very similar levels, right around 34, 33.75. So where the market found support in the middle of March, it's now carving out a potential top here in April. So don't love that as someone who's long silver. We do pull up in this 1 week, 1 month EMA band though. So dip buyers are still in force. You can't deny that. I'm going to lean long silver still as well, but I'm not feeling too hot. I do think that we're in a period now where after the gold silver ratio cracked below 100, if history is any guide, and granted there are not many events in which this has occurred, so statistically insignificant sample.
Right.
But if history is a guide here, silver should outperform gold. And right now being long silver and short gold in their own ways effectuates that POV.
Yeah, I mean, if we're really going to have a true risk rebound here, that's more than just retesting the underside of these ranges, which, by the way, if it is, I'll abandon my shorts in a heartbeat. I'm not any different than I always am. Strong convictions loosely held. If the price action tells me that this is not the time, I'll be a goner. But assuming indeed that this rebound is real, silver should outperform. That risk on element that it has made it much weaker, and we can see that at the beginning of April. And obviously gold was benefiting through all that. They diverged hard. You would expect silver to now diverge on the other side if it's a risk on kind of a move. Hasn't happened yet, and the whole thing is starting to look more like a mirror image of the dollar as you get this kind of unwinding of sovereign concern really across the board. I mean, you can, if stocks and bonds and the dollar can go down at the same time, this is them coming up at the same time to kind of shake things off. This is not normal. So we're going to get to the other side of this maybe next week as the macro data heats up and get to something more regular. I'm not touching either gold or silver here. I'd rather be in gold. I'd rather be long. That broader narrative makes more sense in my mind. But in the meantime, I want this dust to settle, and I want the markets to start behaving in ways that make sense. Even for a crisis.
Copper prices here are off by 0.42%. However, that looks pretty neat. We had this improved momentum here in copper prices in recent sessions. Today we get a pullback to the 1 month, and we springboard off of it. And so while we're not positive on the day, we have retraced a large chunk of those losses. Copper is, if we're not in, the throes of liquidating everything, then copper is one of the items that is going to be tariffed in a manner that hurts the U.S. because we don't produce as much as we consume. We produce about 1.1 million tons a year. We consume about 1.9 million tons a year, so we need about 800,000 to fill the difference. And that means whatever supply that we have available on shore is worth a heck of a lot more, right?
Yeah.
So New York-based copper prices in the futures market, they are bouncing back. We talked the other day about how we moved above in the technical basis, which copper has been this was our whole thing in March and April, right? Evening Star candlestick cluster here. Can you trust the technicals in copper? The candlesticks in copper have been good all year long, really for a year plus, where you've had these bearish engulfing bars and key reversals, and they've been very reliable. And so I remember getting out of the copper position a few weeks ago simply because why would you want to be long in the face of something like this? If we're seeing the respect of the technical setup and formation here continue for copper prices, I would posit then that we are trying to determine effectively with today's close whether or not we have officially turned the corner on this rebound. Because according to the typical, as it were, Ilya, we know that 618 is the inverse of phi for the Fibonacci ratio. And if you're above 618, you have reversed. If you're below 618, it's not a reversal yet. So this is the line in the sand. Has the rebound ended, or was that the correction and we've now started a new uptrend? Tune in next week to find out more, but I think we'll have a lot of information. If we should be thinking about, the highs that we had just a few weeks ago, $5.40 a pound as a legitimate outside, like a target that we should be trading towards.
Mm-hmm. I mean, yeah, it's one of the places where you would expect maximum convexity if in fact there is a real conversation about a US-China off-ramp from certain crisis, because obviously China is a huge consumer of this. We're impacted by this. A lot of the production is or the mining is in the Western Hemisphere, so it's in our sphere of influence. South America, I'm looking at you. And so this situation is maybe a good avatar for there being some kind of de-escalation on the world's most important supply chain. Because I think both you and Scott Bessent are right. It's effectively an embargo at this point, at both ends of the world's most critical supply chain.
Take note of the fact, by the way, that as gold is pulling back up here now, 3306, you're starting to see stocks pull off the board. S&P only up by 0.5% now, NASDAQ, or excuse me, 0.25%, and the NASDAQ only up by half. It would seem that something may have come out of the news.
Come on down. These
Let's talk
got to
about
make
energy
sense
here.
someday. Come on.
Energy here, barely higher. Oil up by 0.29. This looks like this is no longer of interest. Crude, up by 0.32, excuse me. Natural gas up 0.84.
I'm a little short crude still here. Basically the same kind of idea. We tested the underside. We've come off it. Looks like the correction might be done, so the risk reward is to be a seller. So I've started a little. Again, verticals, risk defined, nothing crazy, nothing big, but I've taken a little pot shot here. If it breaks, I'll add. But it's all sort of the same idea that cyclical things, growth sensitive things are vulnerable to coming back into recession classic.
Natural gas prices stopped falling for a little bit, may still be going towards that head and shoulders target. We have not closed above the 1 week moving average. There's a little bit more volatility today. IVR 55.4. Yesterday it was -7. So something has come
This, by
back.
the way, a textbook example of the kind of thing that I'm attempting. And I didn't trade this, but just look at nat gas there. You get a nice horizontal level. It breaks down. It comes back violently to retest that level. It holds right there. That's the sell, and then continuation. That's precisely the type of sequencing I'm looking for in all three stock indexes and crude oil.
We talked about the buy America, sell America trade going on, going off, maybe coming back on here a little bit right now. I say that only because the dollar here as the session's going on is losing territory. The euro has just turned back into positive for the day, 114 and 16 pips.
Happily, I don't have that one on.
My yen position's not doing too hot now today.
That's the one I'm short now.
I'm okay with that. The close here is going to matter. I'm looking for any headlines. There it is. President Trump says the U.S. won't drop China tariffs unless they give us something.
Maybe Xi Jinping will do like Keir Starmer and bring a fancy piece of paper. If you haven't seen it, Keir Starmer showed up to his meeting with Trump, which, by the way, went really well. Keir Starmer, the Prime Minister of the UK, and he brought a letter, a very special letter. He made sure to say special 10 times over to make sure that the specialness of the letter was understood from His Majesty King Charles, and really reiterated just how special the letter is. So maybe China will take cue and bring a scroll or something.
So there you go. There's your Friday afternoon tape bomb, Ilya. We were talking about the market 55.50.
What do we say at the top of the hour? There's always a tweet.
It's close to getting out at break even. What's next on the calendar? Monday for April 28th, it is nothing. Next week is a very busy week on the calendar. Monday is not that day. It's quiet all around.
Helps me. Look out for the macro weekly on Macro Money on Monday before the data hits. We're going to preview all of it before it starts.
If you were going to place a trade today, this afternoon, what's the most confident thing that you could do and hold it to the weekend, knowing that we have another 48 hours, 49, 51 hours until futures markets reopen?
Short oil.
Okay. Yeah. It's going to be an interesting weekend. More tweets, obviously moving the market right now. President Trump talking about tariffs. We will be covering all of that, of course, into the close here today on Tasty Live. But for now, Futures Power Hour is done for today and for this week. Ellie and I will be back on Monday together, both for Futures Power Hour and for Overtime. So be sure to come back. Thanks for tuning in the past few days. Ilya and I are going to take a quick break, though. After this, you're going to see some commercials, so you can get some coffee, some water, some lunch. Then you're going to come back for Dr. Jim From Theory to Practice, up next on Tasty Live.
Have a good weekend, folks.
Yeah, 1 second.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is that we are trying to do. Man, welcome to the busted Google earnings trade edition of what it is that we are trying to do. Should have trusted my gut. I should have not gotten scared away by that piddly little Google dividend that sent us down with our long put spread. But welcome to the show. I'm glad that you are here. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. I guess you can celebrate if you're a bull and maybe commiserate if you are a bear. But it looks like things might be changing in the market as of about 45 seconds ago. So Josh, bring us into the market, man. Guys, let me know in the chat. What is going on out there? Like, I don't know. I was getting ready for the show, so I have no idea. But all I know is the NASDAQ has sold off. Now, let's not do the red. You can't really see the red. Let's go with the yellow here. NASDAQ only up 100. The risk-free instrument just dropped about 125 points in maybe 15 or 20 minutes. Some pretty crazy stuff. ES is now close to unched on the day, only up 8 or 9. You got the Boomer struggling, down 198. They've already mailed it in, kind of banking on a little bit of a long weekend for themselves. And you've got the Russell 2000 Futures Index down 14 on the day. And so a mixed bag now. Did something come out? Obviously, if you have a question for me, drop it in the chat box. The earlier, the better. The earlier, the higher the delta, that will get to that question. But let me know also in the chat, did something hit the wire in the last, I'm going to say it was in the last 20 or 25 minutes. Like, it's very, very recent. Did something come on down the chutes? Like, are the Alabama tariffs back on or are they off? Like, are the North Dakota tariffs back on or are they off? Like, where are we at? I really can't keep track these days. And so you guys need to bail me out. You got gold. Ooh, man. Somebody check on your local shifty. Gold down 44 points today. And so gold's really kind of, it's seen better days. Like, it's seen greener pastures. If I bring up a chart of gold here, you can see that. I mean, this thing was 3,500 a couple nights ago. Like, a couple nights ago, it was 3,500 and some change. And now we're all the way back down to 3,300, which is crazy, of course. But it does kind of feel that way, right? Like, if you're trading the metals or watching the metals or whatever, it kind of feels like gold has fallen on hard times all of a sudden. Which, again, I mean, I was talking about this with Errol on Wednesday. It's like, man, you just have to go back, a month and a half? And you're talking about gold at, what is that, 2,900? I mean, you're talking about gold under 3,000 6 weeks ago. And so now that it's sold off, a couple hundred points from the highs, it's like, all right, this is pretty normal stuff. It could very easily, resume its, upward trajectory that way. But I think the day when it dropped, like this day right here, the old gap and crap, as they say, this guy really scared the children, I think. When gold gapped down and then continued going lower, like another 100 points, another 120 points, or whatever it ended up being, like that was pretty significant. But now, who knows where it's going to go from here. But it looks like the market's catching a bid now, which that's usually what happens right around the time of my show. I feel like we usually have like a 2 to 208 rally. Like, I'm not sure. Like, are we missing some economic data point that usually drops around this time? Like, are we missing the Brazilian durable goods print forecast estimate that reliably drops on, basically Monday through Friday, 2 p.m. Eastern to 2:08 Eastern, and then you've got the market reaction? It's almost always positive. Now, from this point forward, who knows what's going to happen? Like, from this point forward, it is truly anybody's guess. But yeah, so you've got the market, looking, not quite as good as it was. But it's so funny when my wife texts me. It's so funny. So my wife texted me, and she said, "Hey, what are you doing?" And I'm like, "Are you serious right now? Like, are we having this conversation right now?" That's almost worse. In fact, that is worse. You guys might remember, it wasn't that long ago, maybe a few months ago, when Tom called me on air. And I missed it. Like, before I realized what was happening, I was going to answer on air, but I missed it. But it was Tom Sosnoff calling me at like 2:15 Eastern. It's like, man, I'm at work, and I'm working for you. My wife texting me and saying, "Hey, what are you doing right now?" is even worse than that, I would say. It's like, I'm at work. What do you think I'm doing? So anyway, I digress. But if I go ahead and I've been out here all day long. She hasn't seen me in hours and hours and hours. And so maybe that should be, maybe I should come to her defense. But anyway, I digress. So if you look at the market activity, you've got volatility down a little bit too. Volatility down 32 cents. Volatility futures, I should say. And then you've got the VIX, the old VIX, is down 61 cents on the day. And so I'm very curious to see, if you guys can help me out on the news front, if anything did come out. But I'm also very curious to see, what's going to happen for the next couple hours going into the close. Like, where are we going to end up here, from a market standpoint? Are we going to stay green? Are we going to be, because the market was pretty green. I mean, if you look at ES, again, it's just recovered about 20 points since the start of the show. But I want to say it was 55.50 on the high. Today, did it get up to 50? I'm not sure. It got up to 55.54. So that's still another 30 points higher. Like, that's still another, only 25 points higher. Now, it's moving higher rather quickly, actually. And so ES was 55.54, and NQ was all the way up to 554. So that's another 100 points on top of where it is right now. And then, of course, you've got the Russell 2000 was up another, 10 points from where it is now, maybe? And so the Russell was up to, 67 or 68. And right now it's at 1955. So we will wait and see what happens next. It is quite the nail biter here on this Friday afternoon at the very, very end of April. All right, so what I'm going to do, so first and foremost, let's go ahead and talk about our Google trade that we totally missed. I totally bossed it, and I'm like, man, like I watched the show from yesterday. Like, you'll see going into the trade, I was like, I'm bullish on Google. I'm going to play this thing to the upside. But then I saw that they were paying a dividend, and I got spooked. I saw that they were paying a dividend. I got scared away. And I guess I should have been like, I maybe remove my own personal feelings towards dividends. And let's think about the simple fact that most of the time, dividend payments are going to be very well received by the market, which is another thing I talked about yesterday. So it was really interesting. If you go back and watch yesterday's show, or if you happen to be there for yesterday's show, it's like most of my analysis was actually in line with playing Google to the upside. And yet we still found a way to play it to the downside and lose a significant chunk of money, which is par for the course for From Theory to Practice. So if you're brand new to the show, you can expect a lot more of that in the coming days and weeks. So Google, unfortunately, is not going to come back. They're trying to tell me that I could get out of this spread for 11 cents, maybe 10 cents. But at this point now, I'm kind of like, let's just leave it. I'm kind of like, let's just sit tight. Like, because apparently some things are cooking, some things are happening in the market. And so it may not be that crazy that Google drops $2-3 going into the close. And our long put here, our long 160 put actually finishes in the money. And so if that were the case and I wasn't at my, platform at market close, then I would, of course, be assigned, or I wouldn't be assigned because it's a long option. The brokerage, Tasty Trade, would automatically exercise the option for me. So come Monday morning, I would be short 100 shares of Google. Now, if they both expired in the money, so that would mean Google going all the way down below 155, which is probably not going to happen, then they would just cancel out. Like, I'd be long 100 shares and short 100 shares, and they would wash away, they'd cancel out, and I'd have no position. But if Google at the 160 strike, my long put, if that finishes in the money, then that will indeed be automatically exercised. And so I would be short 100 shares of Google coming into Monday's price action. it's not the worst thing in the world. I mean, obviously, if we get some crazy tariff news over the weekend and the market rips and it gaps up and, limit up Sunday night, whatever, like that would be really, really bad, of course. But given where we are right now and the extreme, unlikely nature of that happening, I would be very happy if the 160 put actually was automatically exercised because it was in the money. Because right now I'm looking at this with Google at 162 and I'm like, man, that would be amazing other than taking essentially the max loss that we're going to end up taking here on this trade. So sadly, it didn't work out. But, the important thing with earnings trades, you got to keep it small. The important thing with earnings trades is you got to keep it small. You got to keep it manageable. This is not going to be the thing that's going to move the needle one way or another at the end of the year or the end of the quarter or whatever time frame you might be looking at. So Google, unfortunately, is not going to work. The other trades I want to talk about today, and then, of course, I'm going to get to you all and see where you guys are at. We've got Reddit, Starbucks, and Walmart. This is where we left off yesterday. And then we have MES. We'll come back to MES because we started our analysis on this guy yesterday. And I want to circle back and do this guy again today because we are now at 21 days to go exactly in the May cycle. So let's start with Reddit. So this was a pretty bumpy ride from start to finish. But it looks like we're actually going to be able to book this trade for a winner. Like it looks like we're actually going to be able to take this trade off for a nice little winner, and we've almost got 50% of max profit. You can see we put the trade on for $385. It is currently selling for $212. I'm no Jacob Perlman, but that looks like a little bit shy of 50%. Maybe that's about 45% of max profit. Hey, we're at 21 days to go. We'll take it off. We're not going to think twice about it. I mean, I'm still going to talk about it for another 6 minutes, but once we get done with our commentary, we will certainly take this trade off. Now, what's interesting about the Reddit trade, when we put this trade on, so I'll go to let me click on Reddit. Let's bring up my chains here. You can see I did this trade, it was a while ago. It was back on March 20th. So we did this trade on March 20th, and it was a short put spread, $10 wide. And again, it ended up working. We're going to take it off for a nice winner, like right here, right now, as a team, like together. But when I put this trade on, I mean, you can go back and watch the show yourself. I did it on 320. I did it at 249. That must have been an extra long show that day. Because I'm like, wait a minute, I did it when the show was over? That doesn't make any sense. And so it was probably an extra long show that day that would make the most sense. If you go back and watch that show, like I remember that this trade came from the chat. I can't remember who gave me this trade, so my apologies for that. But the suggestion was for a short put in Reddit. Well, at the time, the margin requirement on a naked short put in Reddit was like crazy. And so I'm like, man, is Reddit is it in the news now? Like, is something happening with Reddit? Like, what's going on? Which that's very common when, a given stock might be in play. There's a lot of M&A talk or M&A conversation. The buying power that is required for naked positions can oftentimes get ratcheted up quite significantly. And so I think that's probably what was happening at the time. But I decided let's go and do the trade anyway, but do a defined risk version of that trade. Well, what's interesting is the naked version of this trade, which whoever brought that trade to my attention, thank you so much because it's a winning trade. If you identify yourself in the chat, then I will send you the cash and we can split the profits. We'll split them, like 100% me and 0% you, but you do get some credit. So identify yourself in the chat. But that person was in the chat a day or 2 days later or 3 days later, whatever, and said, hey, I just took this off for a winner. And that was really, really a good learning experience for all of us because it just shows you the power and the speed and the efficacy of undefined risk strategies relative to their defined risk counterparts. And this was such a good little learning experience because we were talking about like a literal apples to apples comparison. It's the same stock. It's essentially, everything else is the same. You're just talking about a short put versus a short put spread. We're not talking about just, a general compare and contrast between undefined risk and defined risk and things like that. This could not have been a cleaner comparison. Same stock, short put spread. And the short put came in just a couple of days, whereas the short put spread, as you see, it's taken over a month. It's taken about 35 days for this guy to come in. Now, thankfully, it has come in, and thankfully, we are going to be able to take this trade off now for a nice little profit. But I think that was definitely a nice little teachable moment. So let's go ahead and let's get out of Reddit. So let me see here. Let's buy back the put spread for 204. let's see here. If I do no takers at 204. So let's do, wow, the markets are super wide. 206. No takers at 206. Let's try, let's do like maybe 210. I'll probably get filled at 210, maybe even improved. No, we didn't get improved, but we did get filled. So 210, so we're out of Reddit. It's over and it's done with. All right, so we did Reddit. Now let's talk about Starbucks and let's talk about Walmart. This is actually going to be fairly quick. Like I'll have you guys out the door in no less than 12 minutes. Starbucks, 100 shares. This is our investment style covered call. I did this trade a long time ago, several months ago now, and this is serving as a proxy for a covered call that you might have in your own portfolio on a stock that you intend to hold essentially forever. It's not something where you're looking to trade. It's not something where you're looking to zig and zag. You're not in at 45 and out at 21. You're kind of in today and out never. Like I'm kind of in today, and then, this is going to be part of the estate. Like when I go and meet the good Lord, like this thing is going down to my heirs, my children, their children, etc., and so on and so forth. And so that's a very different approach. Like that's a very, very different approach when it comes to how am I going to manage this? What am I looking for? What am I, considering a win? What am I considering a loss? Like these are the types of things that we've talked about over the life of this trade. And in fact, let me bring up my chains here really quick again. Just because, again, you can't bring up the chains too many times. It's literally not possible. Again, you could go man in the box. You could go rooster. There's so many great ways that you could play that. But if I look at Starbucks here, you can see that we did, I think we've had this on since it was January. Was it really January that we put this trade on? Maybe that's right. Yeah, I think this was kind of like a beginning of the year type of project. So that would make a little bit of sense. So January, let me bring up the history tab though, just to double check. I think that's right. But let me just put in my date filter and let's do year to date on Starbucks. Yeah, so here you go. Yeah, so we did, we sold the 110 call on January 21st. It's interesting though, it's not showing the share purchase. It's like it doesn't even exist. It's like it's a ghost protocol. The 100 shares that we actually bought. That's really, really weird. I would have assumed that it would have shown up here. Maybe. Oh, wait. Hold on. You know what? I bet you it's back in December. I bet you that's what it is. Hold on. We've got to figure this out. So let's do, I'm going to do December 1st, 2024. Ah, there it is. And the plot thickens. And by thickening, I mean, like it's over. We figured it out. December 27th, we bought 100 shares of Starbucks at 92. And so this is really, really helpful to understand. If you're brand new to the show, it's like, hey, we've been talking about Starbucks for the last, 4 or 5 months now, and we're going to continue to talk about this for many, many months to come. So if you yourself have like stocks in your portfolio that you are wanting to hold forever, and you're like, hey, I really like these stocks, I like these companies, it could be an index, it could be the individual stock, whatever. You have no plans on really kind of moving those investments anytime soon. One thing you could consider is adding a short premium component to those positions. Now, again, you have to give something up, right? For every gimme, there's a gotcha. So you have to be willing to give up like unlimited upside and things like that. But now you're opening up a whole new avenue of profitability. You're opening up a whole new avenue of, higher probability outcomes, which, this is actually a perfect example. I bought Starbucks at 92, right? You see, I bought the stock at 92. It's currently at 83. So if I just bought the stock and just sat on it, I'd be sitting on a $9 per share loss right now, which is fine. Like that's okay, especially if you have a long-term horizon. I think we can all agree that Starbucks is probably not going anywhere. If they haven't gone out of business from their very, very, very below average coffee by now, it's not going to happen. Like they're good to go. Like they're just going to keep running this thing, until finally they get burned into the ground. But for now, I think they're safe for the time being. So if I buy the stock at 92 and it's currently selling at 83, that's a $9 per share loss. But look at what we've been able to do along the way, right? We sold the call for 93 cents. We bought it back for 16 cents. So we picked up, 77 cents, right? So I picked up 77 cents on that premium. Then we did the same thing, right? We sold the call for $1.60. We bought it back for 31 cents, right? There's another $1.29, right? So just using some super quick, estimates, we've picked up about $2 in essentially additional. I mean, you could call it premium, you could call it profit. I mean, right now the position is at a loss, so profit may not quite feel right to call that a profit, but it's softening the blow, right? So it's kind of like we didn't buy Starbucks at 92, we actually bought Starbucks at 90. So that's really helping to soften the blow when the stock does indeed move against you. And so with the Starbucks position, we sit tight, we do nothing, but I think it's helpful to kind of recap and review where we've been. And then lastly, let's talk about Walmart, and then we'll do MES really quick. So for Walmart, we've been tested now to the upside. The stock is at 94. You've got the 92.5 call. So, we've gone through the call strike on the upside. This would be the time to make where was I going with that? Man, it's tough to lose your train of thought live on air, only on the Tasty Live network. It's probably time to make an adjustment. I think that's where I was going with that. So it would normally be time to make an adjustment. There we go. We're back on track. 21 days to go, right? This is kind of your reference point. So the question becomes, are we going to do that? Well, if I delete those circles, you guys know, if you've seen the show, like, I'm willing to be patient. I'm willing to kind of say, all right, let's kind of exercise a little bit of patience. Let's tap into the do nothing strategy, like things like that. Right now, though, I don't think that makes sense. And there's a couple of reasons why. Number one, we are at the 21-day marker. Now, again, 21-18, 21-17, it's not that big of a difference. But still, we're at 21 days. It's like, okay, let's try to really think about if we should do anything. And if we were to do anything, what would that look like? Well, if we go to just the next step in the process, it would be like, okay, I would roll out to the June cycle. I would probably, kind of move this option from, let me click on Walmart. I'd probably move this option from where it is now, which is May. You see that right there, out to June. With 56 days to go. That's a natural adjustment. That's usually kind of step one in the adjustment process. Not always. Like, sometimes you move the untested side, and sometimes you stay in the current cycle and things like that. But normally, adding duration, adding time makes a lot of sense. Okay, right now, it doesn't make sense. Right now, it's actually not the move that I want to make. And the main reason why should be pretty obvious to you if you're looking at the screen. Walmart has earnings on May 15th. And so I'm not super interested in being in this trade through earnings, because if I'm in a trade and it's working, I take it off. If I'm in a trade and it's not working, I leave it on. But if I'm in a trade and it's not working and earnings are coming up, my own personal policy is I will rarely carry that through earnings if it is an undefined risk strategy, because you're walking into a minefield. Like, you are voluntarily walking into something that could get really dicey really quickly. So that doesn't really make a lot of sense, in my opinion. Now, if you have defined risk, vertical spreads, iron condors, etc., then you're fine. Like, that's a completely different ballgame. Take it all the way to earnings and just, do whatever you want. It doesn't really make a difference because your risk is defined. Like our Google earnings trade that was completely busted and went completely bunk, it's okay because it's defined risk. So, there's a lid on just how bad it can get. But when you don't have that lid and you don't have that safety net, that's when you want to, seriously consider, all right, maybe I should be more prudent with my risk control walking into these known binary events. And that's how I personally deal with earnings. So right now, I'm looking at this situation and we're down a little bit. We're down, it looks like we're down what, a couple bucks on the trade? Yeah, $2.60. So we're down $2.60. I could carry this trade into next week. I could potentially do that. Because again, the difference between 21 days to go and 16, 17, 18 is not that big of a difference. The difference between 21 days to go and 14, 15 is not that big of a difference. And so if I wanted to carry it into next week, I could. I actually feel like let's take this trade off. Let's book the loss. Let's accept the loss, since we're already kind of in the groove of accepting losses today, a la our Google trade again. Let's take this off because I'm not going to roll it beyond this point anyway. And so let's go ahead and let's close out of Walmart. We'll take the $2.50 loss. It's a modest loser. Nothing that's going to completely set us back. Nothing that's going to be, something we can't recover from or anything like that. So let's close out of Walmart. And let's see. We'll buy it back for $5.20. Let's see. If I do, $5.20, $5.23, that might work. All right, so we're good. All right, so we're good. We closed out of Walmart. And all right, let's go to MES really quick. We're right at the halfway mark of the show. I want to get to the comments, and man, I see you guys blowing me up. Man, you guys are blowing me up in the chat. Look at you guys. Man, you guys are going to make YouTube believe wrongfully that this is quality programming. So you guys, man, came to play today. I appreciate you guys so much. I see Indy Tampa's in the house. Man, I see Alan's in the house. I see Theta Traders in the house. Emmett Morrison in the house. Kyle's in the house. Michael's in the house. Lisa Compares in the house. Man, look at you guys. I appreciate you guys. Soul Train's even in the house. Man, Andrew Cortado's in the house. Man, the market's in the house. Look at the market, man. ES up 32. Risk-free instrument up 173. Also known as the Nasdaq, extremely high-risk product. If you're brand new to the show, theoretically, there's unlimited risk to the Nasdaq futures. Practically, it's basically risk-free. That's how we deal with it on the program, as evidenced by the Nasdaq being up 175 here today. And so MES, let's go into MES. Okay, we're at 21 days to go. What are we going to do? This one, I actually want to roll this. So let's keep it really quick. I don't really want to talk about this too long because I want to get to you guys, and I don't want to get lost off on tangents and then, divestitures off of tangents and things like that. I just want to roll this. It's a fairly tight strangle for, the S&P 500 index. It's only 100 points wide, but let's roll it. Let's see what they'll give us, and we'll keep this trade on, in its current form for at least some time moving out into the future. So let's go ahead and we'll just roll it. Let's just roll it right into June. This is going to be, we're going to roll it right into triple witching. And so that's going to be kind of fun. So June 20th, I'm pretty sure is going to be, that's got to be June expiration. That's got to be June OPEX, I would imagine. June 20th is June OPEX. June 26th is going to be my wife's birthday. I'm pretty sure by 85 delta on that. And so that's going to be a big week for me, OPEX, and then her birthday celebration. And so, let's go. Let's roll it. 124 points. That's really not too bad. That's actually pretty solid. I think, what have I collected on this trade so far? Yeah, I've only collected 146 and a half. So I'll pick up another 124. Like, we're going to basically double our premium collected in the position, which is really nice. And the simple fact that the trade has not gotten away from us too much yet is going to be largely what is allowing us to do that. So let's go ahead and let's right click, roll expirations. 124. Let's see if we get filled. And then I want to see where you guys are at, man. You guys are just crazy in that chat. So, man, that's some really, really good stuff. So let's see, 120. Let's try 122 and a quarter. I just want to get filled here really quick. No takers at 122 and a quarter. Okay. Let's see here. Let's do 120, 175. MES is usually pretty liquid. You don't normally have too many problems getting filled. All right, so we got filled at 120, 175. So we rolled our MES strangle into June OPEX, and it just felt like the right thing to do. So, all right, let's see here. Let me get into the chat, and I'm going to go all the way to the beginning like I always do, but I'm going to surprise and delight some people here in the middle, and I'm just going to pick one or maybe two at random. I do see one question that I can answer very quickly. Texas Lily, near the end, is asking, hello, Dr. Schultz. What time is your show? Is this daily? Yes, it is. So thank you so much for watching, Texas Lily. Yes, it's every day at 2 o'clock. Now, on Wednesdays, you guys get to enjoy Tom and Dylan at 2 o'clock. And so that's an uptick from this show for sure. I'm required contractually to say that. At 2:45, though, I'm still on air. I'm just with Arrow. I'm with Arrow for today's assignment. So it's a different show with different programming, a different goal, like kind of, working with him on what he's trying to do and kind of, helping him move along the learning curve. And so it's a very, very different experience for you guys as a viewer. But then all the other days, Monday, Tuesday, Thursday, Friday, it's from theory to practice from 2 to 2:45. And then some days we're able to go long because of the programming changes, like 2 to 3:15. And so that way you get more tangents, you get more B- humor, still B-, but you get a higher quantity of it. And so that might be an uptick on your end. But let's grab somebody else here in the middle. And let's see here. Here we go. 40%. 40% says, Dr. Jim, if I'm holding leaps, what do you think of in-the-money short calls for my poor man's covered calls? Interesting question. So if you're doing a leap, right? So you've got did you give me a ticker? You didn't give me a ticker. So I'm just going to pick one. Like, let's say, let's go, since we were obviously wrong on Google, let's say Google to the upside now, right? Like any other good internet furu trader, if I'm wrong on one side, I just flip it over and I go right to the other side. And so Google with an O. If I'm doing a leap, right? If I was going to set this up, I would be buying a call, and we're setting it up to the upside because you were asking about in the money short call. So I'm assuming you mean a bullish one. So I would be looking to buy a call that's in the money, right? The long call is in the money. This is going to be your stock synthetic, essentially. This is what's going to kind of simulate having a long stock in a more standard covered call. So maybe I go out to let's just say August with 112 days to go. I find, maybe like an 80 delta or so. So right here, like the 135 strike, you could even go as high as 90 if you really want it to be more closely aligned with the one-for-one mapping with the underlying stock price movements. You're just gonna have to pay a lot more in terms of the debit that it's gonna require to hold that position. It's still gonna be a lot less than you would have to pay if you bought stock just outright. Like here, I'll even show you really quick. If I go in here and I bought shares in Google, and again, I'm in a standard margin account, so I get 50% margin relief. If you're in like an IRA or something, you're going to be fully margined, of course. So that's going to be a very different experience for you, which actually makes it more advantageous to do something like a poor man's covered call. But in Google, with the stock at 160, it makes sense. If I want to buy 100 shares, I've got to put up $8,000. I've got to put up essentially half the notional value of that contract. Okay, well, let's look at what the 80 delta call would look like, and let's look at what the 90 delta call would look like. So if I go in here, if I clear that away, if I bought the 81 delta call, which is a 135 call, yes, it's a $31 debit, which is essentially $3,100. That's significant, don't get me wrong. But again, you have to do a fair comparison. You have to make sure it's apples to apples. It doesn't have to be Gala to Gala, but it's got to be at least Gala to Brayburn. Or maybe Gala to Fuji or Fuji to Pink Lady. Like, it can't be a crazy difference. Like, you can't have a Granny Smith and then a Red Delicious. That doesn't make any sense, right? But here, this is pretty much Gala to Brayburn. And so $8,000 on the stock buying power versus only $3,000 on the poor man's covered call. So that's a pretty significant savings. Now, if you wanted to go into the 90 delta, I could just roll this call from the 135 to like the 115. Now I have more delta. It's going to be a closer mapping with the underlying stock, but look at how my buying power changes. Now it's $4,900. And so you have to decide, is it worth another $1,800 to have 10 more delta to the upside? I really can't make that choice for you. I really can't, answer that for you. I mean, obviously the answer is no, it's not worth it. But you have to make that decision yourself. That's 100% up to you. And so I think, we'll just go with the 80 delta. So if I go in here and I go with the 80 delta at the 135. So now the question becomes, where do I put my short call strike? So this is what you were asking about 40%. So normally we would we wouldn't be in this cycle to begin with. We would close up this longer dated cycle and go to whatever cycle is closest to 45 days to go. So we'll just choose June for now with 56 days to go. So generally speaking, you're going to be somewhere around a 30, let's say somewhere between 30 and 40 delta, just generally speaking. If you want more upside potential in terms of the stock price appreciation, you choose a lower delta. If you want more extrinsic value potential, then you choose a higher delta. That's essentially how you would start to decide, where do I want to place my short call strike on something like a poor man's covered call, which is also a principle that applies to many of the strategies that we actually do. It's not unique to a poor man's covered call in that regard. But if I go in here and I go to like a 170 call strike, that's about a 35 delta. So if I were to sell the 170 call, then you can see now I'm only paying a $27 debit because I'm picking up, $4.40 on that 170 call. And now I have, all of this extrinsic value that's working for me. And so this is how you would traditionally and typically set up a poor man's covered call. So the question was, should you ever go in the money with your short call? Well, let's take a look at what that would actually look like. So that would mean that I would be actually, instead of selling like a 170 call, I'd be selling a 155 call. So this would be 5 or 6 points in the money. So if you look at this, I am essentially, well, hold on. Let's go back to the 170 call. Yeah, so this is interesting. And the reason why I wanted to go back is I wanted to look at the theta, because this is a big piece to the puzzle to answer your question there, 40%. So when you set up a typical covered call, poor man's covered call, I should say, to be more exact, you are going to have some positive theta. This is going to be a position where time is working in your favor. That's, typically the case when we sell premium. That's a big reason why we do sell premium. And so this is why, something like a covered call or a poor man's covered call is so advantageous relative to just owning just straight stock. So the 170 call yields about $1.70 of positive theta. So now the question becomes, what happens if I move this to the 155 call? So now you are a little bit in the money. Look at what happens to the theta. So the theta jumps significantly. Now, why did the theta jump significantly? Well, this is actually what I was just talking about a couple of seconds ago. From the standpoint of, if you want to be more reliant on and have more potential for stock price appreciation, then you choose a lower delta. Right? You choose that lower delta so there's more room for the stock to run, but you don't get as much extrinsic value. You don't have as much theta working for you. Okay, what if you choose a higher delta? Well, here you've actually spilled over onto the in the money side, but the principle still applies. If you're going with a higher delta, so now, the 155 call actually has a 65 delta. So you're still bullish, you still want the stock to go higher, but now the spread is already fully in the money. So you actually really just need time to go by. Like, it'll be easier if the stock goes up. Like, it's going to be a smoother path if, Google were to rally from this point. But because the spread is fully in the money, you actually don't need it to rally at all. This is more of a pure time play than a more standard covered call or poor man's covered call would be. And so this isn't typically what we would do at 40%. Does that mean that you should never do it? And I'm really hesitant with the superlatives of always and never. I'll let you kind of make up your mind on that. It's not typically what we would do because we want to have some, opportunity for some gains with a Z if the stock does rally. And so I would probably not consider this most of the time. But could there be a situation where an in-the-money cover call makes sense? I think so. Especially when I will give you one instance quickly before I move on. Wow, we've done one question. Guys, I've done one question. Show's almost over. One question. Guys, I'm not even done with the question yet. Show's almost over. Like, I'm about to start queuing up the outro to get you guys to Jamal. It's crazy. It's crazy. It's not quite as crazy as the market rallying back, but it's still crazy in its own right. When would you ever consider an in-the-money cover call? Here's one scenario that pops into my mind. You have a stock that has run up significantly over some period of time. Months, quarters, years, it doesn't really matter. But you have a nice amount of capital gains that you are sitting on, but you don't want to get rid of the stock. Why don't you want to get rid of the stock? Maybe you don't want to get rid of the stock because of the dividend that it pays. Maybe you don't want to get rid of the stock because of tax reasons and tax implications. There's a number of reasons why you wouldn't want to get rid of a stock. Those are probably the two most popular ones. But now you're concerned with the downside. Now you're concerned with the stock, having some type of retreat. Could you consider an in-the-money cover call? Of course. Because remember, wherever you set your short strike, like in this case, it's at the 155 strike, wherever you place that short strike, you are essentially protected all the way down to that strike. So in this case, you've got Google at 161, almost 162. You would essentially have immunization against the down move from 161 to 155 if you carried it all the way to expiration. If the stock did fall, then obviously it would be showing some type of loss, before expiration. But you have essentially all of that wiggle room, all of that buffer kind of built into the position, which could be really, really nice, in the case of, hey, I've already had a tremendous run. I'm not really looking for more upside, but I would like to continue to hold this position for some of the reasons that we talked about. So that would be one instance when I think it could make sense. I think that's going to be pretty uncommon, though. It's going to be a lot less frequent than doing kind of more of a standard kind of run-of-the-mill Betty Crocker poor man's cover call. So hopefully that helps there. 40%. That was such a good question that I think it deserved the whole show. I guess it did. It must have, because the show's basically over. But now let's go to the very beginning. And if you are brand new to the show, by the way, this is exactly how I do things. I've tried to change. I've tried to be more efficient, but I can't do it. The natural instructor in me, I want to give you guys my complete thoughts on whatever question you have. And I understand that might be frustrating for some of you that I'm not going through as many questions, but that's the gotcha. The gimme is, for the questions I do go through, I try to be really complete and give you as many relevant thoughts as I can think of. And usually a number of irrelevant thoughts as well. But Orgenu says, greetings from Italy, Dr. Jim. I wish you a wonderful weekend. Thank you, my friend. I hope you have a wonderful weekend as well. Thank you so much for being here and being a part of what it is that we're doing. So Weiss in the house says, hey, Dr. Jim, I'm watching you from a conference in Denver. That's commitment. Yeah, one eye on the conference and one eye on Dr. Jim. That's how you got to do it. Like, that's 100% how you got to do it. I appreciate you, Weiss. Thank you so much for tuning in while you should be watching other things. That is 100% commitment, and you are you're an inspiration. You're an inspiration to us all. And so Brad Glazier says, greetings, Professor. What's going on there, Brad Glazier? I appreciate you very much. Sam L's in the house. Dr. Jim is in the house. Did you call China to cut a deal? Man, I don't know. Somebody did something. Because the Chinese are saying nobody from the administration even texted. Yes, I've heard about all that. And then Sam L says, Google got you. It did. I guess the boomers are still out here Googling how to use Google. Yes, they are. And the joke's on me, because they're also the ones that are now collecting these dividend payments. Right? I mean, that's how the boomers made their money, man. It's all been dividends. It's been dividends from day one, right? And so now that Google is basically Procter & Gamble, like, the boomers, once again, are going to have the last laugh. Like, we can all, poke some fun and throw some jabs and whatever, but we all know at the end of the day, the boomers have the last laugh. Daniel Perkins says, ready for the weekend, being a part of what it is I'm trying to do. Man, that's, yes. I can't help you on that, because I've been searching for what it is that we've been trying to do on this very show now for almost 10 years, and we just have not been able to quite nail it down. RC is in the house. RC said, Dr. Jim, do you agree that volatility is too low right now? That there's great uncertainty lurking below the hood? I don't know. I mean, the VIX is, what is the VIX at? 26, 27? Yeah, the VIX at 25. I mean, historically speaking, that's pretty high. Like, I know that it doesn't feel high. I know that relative to where we've been the last few weeks, like, if I just bring up a chart here of the VIX, I mean, it's like, yeah, you're looking at the VIX at 25. Again, why put pants on, right? Why even start your day? Like, we had, look at that. That's like a 5-day stretch of the VIX over 45, between 45 and 60 for like a week straight, right? Or like 7 trading days or whatever it ended up being. Like, that's really significant. I mean, the volatility was crazy. NASDAQ was moving 15, 18 points a tick, right? ES was moving 5 points a tick. That's crazy stuff, man. And so now it's like, I mean, I'm looking over and I'm like, man, this is like, man, seriously, like, put me to sleep. Like, this is brutal. But still, I mean, guys, when the VIX is 15, which we all know it's going back there at some point. When the VIX is 15, we're going to be crying for VIX at 25. We're going to be crying for the VIX north of 20. And so let's not necessarily wish this away, even though it does feel kind of slow. Now, to your question, does this mean that, volatility is lurking under the hood? I don't know. I don't think anyone else does either. It kind of feels like, or at least, the powers that be, again, the Sosnovs, Batistas, Sheridans, etc., they're trying to lead us to believe that lots of progress has been made in the macro environment, on the tariff front, on the whatever. Has that actually happened? Is that actually the case? I'm not sure. I'm not smart enough to figure that out. So that's why we have, the Ilya Spivaks, the Chris Vecchios, the Dylan Radigans to help us all out on that regard. I would say, if you had to ask me, ES right now is 55.50. So if you had to ask me, what are we going to hit first, 5,800 or 5,300? I would say basically 90-10, it's 5,300. Like, I do not think we're out of the woods yet. I don't know if we're necessarily going to put in a new low. I don't know if we're necessarily going to be, down here anytime soon. I do think we'll put in a new low at some point in 2025, but I don't know that it'll happen like before June. I don't know that it will happen before June OPEX, but I'd be very surprised if that was it. Like, if it's over and we're just back to, all-time highs and, all the crypto bros and bro sets, buying houses and renting houses and doing this and doing that and Lambos and Rolexes and, morning routines and Saratoga waters and all that kind of stuff. I don't know that we're necessarily, going to be, down to 37, 3,800 anytime soon, but I don't think we're going to be, 6,500 anytime soon either. And so Frank's in the house says, hey, Dr. Jim, is rolling now that volatility is lower not as good than waiting a little longer than 21 days to go? Yeah. So again, I mean, yes, right now, rolling is like putting on a new trade. It's always going to be more advantageous when volatility is higher. Like, it's always going to be more beneficial when, volatility is on the higher end. But again, you have to kind of zoom out a little bit. I understand that within the framework of the last 3.5 weeks, again, why do I have pants on? I got it. But you have to zoom out and say, man, if I think about this, 3, 6, 12 months, it's like, okay, this makes a little bit more sense, right? The VIX at 25, 26, 27, that's a great time to roll. Again, it's not quite as good as, VIX at 45, VIX at 42, but I wouldn't really overthink it, Frank. I would, if it's time to roll because a strike's been tested, because the way that you're applying the mechanics, then I would roll. If it's time to roll because you're at 21 days to go, which we are now in the May cycle, then it's time to roll. Now, again, just speaking to you as a friend, just speaking to you off the record, like nobody needs to know this. Certainly Tom doesn't need to know this. Is there a big difference between 21 and 18? No, not at all. Don't ever let anyone tell you differently. Don't let them tear us apart, Frank. 21 and 18, not a big difference. 21 and 17, not a big difference. So if you wanted to wait and take on the weekend risk for whatever reason you want to take it on, like I can appreciate that. Like it's not really going to be that big of a difference. But just to kind of streamline things and keep things kind of consistent, I think staying at 21 makes a lot of sense. And so let's see. Theta Trader says, Dr. Jim, the tweets are twittering. It must be spring. Looking at some neutral bearish IWM trades. Haven't settled on one yet. Maybe a spiteful iron condor. Ooh, I'm going to pass because I've only got 30 seconds to go, Theta, and I can't possibly cook that one up in 30 seconds. But go for it, man. You know that I love iron condors, and I know that you know that because you've seen the show for a very long time. And so that is obviously my number one strategy. So I would certainly go for that. And so Kyle Hamill says, excuses. Richard Todd's in the house, says, what's up, Dr. Jim? What's up there, Richard Todd? I appreciate you. Let's see, Dr. Jim. Oh, the no username, the blank username, man. That's a power move right there. This is literally a blank character. Empty set. Empty set says, Dr. Jim, we should have just done a 1 standard deviation butterfly in Google. Yeah, to the up. Well, no, that wouldn't have worked either because Google basically ended up being like a non-event. I mean, Google, the expected move was like $8 or $9. And so I think you mean a 1 standard deviation strangle. If we would have sold the strangle, like, yeah, all the premium sellers got paid in Google. If you tried to pick direction, you probably lost money on both sides just because it didn't have much of a move either way. Now, if you had an at the money call vertical, you probably, were able to, skate out of there with a little bit of a profit, but probably not a pretty significant one, if that makes any sense. But man, we are now done. We are done with the show. I cannot believe that. Man, look, I missed so many of you guys. Man, I feel really bad. I do, like for real. Come back on Monday, man. I will try to get to more of you guys. I may even start it up a little earlier than I normally do, just to give myself a bit more time and a bit more freedom to get to more of you guys on Monday's show. But I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler, and that's right, I got a new guest on the show today, Gus Downing. Man, glad to have you here, bro. What's going on?
Oh man, it's going good. Very happy to be here. It's an exciting proposition. I always jump at any opportunity I can to get on during market hours. So happy to be here.
Absolutely, man. And I look, first of all, I'm glad that my show is the time it is. I love being on during market hours. I much prefer it, honestly. I think it's much more interesting. But that's just my take. I'm glad to hear you have the same kind of deal.
Oh, certainly. Yeah, it's nice to have some activity and actually be able to act on ideas. When I do the 4:30 show, it's we're always presenting good ideas and I feel providing good insights, but it's not it's nothing actionable when it's 4:30 p.m. So yeah, it's always fun to get out here and be on during market hours. I'm a fan.
True that, man. True that. Now, I mean, I know I met you a while ago, but let's recap, man, and then introduce you to the engineering trade audience. When did you? Where are you from originally?
Well, I'm all over the place. I was born in Nashville, but I grew up in Cincinnati, Ohio. I lived there until I was 13, 14. And then I moved to Houston, Texas. I just graduated from Texas A&M University, but I was there for about a decade as well. So split upbringing between Cincinnati and Houston, and then College Station most recently before the move to Chicago. So yeah, I got sports allegiances all over the place. It's Bengals and Reds, but then it's Rockets. It's a lot of different things going on here.
So you said Bengals and Reds. So you're Bengals, like that's it. Like no Houston. Okay, but
Houston. I'll kind of like the Reds are always bad, so I'll sort of proxy root for the Astros a little bit just to have a rooting interest in the playoffs every year. That's the way it usually seems to go. But yeah, strictly Bengals. Never really had much interest in the Texans, and then I picked up the Rockets when I moved to Houston, just because I never had an NBA team in Cincinnati. I'm born and bred to hate Cleveland, so I couldn't just roll with the Cavs. So as soon as an NBA team presented itself, I was happy to jump at that opportunity.
Now, this Rockets, is this the Harden Rockets that you kind of fell in love with, or who is this? What Rockets is this? Who's?
Yeah, this is just after Yao left. Harden, Howard, Rockets, right around that time. The Brandon Roy buzzer beater in the playoffs was my first season as a Rockets fan, so that was a fun one.
Wait, he had a buzzer beater for you guys?
No, he against us. He was on the Blazers.
Right? He with the Blazers, right? Yeah, Brandon Roy. Yeah, no, he was, dude. That's a name, and that's why I'm like, yeah, because I remember him with the Blazers, and I don't remember that, but obviously I didn't feel that buzzer beater. You felt it more than I did, but I didn't even remember that. Okay, cool. All right.
Yeah, Brandon Roy was nice before that knee, man. Yeah, it's the story of a lot of guys in the NBA, unfortunately, but he was nice.
I know. They talk about him a lot. Well, it's funny, just as a quick aside, I was listening to something the other day. Actually, it was about Penny Hardaway and just how now, like going forward, like how different it is now. I mean, once upon a time, you just played through that injury, right? Like there wasn't this, let me just get fully healthy and then come back, which it makes so much sense now. But back then, it was like if you weren't playing and you weren't trying to play through that injury, then you're a joke. And it's so interesting to watch how that's changed now.
It has certainly been an evolution, and now, yeah, I mean, you got guys who are frustrated with the Kawhis and Paul Georges of the world who, have to take a considerable number of games out each season with these lingering injuries, but you don't want those guys to push it because, yeah, all of a sudden you're pushing it, and then your career is over, and you're out the league at 32. The reason they're around so long is because we have all of this information, and we actually, are careful about these things. Now it's not just man up and play on that partially torn ACL. We gotta actually take it easy. So it is a whole different world.
It does make it difficult to play of all sports. Fantasy sports, fantasy basketball. Just, I'm not going to lie, like it's annoying to me. That's the one that's really hard because they will stop a guy from playing for the last 2 months of the season, right? If the record isn't right. And that's like, oh God, like that's the money time when it comes to fantasy basketball. So I think I'm done. I think I'm not playing it ever again. It's a wrap.
I agree, and I will say the load management phenomenon does frustrate me. If you're healthy and you're a star player, I do think you're expected to play. I wouldn't provide justifications for that, and that's becoming entirely too prominent. And also the fans. I mean, you kind of you play for the fans. They are paying your salary, and so it's like I always think about one kid who just gets their one chance to finally go see Joel Embiid play, and then he's sitting out that day for load management. It doesn't sit right with me.
Not at all. Totally agree. And so wait, now you went to Texas A&M for college, right?
I did, yes, sir.
Yeah, and I think that's when I first met you. When was that? Was that like 3 years ago? Was it 3 years ago when you first kind of interning, right?
2021, I believe. Summer 21 was the first time I interned.
Oh, time goes by fast because that's exactly that was when I had just started at Tasty that year in February of that year, and then you guys came that summer, and you were what was your first initial interaction with Tasty?
Well, that's kind of a funny story, actually. I was a Tasty user before anything else. I really enjoyed the brokerage platform, and when I decided that options was something that I wanted to pick up, it became the clear choice to me. And I had a TikTok on my personal TikTok page, which performed very well, and Tom's son happened to see it, and in that TikTok, I gave Tasty some very solid free promo, and it did well. So Tom actually called me while I was cliff jumping during COVID. It was my senior year of high school, COVID, and we were all just saying, "Ooh, long spring break," and so we had gone up to Austin and we were cliff jumping.
Yeah, pause. Go ahead. I want to know before you finish the trading story. Cliff jumping, you had me. Where was this that you were cliff jumping?
Yeah. Austin, Texas, Lake Travis, Zilker Park is like a big park in Austin, but just slightly off the beaten path. They used to have a good cliff jumping scene. Unfortunately, that lake has been plagued with some drought. You can't jump off the same cliffs we were once jumping off of anymore. But yeah, they had like a 60-foot, a 40-foot, and then some 20s and 10s. It was really variable, and it was a great mix of people. You'd have people who bring the whole families, and the kids are jumping off the small cliffs. Then there's a bunch of drunk college kids jumping off the taller ones. It was a fun mix. I've always been a thrill seeker. That's something that me and Vanetta get along on very well. Skydiving, cliff jumping, you name it. I'm an adrenaline junkie.
Okay, all right, good to know. So yeah, you team up with Tasty, and had you traded options prior to this or no?
Yes. Okay. Not with a great deal of depth. My first internship with Tasty, I was just about 15 months into options trading, something like that. So I was still very much a newbie, and it's been an amazing learning experience getting to spend all of this time around everybody over the years and making trips back up to Chicago while I was interning and all that good stuff. Everybody at home gets a ton of value from these shows, and I think you can only imagine how much better it is actually being around all these people in person and absorbing all these things every single day.
So wait, back this up for a second. You traded up, so you'd been trading for 15 months kind of on your own. How'd that even start? I mean, because look, I started in finance just from, it was on a whim. Like I started getting interested in trading. I was in graduate school. I'm doing engineering, something completely different. Thus the name of the show, Engineering the Trade, little play on that. But I started and it was just stocks. Like I was actually scared to death to even go into options. As a matter of fact, when I opened up a brokerage account, because a friend of mine who was also in engineering school, he had opened one up. I kind of did it on the heels of him. And I remember filling out the stuff and clicking the buttons or whatever. And I'm like, what is this options part? He's like, oh, no, we're not going to do that. Like, we're not. So that's my first introduction to options. But you started doing it on your own. How'd that come about?
Yeah. Well, first, I would say I commend you for getting all the way through graduate level engineering. I was in engineering my freshman year and quickly made the transition to econ. I ran from the grind on that one. But beyond that, I don't know. I've always kind of, I guess, had an entrepreneurial mindset, even when I was very young, selling silly bands on the playground and whatnot. And in high school, I got big into reselling sneakers and like other high fashion apparel. So I had, the whole thing. I was the guy everybody hates. I had the bots. I was buying 10 pairs of shoes the second that they released and all that good stuff. And
what, like using like what the Nike app or whatever? What was that app? Sneakers? One of those?
Sneakers, Nike sneakers. Which actually, Nike sneakers. Shout out to them. That's one of the only ones that was very, very difficult to bot. There was lots of sites that were very easy, but Nike did a good job with that one. You actually did just have to.
Wait, did you ever see that article though? There's this article about this one dude who did it. And he had a warehouse, and his mom, like he had like a little like a storage unit. His mom had no idea. It was this huge. You ever see that or no?
I haven't seen that. No, that's interesting.
Yeah, I might have to find that and send it to you.
Yeah, I'll have to look into that. If somebody cracked sneakers, I would be all ears.
Well, no, it turned out he cracked it, but like his mom worked for the company. That was part of the thing. It was actually kind of a little illegal.
I see. Yeah, I had a buddy in high school who was mutual friends with the shipping manager at the Port of Houston, and so when they got big shipments of sneakers in, he would get all of the ones with damaged boxes and stuff, and so this kid would all of a sudden just have 30 or 40 pairs of Yeezys or whatever, you name it. And, the corner of the box is smashed in or whatever, but obviously still a lot of value there, especially with very limited overhead into that. But yeah, so I was reselling sneakers for some time, and then through actually a sneaker reselling Discord that I was in, a different options trading server did a paid promo, which was my first, a little bit of awareness to the fact that options trading even existed. I did some research, and it seemed like a potentially lucrative opportunity, so I just dove straight in, and my first trade was like the most normie, brain-dead thing you could do. I think it was just Apple calls, naked Apple calls, but I made $300 in about an hour, and that is what I would make on a good pair of sneakers in about 2 weeks, with all the turnaround, waiting for them to come in, posting them, shipping them back out, waiting to get the money. So I was just instantly hooked. I realized that this was something that I could do in hours or days from my bedroom, when it was instead taking me weeks and lots of trips to UPS to make that same amount of money. And so then I just never looked back after that. My parents certainly had their concerns when I told them that I was opening an options account when I was 18. My mom would tell me, "Oh, you don't be doing that stock market gambling." But I eventually was able to prove some legitimacy to it, and yeah, it was a choice that altered the course of my life. Here I am today.
Yeah, man. Wow, that's crazy. I mean, so what were you, I mean, so mostly I would assume you were like buying calls, maybe buying puts, right? Probably not really selling much vol. I mean, nobody really does in the beginning. I mean, I sure as hell didn't. Even as a seasoned trader who had learned to trade at a firm, when I would trade my personal account, it was never selling call spreads. It was never selling put spreads. It certainly wasn't. I mean, Iron Condor is not something I traded at all. I think I'd kind of heard about that in theory, as far as like the theory class that I took, but I damn sure never traded them on my own. So like, what did you think when you come to Tasty? What was your first initial thoughts hearing, oh yeah, not only do we, and all the on-air personalities and Tom and the whole Tasty and a lot of the research is around selling vol. Like, what did you think when you first heard that?
Yeah, I mean, it was certainly very overwhelming. I actually remember when I was first getting started with Tasty, somebody mentioned that the follow page was, a thing that exists, and I popped over there, and yeah, I think my first thought was, what the hell is going on right now? All of these, people are selling lizards and zebras and doing all these complex things that were so far beyond my understanding. So it certainly seemed like quite the undertaking, but I'm a math guy, I'm a numbers guy, and so slowly with time and through watching the network and kind of learning how all these pieces fit together, the broader picture began to become clear, and now I very seldom will take anything naked, unless I know that I'm rolling the dice, because that is obviously a higher, more undefined risk way of trading. So yeah, but it wasn't really until, I don't know, maybe just about a year ago that I actually started dipping my toes into more complex option strategies, and some SPX condors 30 minutes before end day was kind of my first thing. Really low risk, low reward type of moves. And that allowed me to kind of get my feet wet and, like I said, understand how all the pieces fit together, how different contracts work against each other, and the whole puzzle. And it's just, I've just been growing from there. And I still learn a lot. My first day in the office here in Chicago, Nick taught me what a crab trade was. That was something that I wasn't ever familiar with before that point. So there's always more to learn in this space, and more angles that you can take. And I think that's a very fascinating part of what we do.
I've been in the game for 20 years. I still actually don't remember off the top of my head what a crab is, because honestly, it's not something that you teach in options trading theory. It's certainly not something you do on a front of trading at a big firm, right? Like, so it's totally different. And so it's like, my point is, like, don't feel weird for not knowing that. I still don't remember off the top of my head. Can I figure it out at some point and talking to somebody? Sure. But the point being that I think there's a lot of different trading strategies, retail style, that you just don't necessarily hear about if you learn about options in other places, or you learn about it from, trading at a firm like I did. That was actually kind of news to me, but it makes sense when you think about it, because like when you work at I started off in the industry working at a prop firm, and when you work at a prop firm, I mean, you're basically just doing things big and very simple strategies for the most part, right? Like you're either trying to do spreads, take advantage of volatility, or you're buying calls and selling stock against it, which puts you in a vol situation, right? You're subject to, even if that stock goes up, you might not necessarily make the money. You really need the violent move up or the violent move down, right? So it's totally different. And again, when I came here, I mean, I was like, wait, poor man's cover call, what the hell is that? Like, I'd never heard that before. I've been in options a long time. What the hell does that mean? Jade Lizard, what in the hell is that? Like, so the very different things. But these strategies make sense, especially for retail traders. So I think that's like the cool thing. I mean, I can honestly say, since I've been at Tasty, I've definitely modified a lot of things that I used to do in a lot of ways that I used to think. Because truthfully, the way that I was taught, a lot of things are really for like a larger account or a big trading account or a big volatility account, not for just single lot trading, right? Like it's totally different.
Absolutely, yeah, and I think that it's great you bring that up, and I think that's one of the main benefits that our platform offers is that you can actually choose from these strategies, and you can sit here and play around on the curve or play around in the table and see how the premium changes and how your probability of profit changes. These are things that other brokerages aren't offering. I've used other options brokerages, and you can't just pull up a little thing that says Iron Condor and hit go. You have to actually punch all of those contracts in yourself and really know what you're doing. So I think it's very catered to beginners, and I think that the power of options is just so immense, and that was something that was really hit me hard when I first started trading options, because like with a zebra, there's no other method in the world to get the same leverage as you would from owning 100 shares of stock, and you can do it with a zebra for very low premium, relative to the type of leverage that you're getting. It's obviously a higher risk way to go. There's also ways to minimize your risk, and I think it's very fascinating. And something that Tasty does so well is catering towards people with smaller accounts, which is the boat that I was in for a long time, and quite frankly, I'm still in, but even smaller when I was in high school and first getting started. And options just provide such an interesting opportunity. I had a little investment account, and I didn't really know what I was doing at all. I was out here buying Ford and whatnot. But I would buy 2 shares of Ford, and then Ford moves up 15%, and I'm up a couple dollars. It's not really that big of a move. So as soon as I figured out there was this way to create more leverage and get more out of being correct with directional moves, I was instantly hooked.
I mean, it's satisfying. Look, I'm not going to lie. And do I buy some stuff every now and again? Yeah, I do. I mean, like I don't necessarily sell everything, but I always tell people it's nice to sell some stuff against some of those things that you buy every now and again to be able to finance that, right? And so I think figuring out the right times. I mean, am I buying anything right now? No, I'm not, because first of all, it's a little crazy market, and second of all, things have been a little jacked as far as buying options. What's the point of that? And usually to offset that, I'll just be like, well, I'll probably buy a little deeper in the money or something, but you just don't know how that's going to play out, this crazy market we've been in. And speaking of crazy market, what do you think about this market recently, and what have you been doing? How have you been managing it, or et cetera?
Well, I think that it's been fun. Would kind of be the first thing that I would say. I started my first trades were made in March of 2020 during some of the most peak volatility we've seen in recent memory, and I'm kind of it's been almost nostalgic seeing this type of volatility again, and the type of opportunities that present themselves with it. In terms of my personal management, I've been really just trying to be careful more than anything, but beyond that, I don't know, being a little bit traditional. I loaded quite a number of shares while we were down at the bottom, kind of that one day that SPY dipped below 500 there. Picked up lots of shares kind of blindly, pretty much Mag 7, 3 main ETFs, a scattering of other things, applied materials among them. So those have all been appreciating for me in the background. And then, just also always staying to find risk if I'm going to try to do something directional, because, in this environment, news could break at literally any minute that completely sends the market into a tailspin or to the moon or whatever else, as we've seen in the past few weeks. Just making sure I keep defined risk, not trying to get too directional too often, and then just buying some shares at the bottom and letting those eat as we work back up, as I know we will eventually, while the time frame remains unclear. I know that getting NVIDIA at 95 is going to be a good deal at some point, so that's been part of it.
Couldn't agree more. For those who do recognize you, they probably remember you from Bad Trader. What did you take away from that experience, and what do you sort of miss the most about that?
Interesting. That's a fun question. Well, I would say, I mean, what I missed the most was the sense of community and the other hosts, and that's something that I certainly am still, I still get here at Tasty. It's been amazing, and the community is so much bigger, and it's wonderful. But we had a little tight knit community. It's fun to see the same 5 faces every day. And also, I don't know, it taught me I think it taught me the most just how to follow news, which is kind of a funny thing to say. Obviously, I've always kept up with news and what's going on in the market. But in terms of sourcing those breaking stories and then trying to, game out the effect that might have on the overall market and explaining that to an audience, that was a process that I had never really had to work through before. It was always kind of, it was all internalized. And I feel that having to understand something well enough to explain it to other people is a really valuable skill that I didn't think I would glean from that experience, but it was certainly something that I came away with. So yeah, staying on top of those things better, and it kind of gave me a little bit of a sixth sense for how different types of news stories may affect the market as a whole, how the ripple effects may work when something good or bad happens for one company in the Mag 7, those sort of stories.
No, it's a good point, man. I mean, that's probably the part that initially everybody's a little sort of apprehensive to do, is express your opinions and ideas and things that you see in the market, because you figure, like, on the one hand, you probably figure like, oh, everybody probably already knows this, but there's a lot of people who don't, right? And I think we have this unique thing of we look at the market so deep and on a day-to-day basis that we're sort of starting to compile and see things. Again, you started out in engineering, so you have somewhat of an engineering type of mind and sort of analyzing, right? The way you analyze things and look at it and attack it is and even in economics, like, it's totally different than the way a lot of other people see things. And so seeing the market day in and day out, being able to sort of compartmentalize those things that you see and sort of express those ideas, I think is like a huge skill that a lot of our listeners appreciate, which is dope. I mean, I love it, man. Like, talking to the people day in and day out. And again, I mean, it's even more so in a market like this, when you see all of these different things happening. Obviously, there's a lot of headlines. What do you hold on to? You really got to hold on to mechanics. You really got to hold on to, things like IVRs and watching, these moves and watching VIX and watching all this other stuff and these relationships, dollar, treasuries. Until a couple of days ago, it was like a lot of sell America, selling stocks, selling treasuries, selling dollar. Now that's sort of reversing, although it was a little weird yesterday, to see the dollar down, even though stocks and treasuries up. But, it's a process, right? Like, it's just like, we don't know the time frame of when markets are going to be back near highs or above highs. We don't know when these things are going to sort of correct and fix themselves. So it's just really kind of interesting watching it all, man. It's been a crazy couple of weeks, but to be able to trade during these big downtrends, like, one of the best things I did last Thursday, which obviously, we didn't have a Friday, I closed a bunch of stuff heading into the weekend, and I was able to redeploy capital this week, which ended up being great. Whether I do that today, I'm not sure yet. I haven't decided. But, I mean, it's something to think about when you have these wild weeks that we've had.
Yeah, absolutely. And it's also, it's helped me gain context because, we fly very close to the sun. We're constantly in tune with all of these news and constantly all of these bits of news and constantly thinking about how these things may affect the market. And so I always also try to, step back and contextualize, will this actually move the market? Does anybody outside of people who work in finance even care about this information? Are retail traders going to act on this news? What does it all mean? And so, yeah, I think that was a lesson that I took from Bad Trader as well, is that even though you're keeping up with the news 24/7, you have to be wary that not every news story, and especially, oh my goodness, not every earnings call is going to make a stock do what you think it's going to do.
Absolutely, 100%, man. With these couple of minutes left here, I got two, one question, one discussion point. One, who is Texas A&M? Well, actually, two with Texas A&M. Are you sad that you guys are not in the Big 12 anymore? Or are you cool being in the SEC?
Oh, Texas moved to the SEC from the Big 12. We don't like those guys. That's TU. No.
Oh yeah, you guys are not. Wait, A&M is not SEC. I guess you're right. Wait, what are you guys in?
A&M is SEC. They've just been SEC. Yeah. I think we hopped over in like 2012 or 2013, something like that.
Yeah, it was a while ago. Never mind.
But yeah, Texas, the Longhorns, they're the ones that just.
So
just
you
made
never
the recent
experienced
move.
Big 12 Texas A&M.
I did not. I grew up an Ohio State fan. Both my parents are Ohio State alumni, so that's where
I liked you. I did. No, it's cool. I actually used to really be upset about anything Ohio State because, well, they stole a national championship from Miami in 2003. I'm sure you're aware of this. You probably maybe know about this. I don't even know. You're probably not even old enough to remember
Maurice Claret, my dad's goat.
Bullshit, man. I don't even want to talk about it. I grew up in Miami, so kind of like you, I moved around a good bit. I grew up in Miami originally. The Canes are still my squad. But the other thing I wanted to ask you, Texas A&M, who's your favorite Texas A&M football guy?
Currently or all time?
All time.
Well, man, I mean, I don't know. Johnny Football is the cop-out answer. He's obviously beloved, but I'm not really. I can't say that I'm a major proponent of his antics. I can't say he really did a great job of putting on for our university on the world stage. So I think I have to say Myles Garrett. I like Myles Garrett's grind. I like that this entire time up until this past offseason, he's been on the Browns just suffering and his just shut up and put in his work and done really great things. And I think that he'll be a Hall of Fame player. So yeah, I would say Myles Garrett, and I was really, really excited to see my Bengals scoop up Shamar Stewart in the draft last night as well. That was awesome.
They did, yeah, they did. And who knows, Myles Garrett could end up having Shador as his quarterback today. We'll see how that plays out.
We will see how that plays out. Interesting. I've been interested keeping up with that one too. Yeah.
Also too, man. Hey, thanks for you and Vanetta for putting together those AI figures. That was dope, man. I know a lot of people have been messing about it. First of all, Tony's is spot on. I think it's hilarious. I know he gave you a lot of shit yesterday, but I think it's hilarious. It's super funny. The only question
it was well received by everybody but Tony.
The only question I have for you is how much do you weigh? I know this is a weird question, but how much do you weigh?
190 is the answer.
Okay, I'm 220, dude. How are your arms bigger than mine? Seriously, like, what are we talking about here? You're talking
the action figure arms? Look, I got
your arms are way bigger than mine on that action figure.
I said it on Twitter. I got receipts. I gave mine the same prompt as everybody else. For some reason, ChatGPT spit me out super jacked. I did not prompted to do that. I offered to fix it. I was told not to, so I did my part. We can get a Jack Jamal going for you.
It's great, man. Dude, thanks for coming on the show, man, and looking forward to having you on the Friday rotation. Really love talking to you. We're gonna have a lot of fun, man.
Absolutely, it's been a ton of fun. Thank you so much for having me.
All right, take it easy, folks. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. We'll see you.
Best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hey everybody, happy Friday. Well, we're ending up a weird, wild week. really a mixed bag today. We've got an ES and an NQ that are up, RTY that's down. Most of my shorts are lower today, so I've managed to eke out a profit for the day, even with this big bounce we're seeing. And we've pretty much come full circle. We are higher today than we've been since Liberation Day. We have just about perfectly sealed the price gap. And today, just over the past 90 minutes or so, has been just some wild ups and downs, because it's all just anytime somebody says anything, either positive or negative about the trade war, the market reacts violently. And it's not hard data. It's not anything signed or anything like that. It's just musings. And that's batting around trillions of dollars up and down, up mostly lately. So as we inch our way toward the final 43 minutes of the trading week, let's look at some charts together. Okay, we begin with the spider. This is a daily chart. And as I mentioned, here's the price gap, 554.81. That gap is defined as the low of Liberation Day, April 2nd. And this is the closest we've ever come to sealing it. As you can see, there's a very little sunshine between that price level and the high of today. I'm just curious. I didn't look earlier. I was just curious, like, what does the weekly look like? Yeah, well, you can kind of see the in the 4 weeks that have transpired, we had our massive down week. We had our massive recovery week, a partial reversal, and then just flipping the other way. So red, green, red, green. If you're feeling a little exhausted, that's kind of why. It's just flipping by the week, by the day, by the minute. But there we have it. We've just about undone the droop following the big poster board announcement. The diamonds are, just like everything else, up, not just a little bit. It's not as squeaky clean a pattern on this one, but 404.09 is a resistance on that. And should that be beaten, the next important level is way up here at this price gap. The small caps are one of the few signs of red on the screen, and that's something I'm sure with IWM, the small caps have been very weak relative to everything else for the entire year. And I'm sticking with it so long as it does not cross 196.54, this price gap. So, after the funny thing is that the right way to do this is to short everything now, but for me, and this is just an opinion, of course, but frankly, I'm lighter than I've been in a while. I'm kind of doing this the wrong way, because the past, especially this week, has been pretty brutal on the upside. So I'm not really feeling it to get really bold and aggressive, especially over the weekend. Who knows what's going to be said? But from a charting perspective, in all seriousness, this is kind of the better time to be getting short, as opposed to, obviously when we were plunging back on the 8th and so forth. But yeah, it's just, if you're feeling skittish, you're not alone, because every time there's a spike up or down, it's like, well, now what happened? Who said what? The cubes are on the stronger side. Anything tech related has been especially strong. We had our Alphabet earnings yesterday after the close. That was received warmly. And as we zoom in here, there's really not a meaningful resistance line on the cubes until this level. I've been, in all my position, I don't think I have anything tech related. I've been staying, just kind of glancing at them now. I've got like 20 different positions. I don't think anything has anything to do with tech. I'm just, no thanks. A lot of strength there, a lot of big bouncing going on. And we can see that reflected, the NQ now is up about 180 points on the day. And I think I read that, I think it was Monday, Tuesday, Wednesday was the biggest consistent pop in the NASDAQ in like a quarter century. Just a very robust, persistent lift. Something like that. I may have the days wrong. Within that, we have XLC, which is, I think the biggest component of this is Meta. But this also shows, on the one hand, how things have bounced so strongly, but on the other, how it's really getting close to an exhaustion point, because with XLC, the gap is this dashed line here, like so. 95.5. And we're only about $1 away from that right now. So we bottomed out here on XLC down at 84. And we've gone zipping higher, about 13%. But that gap is an important level of resistance. Another slice of this, especially strong today, is semiconductors, SMH. The world of semiconductors has had a particularly hardy bounce since we bottomed out here on the 7th. I shouldn't even have to look. The 7th was the bottom just about across the board, because that was right on the heels of the weekend that the China-U.S. trade wars were at their hottest. But here again, we've got a resistance level at 216.61, which isn't that far away. At this point, given all the carve-outs and concessions and exemptions and delays, I think the only news left that would cause kind of a final burst would be for China to surrender, for China to blink, and to say, we're ready to talk, and here's what we're willing to offer. I don't, Bessent himself even admitted it could take a couple of years to really hammer out a comprehensive deal. This isn't something that you just do a half-page memo over the weekend and you're done. It's very complicated. But that's kind of the last shoe to drop, if there is going to be a shoe to drop. And, on the other hand, the other extreme would be for things to heat up again, for more nasty things to be said back and forth, and for them to just turn their backs on each other. But unfortunately, we're all just kind of at the mercy of what's next, politically speaking, between these two parties that aren't feeling real warm toward one another. As an illustration of how strong tech has been, this is the ratio chart of the INDEX versus the RUT. That is the NASDAQ 100 divided by the Russell 2000 small caps. And it's near lifetime highs here. This has been beating the small caps for approaching 20 years now. And the ratio between those two has really never been higher. Overseas, EFA continues to be strong. We are right at that trend line now, as you can see, and still sticking with this one. This little gap has been closed. Getting a little impatient with this. This has been an incredibly fast rise, and this is very stretched. The easy part of the bounce is long since done. But we'll see if this works out or not. My kind of final line in the sand is this dashed red line right here, this peak, like so. It should have crossed above that. It's far enough above the trend line. It's not worth just crossing your fingers anymore. It's just like, okay, forget it. But that's EFA. EEM, the emerging markets, this is actually down a little bit, has not sealed its gap, 43.70. And specifically on China, down almost 0.5% here too. We've not sealed the gap. 34.92 remains unclosed. So all in all, non-U.S. markets have had a mighty bounce. It really looks close to done unless there's some absolutely metamorphosis that transpires between the U.S. and China. What else is cooking? Oh yeah, I mentioned Alphabet, better known as Google. They had the report. On the one hand, it's up. Oh, it is up. We're at 1.77% gain. There's no denying it that the color is green. However, it's a big red candle day because it essentially opened strong and is trading weak right now. Plus, even with a great earnings report and a great reaction, it's still down 20% from where it peaked only a couple of months ago. Also, it was aided by, and I didn't realize this till today, I just read that Google had invested in SpaceX. So a little Elon Google connection there. And they had, I think, $8 billion profits slapped onto their quarterly report based just on that one investment alone. So that made a positive difference, but it's kind of a one and done kind of thing. Pepsi, down again, not as massively as yesterday, but it's still going the right direction. We're down 1.25% on Pep. And unrelatedly, well, kind of relatedly, we just mentioned Elon. Here's Tesla. Good, strong day. For Tesla, there's the robotaxi, the Austin rollout, I think in June. It's getting a lot of coverage. Evidently, federal rules have been relaxed to allow for that to happen sooner. And kind of they're pushing all their chips forward, banking on the robotaxi at Tesla. Gold is resuming its slippage. And so we peaked on gold earlier this week. So the tippity top on this, almost at 3,500. So 30.45 back on the 22nd. We fell hard, recovered some yesterday. We're resuming the fall today. Silver is also down. And this has been, from a charting perspective, very, very clean, because this was the last gap to be filled, 30.64. We got to 30.62 2 days ago, 30.59 yesterday, 30.57 today. That gap, we can absolutely consider that sealed, and we're falling away from that finally. Miners also down over 2%. My only trade in this whole thing was yesterday. I shorted Newmont Inium, and so that worked out. Still hanging on to that. XOP, the oil and gas exploration, this is up a little, and I have resumed my fondness for energy shorts. I confess this gap makes me too nervous, so I covered XOP earlier today at a small loss, but I am hanging on to my other energy plays like FANG and CNQ. I'm out of this one, but it's still a nice chart, provided it doesn't get above 115.05 on XOP. Obliquely related to that, and down today, is the home builders, XHB, and I've maintained my short on this one as well. This is a large, well-formed pattern. Clean stop right here, down at 95.91. This pattern spans back a good 14 months. So I like the looks of that. And it's doing so even with rates going down today and this week. So on the whole, that continues to be a very nice looking position. And one other one, XLB, which I'm also short, is down almost 1%. And this is our diamond pattern, our diamond reversal pattern. Hopefully this peaked up at 83.47. We're reversing away from that today. But as I said earlier, I've really lightened up. I maxed out at like 39 positions or something. I'm down to half that, about 18 right now, and not using margin anymore. I'm down to about 90%. So we'll see better this weekend, a little lighter across the board. But as I said, even though the ES and the Q are up big, almost all the shorts are doing well. They're almost all down. Just to wrap things up with some cool ratio charts here, some general important points to be made. Here's our old friend, the All World Index divided by gold, our kind of general map, the long-term big picture. It's still saying the same thing, which is we've completed the pattern, which is calling for lower equities, higher gold. And we've had a nice bounce this week. Not nice to some people, but we've had a hearty bounce this week. But what's it doing? What's it accomplished? All it's accomplishing is to get back to the bottom of that pattern. The pattern is complete. And so I'm looking for it to eventually roll back over and push away and down from that pattern as it calls for and as it's done in the past. Different one, spider divided by TLTs, equities divided by bonds. Beautiful failed wedge on this one. And this speaks to lower equities, higher bonds, or both. And then finally, very simple, not a ratio chart at all, but our old friend, our Fibonacci ranges here on the ES. You can see these bands, these colored bands, defining extremes of support and resistance. And as it is now, we have exploded from perfect support here, down on April 7th, ripping higher, almost got to this level. Down we go, get support at the next higher level. You see how the bands go. And then finally, whoosh, this week. How about that? We are right at the tippity top of that pink zone right there. What I'm trying to say is this better be it. This is about as high as it should go. Barring crazy news this weekend and Monday. So I'll see you Monday. We'll see how it all turned out. Have a good weekend, and thanks for joining me. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you missed the live show, here's our cherry on top weekly recap.
Vanetta, welcome home.
I have been trying to wear this outfit for the last 6 days. I thought I had the next 4 years off, honey. I was looking at property in Boca.
You still get Easter bats? I'm not getting one because we get one for Nick and Gina and Sasha. They're all in their 30s now, and Chandler's 30. I mean, I'm not getting them anymore.
But no, if you have older kids, it's nice to know that you're thinking of, like, Nikki would love a DraftKings gift card.
But you get him a basket with the stuff hanging out in chocolate.
DraftKings gift card for Nikki would be a waste of money.
No, a DraftKings gift card for Nikki. That's a good basket. And some Zins. You put some Zins in there and some Prime energy drinks, a DraftKings gift
I got some
card.
one of those in the
Yeah.
Do we record the breaks? Because that would be good. We could do like words of wisdom. We could do like a words of wisdom
there
bomb.
would be nothing good about recording those chats.
Occasionally we leave a mic open by accident.
I know that.
Yeah,
that's always fun. A hot mic. Yeah.
The other thing is that I really like is every time Scott comes on, I love it because I know that everything's right with the world when he says, more importantly.
More importantly. More importantly. More importantly. More importantly. More importantly. More importantly. More importantly. More importantly. I gotta ask a question. More importantly. More importantly.
That's his favorite catchphrase. And honestly, it's got to be a Tasty Trade t-shirt. More importantly,
I agree with you. More importantly, it's going to have to be a t-shirt. We're going to get one of those made for sure.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. And what a last call it is for the week. Actually, kind of anticlimactic for the week that we've had. Even the S&Ps were, I don't know, red by about 15, 20 handles when we left. They're up green by about 28 or 29 handles. NASDAQ up 168. Russell's been weak all day. It continues to be basically unchanged, down 5, and the Dow down 50. So a little bit of a mixed bag of tricks. Volatility finally came in a little bit, Saz, down 67 cents, trading 23.75 just on its lows, but it really hasn't moved that much. You can see here starting to come in a little bit the last 3 days finally. Bonds up 20, 115, 26. Bitcoin holding steady, up about $1,500, 95.9. So enough actually is kind of one of the more stable currencies that we've been looking at. Oil up 37 cents. Gold, after being down around 60 at one point, is down 37. Silver taking a little bit of a hit here, down almost 2%, or 7 cents, 6.5 cents, just under 6.5 cents. And the euro, I think, was basically unchanged. Yes, it is, one tick away from unchanged. Sadnov, today was the day you could talk about Google, and rightfully so, because it was earnings. It's up $2.60. It was up more like $6 or $7 earlier. But today's Tesla, Sadnov, never fade a superstar. Tesla up $22.53. What say you?
I will tell you something interesting about Google, because I covered my Google position on the opening. And here's the crazy thing. I just went back and looked to see how much more money I would have made if I held it to the end of the day. And
I would have thought you would have made more, of course.
The answer is zero. Everything's the exact same price. None of these strangles moved. I mean, a few pennies, maybe one,
After
2 pennies
earnings,
either way.
yeah.
Yeah, nothing. It's kind of crazy. And I looked at Intel is, well, it's basically the same price too. It hasn't moved all day. For two earnings plays on two relatively, big stocks as far as, big names.
Sure.
Intel, Google's drifted lower all day. Intel stayed about unchanged. It hasn't even had like a 50-cent move all day. It's kind of crazy. So I thought that was interesting, just because nothing happened. That's been very. That's kind of been the status of all these earnings plays this cycle. They have so far no major outlier moves, and so far incredibly boring.
Boring in a good way, right?
Yeah. The only one that's actually had an incredible move has been Netflix, but that was the next. That wasn't that day. You had to wait a day, and then in that case, it's Netflix. If you remember, because we opened down the next morning, opened at $9.96, $9.98. Now it's $10.99. So it's rallied 100 points in the day's past earnings, which is part of the case for
Netflix. Netflix is on fire. Got to have your Netflix, everybody.
Yeah, but it's also it validates the case for closing when the IV gets slammed after earnings, because then it's just not, the risk reward's not there. Like, for example, Tesla's the same thing. Tesla doesn't move at all basically on earnings. It has a crappy little move inside the expected move. Everybody gets paid, and then 2 days later it rallies outside the expected move, way outside. Right. Post earnings. So for some crazy reason, the earnings moves have been muted, and then the rallies have come, after. In these, when there is a rally, the rallies have come after in these stocks. Even surprisingly, IBM, which was down, pretty good yesterday, $16, $17. I don't like to buy it right away, because that's the kind of thing where I think, okay, there's going to be a little more downside, but even that stock rallied, whatever.
It's up $3 today. Yep.
Yeah. If you look at the NASDAQ stocks today, and it's pretty universal. NASDAQ's up 150. It's almost a little under 1%, but most of these NASDAQ tech stocks are really strong today. You mentioned the Russell being down. It's been down all day. It hasn't had an uptick. And every commodity that I follow, gold's rallied a little bit. I'll give you that. It was down 60. Now it's down 30. So gold's rallied a little bit. But every other commodity that I follow, they haven't moved the entire day. Literally haven't moved. You mentioned crude oil and bonds and essentially currencies and Bitcoin. Everything has just kind of stayed the same. And for most stocks, even when the market sold off, this afternoon, it went from up 40 to basically unchanged for a few seconds.
Yeah.
Even when that happened,
on a little Trump tweet saying something to the effect of,
it doesn't matter what it is. But even when the market sold off, it's funny because I was watching Reddit and Tesla and Nvidia and Coinbase and all those, and nothing moved. They just didn't move. So and Apple's been pretty much unchanged all day. It's just hard to move this market today. I think it got a little Friday tired, maybe. I don't know.
Yeah, it's allowed to take a little bit of a breather. You remember Apple was down $6 or so, so it moved a little.
No. Pre-market, it was down 3. I don't think it ever was down much more than that.
You are right. 206 and change. I'm sorry.
Yeah.
Yes. Yeah. That's actually where it opened.
Yeah, it opened on the lows, and then it actually rallied, and it was up about buck something at one point. And I saw it down. Well, it's down 30 cents right now, but it's been. Listen, I don't care if you're a scalper or whatever you do, but there wasn't. You had to be a hell of a scalper today. You're not going to buy that one dip this afternoon because they look like they were going to go negative. So you're not buying that thing, and they rally right back up to up 40. So now they're mid range. So I'm not that easy from the day trader's perspective.
Agreed.
Although if the 0 days we did worked out today, and some of the other Friday trades were actually not that bad, all things considered. Pretty surprising.
Don't be surprised. Our viewers come to bat for you, Saz.
They did today. It was pretty good. Anyway, looking around to see if there's Oh boy, to see what else there is. What do we got here? Like going to weekend. All right, what do you think?
Tough call, because I told you I was pretty flat today, and I got out of my deltas 48 hours, long deltas 48 hours ago. So I was kind of expecting this volatility to come in a little bit even more than what it has so far, and it really took a long time. It was torture to hold short volatility. I don't know, Saz. It feels like the bulls still got them. I mean, it never sell a creeper is what I'm thinking.
It's funny. We had a very, the market had a strong week. There's no question about it.
Yeah.
And
I would personally, I'd like to see it pull back. I mean, and when you like to see it pull back so you can, look to nibble on something and watch volatility percolate so it can come back down again, that usually doesn't happen on your time frame.
Yeah. I thought that, the market got a little ahead of itself, and I thought it would sell off today, and it hung in there pretty good. I mean, I didn't get short, so I mean, I was kind of waiting. We're going home a little flat. I don't know if you rolled today, but if you
I rolled everything on Wednesday and Thursday just to get ahead of you because I got to push all your trades through.
Well, I rolled a bunch of stuff today. I didn't roll everything, but I rolled almost everything in the last couple of days. But you're going to see my theta is half of what it was just about a week ago.
Sure. So a large move one way or the other in the coming days will have much less of effect on you if you had stayed in the front month options as opposed to rolling to June.
Right. It reduced my risk by about 30% at least today. Mm-hmm. But our theta numbers are kind of low. Our extrinsic is the lowest it's been in a month. Our theta is the lowest it's been in a month. But what I want to bring up is that it seems like every time at 21 DT for the last 2, 3, 4 cycles, the market's had a big move the following week. And I'm like, thank God I rolled.
Right.
So I'm just trying to figure out,
which way that big move is going to be.
Yeah, where's this sucker going to come from? Where's this so-called move going to come from? I haven't figured that out yet.
I don't think anybody has. When you do, let me know.
Yeah. Looking around just at a bunch of stocks. I mean, for the most part, your whole screen is going to be pretty damn green today. Even with two of the indices down, meaning Russell and the Dow, everything seems to be up. Yeah, we have no big losers today. Nothing with commas in front of it. That's always a good thing.
You got your SoFi and your PayPal coming out with earnings next week. Your General
but not Monday morning, right?
No, on the 29th. Today's the 25th.
Yeah, PayPal. I mean, SoFi's had a huge rally, and PayPal. Mm-hmm. Oh boy. If you're going to trade PayPal, just be prepared for it gets a little wide the next day. So,
sure. Your beloved Starbucks comes next week, but then on the 30th you got Meta, Microsoft, Hood, Qualcomm. So you've got a few stocks still left for earnings here that could move the market.
Well, so far earnings have been probably one of the best. They've been non-events. They've been the best trade on the board for us the last couple of days. Mm-hmm. The earnings have been the biggest payouts. Google was huge today. So, I mean, we'll try to keep the dream alive. Meta is always the one that scares me because Meta is the one that does when you least expect it. It's Meta. The other stocks, I guess, I can live with. Let's see what else. I'm going to take a quick scan over just my entire watch list here just to see if there's anything else that jumps off the screen. Big down moves, by the way, almost nothing. I mean, Nike reversed to the downside today, but other than that, not really much at all. Wanted to see if there was anything else, but no.
I'm sure puts in Nike with the stock
so
down $1, it's unchanged. My puts.
Yeah,
so a little bit contraction there.
The stock was up pretty good this morning. I remember because I I rolled, and then it sold off this afternoon. I mean, I think the whole world is short puts in Nike. It's been an absolute pig.
It
I
has
mean,
been.
it's not right on its lows, but it's pretty damn close. I mean, I got short puts in Nike around 70, and it's, I mean, it's a perfect example. If you think it's 70, and Nike's trading 100, you think when it gets to 70, it's going to be cheap to sell puts, and now it's, it gets to 55, and then you're like, well, I don't want to sell any more.
Yes.
Because that's the kind of perfect example where you go, I would love to buy, when Nike's trading at 90, you go, I'd love to buy it at 70. And then when you get a chance to buy it at 70, you're like, I'd love to buy it at 55.
No, then you get a chance to buy it at 60.
Yeah, but then you go, I'd love to buy it at 55. And at 55, you're like, I don't want to buy this stupid stock.
Right.
Yeah, no, I've been there, done that, and just another time. We are doing a show on Sunday night. Myself, Victor Jones, Pete Molmet, and Elias Spivak. We'll be doing Sunday night at 4:55. That's our first call. When the futures open at 5 o'clock, that's why we start at 4:55, just to get a couple of minutes in to chat about where the futures might open up. And actually, we don't know, but 5 minutes before the opening, they show the imbalances, and that's kind of where you get an indication from. Yeah. So, all right, talk to me. What else you got? What are your other takeaways from either today or this week? And
all right, so I know I don't like to talk news because it really doesn't matter to me, but the whole tariff thing has been on everybody's lips. What do you think?
I'm not paying attention.
Okay, well, the news has been good. A lot of chatter about it. Market seems to be a lot stronger than you and I both feel that it really should have been. What do you think the odds are? They say tariffs have been taken care of this weekend.
I mean, it's clearly that's something that I think is on the table all the time. I mean, I don't think this weekend anything's going to happen because the whole world's at the Pope's funeral. So I don't think this weekend is a lot of tariff news or risk. I mean, it would be kind of sacrilegious to start spewing out stupid tweets if you're at the Pope's funeral like every other world leader. So I don't think that's going to happen. I hope, just for the sake of our reputation as a democracy, that Trump just goes to the Pope's funeral and says,
"Well, it has nothing to do with democracy. It would just be in poor taste." But sure,
in poor taste. I hope he just goes there and says, "You know what? He was a good man." Yeah. And I hope they leave it at that. I don't think we need to know about the evil left-wing liberals who killed the Pope. Okay, I don't think we need to know about that. But anyway, I think all the world leaders are going to be in one spot this weekend. So maybe they'll have coffee together. What's the name of that famous sandwich shop? I can't think of it offhand. Oh, damn.
Where?
In Rome. I was going to say maybe they'll break bread and go to that famous sandwich shop, which I've always wanted to go to. It's my main reason for wanting to go to Rome. Where they make the focaccia sandwiches.
Famous.
I can't think of the name. Oh my God!
You sure it's in Rome?
Yes, 100%. I just can't think of the name.
I don't know.
I'll look it up for you. I'll send it to you.
Penny salami?
No. But it's on my bucket list.
It's on your bucket list. All right.
Yeah,
all right.
It's on my bucket list. Yeah, well, Dylan told me that there's a place in Milan that's similar. So, but similar.
Al Anticio in Florence? No. Okay.
No.
All right.
No, we're not going to guess because I have to see the outside, and I'll tell you when I see it. Let's see, what else do we got going on this week? I mean, generally, I think for most traders, this was a decent week because we got vol to come in a little bit. We got the market to stabilize. Things felt like they got a little more back to normal.
Is it safe to get back in the water, Sadnov?
Ooh, no, I don't think so. I think it's safe as a trader, yes. I mean, if I was bullish, which I kind of am, I'm a buyer on a big dip again. Like if we get another test,
but that's what I mean. That that's what I said that when we first came on. That
I'm not a buyer at 4,800 though, because I don't think you're getting there. Like the question here is, I think they continue to make higher lows. I think the panic for 2025 is over, but I don't know if that means. I have no idea if that means we can't go back and test, 5,300, 5,200. I don't think you're going to see 4,800 again. I don't think
4,800 is 2 times the expected move for this 55-day cycle.
No. I'm talking about for the rest of 2025.
Ah, gotcha.
Yeah, I don't think you're going to get back down to 4,800. I don't think you're going to get under 5,000 again. But can we get two or 300 points lower in the S&Ps? Sure, we could be there in a week. And I think that. I think next time I'll be a little bit more aggressive. I nibbled it last time, but I think next time I'll be more aggressive. I think the reason what messed me up a little bit was just how fast volatility, the magnitude of the move in volatility, that scared everybody, myself included,
Sure.
And it wasn't only
so. If you don't trade sometimes scared, you don't last.
Yeah, and the other thing was the bond market move scared me too, because the bond market move was the freakiest because you had no idea what was going on there, because bonds should have been going higher and they were going lower. So that was the weirdest thing. The gold move, bond move, all those things. I think next time you're not going to see anything. I think you could easily see a down move, but you're going to see volatility not go anywhere like that. I think the bonds are pretty stable here. I just think it's going to be a different marketplace. Mm-hmm. The real question is, what's going to be the catalyst? What's going to be the catalyst now? You got like so much. You have so much not news, but there's so many like event triggers that have taken place over the last 4 weeks that I feel like the bad news,
there's
worst
nothing left. When you least expect it.
I know, but I feel like the worst of the bad news is out and the worst of the good news is out. So I feel like everything else is going to be like a major tug of war. And if they go higher, they're going to grind higher. And if they go lower, they're going to grind lower. I don't think it's going to be, I don't think you're going to see a 250 point move until we go on the road. Because once I get on an airplane, then all, then all hell breaks loose. But until that happens again, did I have them closing at their highs today? Maybe earlier we could have seen it. I don't think I saw it. I don't think I felt it this afternoon.
Yeah, they're definitely creeping to the upside. There's no doubt about it.
Yeah, I could have seen them this afternoon. I could have seen them closing on their lows. I mean, they looked that ugly for a few seconds. And now now it looks like, let's see how much time we got left. No, we got 5 minutes.
Oh, you got nothing. You got 5 minutes.
Yeah, they're going to close. They're going to close right off their highs, and yeah. So I think you said it best before. I think you just this is a market now. This is a trader's market. That's it. It's a trader's market. Like, if I was a pure passive investor, I'd be having trouble right now. Since it's a trader's market, I think it's fine.
I agree. Yeah, seems like there's opportunity bound. Volume's okay, not great. 10 million SPY options traded today. Kind of average-ish. Not crazy. Even the S&P volume, 1.17. Okay, not crazy.
Yeah, I mean, it was busy early, and then I think it just died.
Mm-hmm. I think the market just got a little exhausted here.
I think traders got a little exhausted. I think traders got a little exhausted this week. I think they churned them and burned them, and I know I did. I kind of got tired by midday today. I was like a little burnt out. I was like, okay, I have done enough good things, enough bad things. I've done enough damage. I didn't have there was no big P&L swings today. We caught Google. So I'm like, you know what? I'm in pretty good shape.
So they contracted a little bit too, which made it a little bit easier.
Yeah. I mean, in the end of the day, Intel turned out to be a complete wash and Google turned out to be a nice winner. So you can't complain.
Right.
But, other than that, I mean, today was just a grind. Every premium came in everywhere, and it was a grind.
Yeah, it definitely was a grind. Agreed.
Yeah, that's it. I mean, it's just a hell of a grind. And our mechanics really saved us today. So what I mean by that is just getting out of a lot of other stuff that moved outside the range. We're not in it, so that's good.
Give me the story on UNH. It's still down $5, hurting the Dow. I know the Dow just turned green by $5, but UNH.
I didn't watch UNH today. Was it down all day?
It opened around 423. It's 418 right now. It's got down to 412. It's kind of mid-range-ish for the day, but it's been 6-7 days since it made its big move lower without really a bounce in the market coming back itself.
Well, we traded it once this week. We took $3 out of a wide strangle in one day.
Good IV rank, still a 43 in there.
Yeah, if you go.
You got a $37 expected move for 55 days. So you're looking at $70. 2 times.
Yeah. I mean, if you're going to trade this thing small, you can go
Markets
pretty
could
wide.
Be a little wide in there too.
Markets are wide.
Mm-hmm.
I'm going to put an order in just for funsies. I don't think you get filled. Go above the market. This is the kind of stock where somebody's got to really need the other side in order for you to get filled.
Yeah.
But
look at you. Just like that, you get filled.
Well, I took $3 out of it the other day, so I'll say what the hell. But I saw the really cheapy wide strangle.
Yeah, you did the 350, 500, about 2 times the expected move, right?
350, 500, 2 times the expected move for June. We'll keep it on just a little bit. We'll see. Maybe we can squeeze another buck or so out of it. I mean, I think that's a pretty low risk, low reward.
Fair enough.
Maybe get a buck or two. And we did trade the XSP, the zeros today. And that was somebody's trade from Fast Market. And within an hour, just like according to the research, we were able to take, I think, about 35% out of the trade in less than an hour.
Very nice.
Yeah, the market didn't go anywhere.
This is true. Well, this is true. 0 days are good until they're not. that's how they
let's see. XSP. I'm just curious where this thing is now. Is it 0 or is it something?
Oh, your spread?
It's 50 cents.
Yeah.
So I bought it back like hours and hours and hours ago at 86. So I'd rather do that.
Sure. Then hold on to it for the extra 30 cents. Yeah, I agree with you.
Yep.
I agree.
So that's why you got to just take profits and move on to the next trade. There you go. And never think about it again.
There's your closing bell, my friend. And you know what that means? We're going to take a quick 90-second break and then come back later, on Sunday, right, my friend?
4:55 Sunday night for first call. Myself and Victor Jones will lead the charge, and Ilya and Pete will jump on board with us.
Awesome. We'll take a quick 90-second break and come back. We got more Tasty Live. See you Sunday. Peace.
Ciao.